Good morning. Positive gamma again today. We are a bit lower, but positive gamma. A lot of stocks are lower this morning. Looking for a bounce. Oracle's down a bit. Microsoft. The Fangs. Okay. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, June the 2nd. Getting ready for the opening bell. Hi, Nicole. All right, Oracle starting to tick up a little bit. Oracle had a big run yesterday and the day before, Friday. Thursday, Friday, into Monday. Today we're an inside day for now. Let's see what gamma looks like again. Okay, we got positive gamma. Positive gamma. 75.50 up to 76.25-ish. Okay, we got 2 minutes, less than 2 minutes to go. 1 minute, 30 seconds, actually. Marvell. Let's see what Marvell's doing this morning. Marvell. Okay, Marvell gapping up. Okay, a couple of weeks ago, we were looking at getting long Marvell. I don't know if any of you stayed long. I got stopped out, I believe, I want to say it was like a Tuesday or something like that. 2 weeks ago, when we were trying to break out of this pattern right in here. Okay, so I got stopped out somewhere right in there, I think. And we wind up breaking out, and now we're moving higher. We're gapping up. Here's our morning level right here. Okay, morning levels right there, 253.50. Got a lot of meme stocks. Okay, there goes Apple. Okay, got 20 seconds to go. 20 seconds to go. Okay, Apple on the move. Apple. Okay, Apple's up, starting to bounce. Exxon, SoFi. What's SoFi doing? Apple's up. SoFi. SoFi inside day. Yesterday was an outside day. CRM, looking for that to follow through. CRM. Okay, looking at our inside day. A lot of stocks moving lower. Marvell up and to the right. Okay, let's see if there's something we can do with Marvell. Gapping up. Marvell gapping up, fading the gap for now. Oops. Marvell. We'll see if we'll get a chance to do something with Marvell. People taking profits. Number 2 is Broadcom. Broadcom up as well. Broadcom, M-chip, microchip technology, gapping up. Texas Instruments. Okay, Duo. There goes Apple. All right, let's keep an eye on Apple. Apple's on the move. Morning, everyone. Okay, Apple. Okay, I got the 310 call on Apple. 310. Nice little charge higher right now. Apple bouncing at the 9 EMA yesterday, back above today. Futures, watching the futures. Let's see what futures look like real quick. Futures. All right, it's a little early for hedge flows, but looking good so far. Let's see what S&P so far. Okay, puts are being sold, calls are a little bit of calls being bought. We'll come back to that in a minute. Apple, continuation. Apple still going. Apple moving back up. Okay, Microsoft starting to bounce. Software was strong yesterday. A lot of those stocks giving back some this morning. Oracle, Apple, Microsoft. Microsoft starting to bounce now. Okay, let's see what up-down volume is saying. Survey says up-down volume is 1-to-1 down on the New York Stock Exchange, the SPY, the Qs, and the IWM. NASDAQ Composite, 2,700 stocks, 1-to-1 up. And the Dow Industrials, 1-to-1, 1.7 up on the Dow Industrials. Dow Industrials only 30 stocks. Okay, Apple pushing a bit higher. Apple following through, pushing higher. Okay, Netflix is down. Nvidia is trying to hold. Microsoft watching Apple at the moment. There go the futures. S&P on the move. Coming off the low. S&P off the low. SPY puts. SPY puts.
Also doing better than expected on quarterly results. Let's see how the shares are reacting. Those shares a little bit lower right now in the pre-market. They were trading higher.
Okay, so Marvell up big, HPE. HPE gapping up as well, hitting 62.38. Bollinger Bands opening up top and bottom, expanding quickly. CRML is on the move again today. CRML. All right, CRML. The metal stocks look pretty good lately. Okay, keep an eye on those. Let's see, CRML. How much CRML do I have? CRML. Probably should take some more, right? CRML. Nobody's trading CRML options. Okay, Marvell. CRML, USAR. That looks like it's going to keep going. USAR.
Talking about the lower end of the income household too, that some are really struggling, and weighing some of the different scenarios around the war and how long it goes, and so inflation being evident, but she was concerned about the lower income households that are struggling. I can't shop as much and stuff like that. They're looking for value.
Okay, CRML still going. S&P looking good. S&P inside day for now, but they are buying the low. Let's see if this holds. Hedge flows. Okay, still looking bullish. Okay, hedge flows are moving a little bit lower now. Okay, there goes CRML.
The results suggest that consumers are still spending on those life milestones, the I-dos and whatnot. But comps increased across all major categories, so it's not just about selling the diamond ring. It's both bridal and fashion jewelry. Average selling price increased 5%, so it showed that consumers are still willing to spend on the glitters here. They've had strong performance around Valentine's Day and encouraging numbers around Mother's Day as well. Gifting demand is a driver of sales here.
Okay.
The consumer story, though, they noted two different shoppers. Those who are on the higher end, we keep talking about the K-shaped economy, are willing to spend more for premium products. Those who are on the lower end of the K are looking for value there, Nicole.
All right, Bank of America, the banks, BAC, Bank of America, looking good. Okay, Bank of America, let's see, 52. Okay, Bank of America, on the move. Bank of America, looks good. Bank of America. Watch the banks. Wells Fargo, JP Morgan, Morgan Stanley, Goldman Sachs, Citigroup, PNC, etc. KBE, KRE. Are we seeing some rotation? All right, there goes Bank of America. Wells Fargo. Let's see what Wells Fargo's doing. Wells Fargo moving off the low. This looks pretty good for Wells Fargo. Let's see. I already have a position in Wells Fargo. Let me just double check on that. Wells Fargo. July. Okay, July looks good. Wells Fargo. July. Wells Fargo. Okay, I'd like to get some 80s though. Wells Fargo.
Kick off the morning with the data and the decisions moving markets. Morning trade live that breaks down the macro moves driving the price action, from Fed policy to global growth,
Wells Fargo.
and geopolitical risk.
Okay, I'm going to buy more Wells Fargo.
Always live from Wall Street to your screen. Morning trade live, where the markets meet the macro, weekdays at 10 a.m. Eastern.
All right, I bought some more Wells Fargo.
Live insights, actionable data, and market moving analysis.
But I'm buying the July 80s. July 80s of 46 Delta.
24/7 at SwapNetwork.com. Welcome back to Opening Bell on a record-setting day on Wall Street. The Dow Jones Industrial Average hit a record. That's after yesterday, where you saw the Dow, Nasdaq, and S&P at record closes. Focusing on the energy sector here, joining me right now, Rob Thummel, Senior Portfolio Manager at Jordan Capital. So glad that you're with us. We're seeing it crude around the 90s here. For example, right now it's at 92.03 the barrel, and you expect it remains in this level for the remainder of the year. Could you explain?
Yeah, Nicole, so if you look at what's happening in global inventories, obviously the Strait of Hormuz is still effectively closed. The oil's starting to move, but maybe very slowly. And so countries around the world are draining their inventories, including the U.S., and China, and India, and large consumers of oil around the world.
Okay.
So typically in the oil markets, if the global inventory...
All right, New York banks are all mixed at the moment.
Prices rise. Now,
Wells Fargo on the move.
and all of that is that the U.S. continues to produce record levels of crude oil. Probably will actually increase crude oil production in the second half.
Wells Fargo.
But all of that said,
All right, the 50-day is starting to flatten out. Looking for that to turn back up.
it's more than likely that oil prices globally and domestically will probably stay above 90 for the remainder of the year.
Understood. At this point now, when you talk about some of the records that we've been seeing, could you explain when you talk about record oil and natural gas production, and how you see that? Because you said the world needs more U.S.
Gas in the world. And
Okay, NVIDIA is up. NVIDIA is up.
energy security is important.
Okay, see if we can follow through NVIDIA. All right, so
Oil's still relevant.
we put in a pivot.
What's going on in the export market?
We put in a pivot on Wednesday. Thursday, it looked like we were going to completely reverse and move back above the 9 and 21 day. Friday had a little surprise. It pulled back down to Thursday's low into the close for the week. And then yesterday, we had a really nice move in NVIDIA. Caught a lot of shorts off guard. So that's showing up on my scanner. Okay, that just moved. Netflix. What's Netflix doing? Netflix is below. Okay, let's look at the leaderboard. NVIDIA, Meta, no.
So do you expect that
Qualcomm, Oracle,
be the leader going forward right now?
Wells Fargo, Bank of America.
Obviously, do you expect that U.S. remains in this leadership position?
Okay, again, the top of the Nasdaq 100, Marvell gapping up. Big move on Marvell's part. Big move on Marvell's part. Still going here, Marvell. Okay, let's look at Marvell earnings. MRVL. Marvell. Marvell. Okay, so Marvell earnings are good, but it's not stupendous. I mean, look at this and then look at Zscaler, right? Zscaler gap down on earnings. Zscaler gap down on earnings. Look at the difference in earnings growth, 30% versus what we see on Marvell. Okay, Marvell, 21%. It gaps up. Okay, Zscaler and security. Let's see what Zscaler is doing today. Zscaler. Okay, pulling back to the 50-day, looking for a bounce. 3 steps forward, 1 step back. Okay, Apple looks like it wants to keep going here. Wells Fargo still going. Wells Fargo looks good. Okay, got a nice little Now we have a lower high on Apple. Watch this. We need to see this break above 310. I have some 310 calls for Apple. What's Walmart doing? Walmart, we were looking for a base to form down here. Not yet. Walmart, we're looking for a base. Nothing. Okay, going through the stocks that are actually moving, though. Broadcom, Marvell. Broadcom is up there at the high. Okay, Broadcom. Okay, Broadcom is into a lot more than just what you think. All right, so Broadcom design, develops, and supplies a broad range of semiconductor enterprise software and security solutions. Broadcom, 29% on its earnings. Looks good. Broadcom. Okay, just watching these first few minutes to see if they can hold these levels. Broadcom looking good. 60-minute. Broadcom's way above the 60-minute. Recently, NVIDIA moved above the 60-minute 20 MA. Okay, so that's a long signal right there. You just want to buy dips already. We've got people buying the dip on NVIDIA. NVIDIA looks good. NVIDIA looks really good.
In a certain geographic region.
Understood. That's something very different than some of the other names that we've talked about. So thank you for explaining that. Last but not least, we're looking at Vistra, VST.
Yeah, Vistra. So the reason why we like Vistra, Tortoise, we really like these AI infrastructure.
NVIDIA, nice.
Potential electrification infrastructure is one of these examples. And Vistra fits right.
Okay, that's starting to turn and go. Let's see, NVIDIA. What do I have on NVIDIA? NVIDIA. Do we want to add to NVIDIA? Okay, it looks like it's going to go. NVIDIA is going to go. Now let's see what options are trading here. NVIDIA. 6.2% into June trading options. Front month heavy. Vol versus OI is 2 times, so that looks good. Okay.
Coming up next, we'll take a look at some of the key levels to watch on the charts. Kevin Green is standing by. Opening bell. We'll be right back.
NVIDIA. NVIDIA, I want to do something with NVIDIA here. Let's see. NVIDIA. Okay, 230s are very active. 230s. That's a 50 delta. NVIDIA.
Have you ever watched an interview and thought, I wish they had 5 more minutes? Or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Hayden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart.
Okay, NVIDIA on the move.
Driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts. Welcome back to Opening Bell. I want to take a look at some of the key levels to watch after 9 weeks of gains.
Okay, NVIDIA, you're going now. NVIDIA. Okay. NVIDIA.
Industrials and then energy kind of moving to the upside here today, and seeing consumer discretionary as well as communication services because of help with that Google pulling back to the downside here. But you're looking at
NVIDIA. All right, we're starting to stretch our legs a bit. NVIDIA.
Slightly lower right now, down about 7 points from that 7,600 level. But let's see if some buyers really try to step in, and if they are going to do so, 76.30 to the upside is a major area of resistance that I'm going to be focusing on here today. And then to the downside, 75.50. Nicole, we have a 16 VIX right now. We're applying about a 1% move to the upside or downside. But we are seeing
Okay, NVIDIA.
happening over the last couple of trading sessions.
That looks good. NVIDIA. Okay, Wells Fargo doing well. NVIDIA. Okay. Nice little run up. Looking for the next dip to buy. NVIDIA.
Even though the market's concerned about inflation, we have seen the fact that supply chains, especially when it comes to sulfuric acid, which is needed for copper mining, is in short supply at this point in time, pushing prices higher. There's some pockets within the China economy that is showing that strength.
Okay, futures pulling back a bit. Okay, watching hedge flows, S&P hedge flows. Note the dark purple on the background. That's telling you that we have dip buyers. The dealers will buy the dip. Okay, so we're looking at a lot of stocks that have dipped this morning, looking for these to get bought. Stocks like Oracle that have ripped higher over the last 3 days, looking for this inside day to resolve higher. Okay. NVIDIA at the highs, looking at 230. Pre-market, we hit 235 and change. NVIDIA pre-market 235. Currently, NVIDIA is trading 230, 230.40 and change. Okay. STM. ST Microelectronics. Okay, STM.
Dan, what are some of your thoughts this morning? I know Jolt's on your mind and the bond market.
Yeah, I got
start with the Jolt story.
Yeah, so I got Jolts on tap here for late, about 10 minutes from now. Looking for any kind of insight into some weakness in the labor market. We have the beige book for tomorrow, and that is the previous one. The market was very focused on the business activity, and going forward, we're going to be looking for insights into higher input costs.
STM looking good. NVIDIA continuation. NVIDIA. Okay, showing a lot of strength. Muscle. STM. STM looks good, David.
And that's the higher rate for corporates over treasuries is a very tight. So that's got a good news and bad news. Good news, you've got strong companies and good balance sheets. Bad news is that the corporate bonds are less attractive. But we're sitting right under 5% for the bond and right under 4.5% for the 10-year note.
Understood. So those were some good economic prints to look for as well. Thank you for the news on the corporate spreads. I think about some of the more the earnings that are due. Also, some of the stock upgrades we saw for Meta and HPE, downgrades included into it, just to name one or two, and more earnings to come. Alex, when you look at the semiconductor bounce back, and I think that yesterday how we saw a lot of that, or a lot of inflows, and NVIDIA, and even a name like today with HPE of 24%, tech still really shining.
Yeah, it is, and it's a big part of the market story, and it continues to be. You look at a name like Marvell up tremendously, just simply because the kingmaker himself, Jensen.
Okay, Path looking good. Okay, NVIDIA, Apple. Okay, NVIDIA looking good.
Today, you look at Micron. So much of the market has seemed to be, following the swings day to day. And Micron, it was down earlier. You had Nasdaq lower. It's up now. You have Nasdaq up now. Seagate, Western Digital both got price target adjustments to the upside from Citi. So you look at it, there's just a lot of optimism right now in semis, Nicole.
You know, we're also watching what the Fed may or may not do next, right? And we did talk about Beth Hammack, who she's president and CEO of the Federal Reserve Bank of Cleveland. She had some concerns about inflation and even said hikes may soon be appropriate. She also had concerns about the lower income shoppers and whether, you know, they're obviously looking for value. A tough place for the Fed members to all be and have to make decisions. Some of your thoughts on the Fed outlook?
Okay, what's Meta doing? Meta, what's a reversal? Okay, let me see what Meta's doing here. Meta. Okay, Meta with a reversal off the low. Ugly day yesterday. It looks like it's holding this range. Okay, Meta, NVIDIA. Nice follow-through day on NVIDIA. Okay, STM being pointed out by a couple of people. David talking about STM. ST Microelectronics, STM. ST Microelectronics following through. Let's see what the 60 minutes. 60 minutes trending. Big gap up today. STM. Okay, what's Dell doing? Dell, okay, inside day for now. Dell starting off the day. Apple, nice little gap up this morning. Apple looking for the follow through on this bounce. Inside day for now. Harami.
See you at 2 o'clock for the watch list. Please join me then. In the meantime, Morning Trade Live with Sam Bonas is next.
Okay, so with Apple, you can see this little pullback. Okay, this is producing what's called a harami. Okay, we'll look at the pattern site. Okay, harami. This is a bullish harami. It pulls back and then it takes off to the upside 53% of the time. We're looking for a bounce at this moving average. Okay, Apple looking for the bounce. Looks like it wants to keep going. Okay, what do I have with Apple? Do I want to add to this one? Okay, Apple. Okay, Apple was oversold at the close yesterday. A little elevated now. Let's see what Marvell looks like. Marvell. Okay, a little dip. Okay, if you don't chase these, but if we do get a little dip and then this turns back up. So if RSI gets back down here, I doubt it does, but Marvell would be a potential trade. Broadcom, LRCX, Applied Materials. All these chip stocks are up on the morning. SOXL. Big gap up and following through. SOXL. Continuation. Okay, there goes NVIDIA. NVIDIA going some more. Okay, NVIDIA going more. Okay, it's overbought now, but headed for that 235 that it hit pre-market. NVIDIA.
We have different formats because people learn differently at different times.
Somebody's a real bookworm. We've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
We've got these ongoing 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path, education. it's really unique. Not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that?
Okay, up down volume still 1-to-1. Nvidia's still going here. Nvidia. Okay, Nvidia. Okay, stocks that need to follow through, like Oracle. We're watching Oracle. Okay, what's Microsoft doing? Microsoft. Okay, gap down below the 200-day. Looking for the bounce now. Microsoft might be an opportunity for those of you who didn't get into Microsoft yesterday on the gap up. Maybe you're thinking about a buy. So what you want to do is pay attention to the 1 minute. Okay, the 1 minute's oversold. This is probably going to turn. Higher low in RSI and a lower low in price usually leads to a pop to the upside. Nothing yet. Okay, so Microsoft are probably going to give you a setup here. What's the Oracle doing? Oracle similar. Oracle got oversold at the open. Oracle on the daily, you know what it looks like. It's been running higher. Okay, let's look at IGV. Might be able to buy some IGV on the dip.
Way higher. 7,618,000. That's the best since May of 24. Let's call it 2 years. And the other part of this that's good news, the vacancy rate, which is expected to be 4.2%, jumps up to 4.6%. The last time we were higher than that at 4.7%, you guessed it, also May of 24. So this is pretty good news, especially on the week where we're going to have the employment report. The no hire, no fire might be a little bit more hiring than firing as of late. And one other notion I'd like to point out, the 210 spread now, the difference between those two yields is 41 basis points. It hasn't been that small. The curve hasn't been that flat in 14 months. Why? Well, because of the Fed on the short end keeping rates on the high side, and on the long end following oil. And remember, the day before the conflict, we settled a 10-year at 3.94%. Maybe we revisit that when the conflict's over. Seema, back to you.
Great, thank you. So the NASDAQ now trading positive territory. Well, let's turn to the two big movers in tech at this hour. HPE with a blowout quarter. Marvell jumping on comments made from NVIDIA CEO Jensen Huang. Christina Partsinevelos here to wrap it all up for us. What a day, Christina.
I know. HPE shares, I wasn't expecting, even after hours, it was like about 30%, but surging about 24% this morning after that historic quarter. And the move actually doesn't exist in isolation. So for the past 2 years, the spending cycle was dominated by hyperscalers. What this crop of earnings is showing is that enterprise demand is now becoming a meaningful contributor. Think corporate customers. And if you take a look at the numbers, so starting with HPE's server revenue beat estimates by nearly $1 billion. Dell's traditional server revenue hit $8.5 billion, up 92% year over year. Lenovo's infrastructure revenue up 37%. And even with server prices,
NVIDIA.
especially with HP, customers just aren't blinking. I spoke with CEO Antonio Neri just last night, and he said agentic AI and inferencing are driving new projects despite these higher prices. Customers are paying more and still coming back for more. Loop Capital thinks this is the front end of a 3 to 5 year growth expansion. Morgan Stanley's
Okay, looking for a bounce in the S&P.
enterprise demand can last, and whether HP is actually
Looking for a bounce in the S&P.
21% since May 22nd on par with Dell's 80% move, despite Dell's clear out performance. A lot of the upside may
All right, S&P 500 looking for a bounce. We're right at VWAP right now. Note hedge flows are starting to rise. Hedge flows starting to rise. We've got a 99 percentile at 76.20. Okay, we got a 99 percentile here. It's probably going to test that at some point. We're at the high, so I'd wait for a dip first. Kind of dipping a little bit, I guess. A little dip there, S&P. Micron. Micron, not disappointing. Gapping up again today. Micron. Here goes S&P. Looks like it wants to go. S&P. S&P 7620.
So they're tackling a slightly different ends of the market. The same thing with Lenovo, and then some can even
7620.
that app, I should say too. But overall, networking still has a lot more room to grow, and that's something that Cisco also would argue. And I know Cisco CEO is going to be on Mad Money later tonight too.
Indeed, and still remains the best Dow stock of the year. We look forward to hearing from Chuck later on tonight with Jim at Mad Money, 6 p.m. Christina, thanks.
Thank you.
David, I keep thinking about what you witnessed yesterday and all of these crunches on supply, no matter what it is, must have been very visceral in Michigan yesterday.
Yeah, I mean, I think that continues to be a key question in terms of what will be a gating factor on this build out. Power is certainly the one we come to most often. There are others as well, and I think there is a story to be done in terms of trying to understand, Seaman, you cover this stuff. Are there delays in any of these data centers? Now, yesterday at that Stargate data center in Saline Township, Michigan, no. They say they're absolutely on track to basically have it completed by the end of 2020.
Okay, so we got 7620 as 99 percentile. What's this down here? 99 percentile below at 7570. 7570 also.
Memory, turbines for transformers. I mean, you can go through the list. Capital actually seems to be fairly low amongst the things that may be in short supply right now.
But what they told you, David, does not suggest that they're able to figure out the energy equation.
All right, let's see if this markets can catch a bid. I mean, we've been up.
There were some real concerns about the financing of it, who would back it, some local and regulatory pushback they were receiving on the ground there. And now we fast forward to yesterday, they're not only meeting the timeline, but ahead of schedule. I thought that was a pretty big moment for Oracle, which, if we take a look at that stock, is now up about 30% from its 52-week low. A pretty significant change in the narrative, although, David, I would say perhaps...
Okay, ARM Holdings dip. Inside day, ARM Holdings.
The numbers back what the co-CEO told you.
Yeah, it was interesting yesterday watching the move, of course, which began before our sit down with Blake McGurk, but certainly accelerated a bit.
Inside day.
Friday, of course, after the Dell report.
Dip getting bought. All right, Micron. Gap and go. Okay. I'd expect to see a bid in Microsoft, Oracle. Okay, with what we're seeing with Marvell, M-Chip, Broadcom, Cisco. What's Cisco doing? Cisco following through? Cisco. Let's take a look at Cisco. Cisco was a friend of mine. Cisco breaking out. Cisco breakout. Okay, Cisco's on the watch list, right? Yeah, Cisco watch list.
And they sort of were. Now, if you take a look at least at the stock price and how credit default swaps about to come down a bit too. So that's just some context here as we read through this.
Yeah, we stopped putting up the Oracle 5 years.
Yeah,
Right?
sure. It was October of last year that I started putting it up. Significant decline for weeks and months, sort of as we were focused on that.
That said, I don't think any of us yesterday expected that we would hear Google say we're accessing the equity markets for $80 billion. I mean, Oracle is negative free cash flow.
Yes.
Okay, Cisco looking good. All right, let me just check my Cisco position. I might want to add to this. Let's see, Brother Bill saying he wants to add to Cisco as well. Okay, Cisco. All right. I'm okay right now.
The numbers are just, they're hard to imagine.
We'll be watching the credit ratings for all these companies, and then in a year from now, especially as these balance sheets dramatically change.
Yes. Let's get to the broader market this morning after the Dow S&P and Nasdaq.
Cisco looking good. Okay, you don't want to buy at the high of the day. You want to wait for the next oversold signal. The reason being, you've got stochastics rising. It's embedded. Stochastic is still rising despite being embedded. This is telling you that closes should, on average, be at the high of the day or in the upper half of the daily range by the close. We had this 2 weeks of consolidation before following through. Now Cisco is going to keep going. Cisco. This is week number 10. I can't believe this market is just continuation here. Let's see.
The AI discussion's kind of drowning out all of our conversations about oil and Iran and whether or not the strait reopens in June.
Cisco. Looking for a follow through. That was one we had, the 120 Iron Condors. 120 was the short strike, right? Or was the lower strike? I forget. Let me take a look at Cisco. Cisco, we got out of that one. Spreads Condors, Cisco. I didn't record it. I thought I did. All right. At any rate, Cisco was definitely a Iron Condor that we took for earnings. All right. The New York FANG components look really good. Okay, these should all bounce the way it's going. So look at stocks with the New York FANG higher and relative strength looking this good. Look at stocks like Microsoft that had pulled back. Okay, these are probably going to bounce. Okay, here goes Microsoft. I'm going to add to Microsoft here. All right, this is okay. So RSI is rising. So you see the setup that I'm taking. The 1 minute Microsoft. Let me go. Let's see what I have here. Microsoft. I did take a bunch of Microsoft off. Okay, I have August. Okay, August Microsoft. All right, let me add to August Microsoft. August Microsoft, not July. August Microsoft. Okay. Oh, those are the ones that we saw, the 500s. Remember the 500s? Okay, so let me go something closer. Let's go with the 40 delta. No, let's go 45. That's a 465, 470. Buy 465, 470. Those are 210. I'm going to buy a few of these. See if this follows through. All right, so I bought some 465, 470s for August. Okay, the reasoning behind the DTE, the August, is because the markets are due for a pullback. So I want to be able to survive some of this if it pulls back. Microsoft, though, looking good. IGV, I want to add to that too. Microsoft looks good. All right, added to, oops. Okay, added to Microsoft August calls. 465, 470.
levels continue to work higher. Consumer discretion has been in the gunsights, if you will, of where the Iran
Microsoft turning. Let's see if this continues. I mean, we could still see Microsoft give us one more dip. All right, so be aware of it if you want to wait. All right, looking for the follow through and the turn. Oracle needs to give us a direction. Okay, Oracle's still going. Oracle rising. Good for Microsoft and IGV.
which is really interesting. They're going to capture some of this AI euphoria, but on this broadening playbook, Carl, I think this is where you get more leveraged exposure to that concept. So we're kind of liking this barbell setup of large cap growth and small cap value as a way to get there. The consumer portion of this kind of sits in the middle, important to the S&P 500, but probably even more important as you go down cap and look at a lot of these smaller.
Okay, here goes Microsoft. It's probably going to turn. Okay, you got the 1 minute oversold rising. This is one of my favorite setups for a day trade. This is a day trade for now. I know it's out in August, but that it'll turn into a swing if we close at the highs. I'll take half off at 100%. That gives me a free trade once I get 100% out of this one. Okay, so that's the thinking right now. Okay, let me see what else is working here. Okay, so this is what's looking good. MongoDB, we mentioned that one yesterday. Generac is back. Okay, Generac. NVIDIA looks good. Okay, so Generac, all right? GNRC, Generac, gapping up. Okay, this is going to give you a 1 minute setup, most likely. All right, so 1 minute's going to set up. Wait for it to set up. It's got to turn before you take the trade, but this has been good with Caterpillar. Okay, the industrial started to see some rotation. Caterpillar, Cummins engines. Remember, all these data centers need these freaking large generators, many of them. So I forget what Caterpillar said. They sold something like 700 to one data center, something like that, something ridiculous. All right, so those are bouncing. Let's see what the sectors look like. Materials, XLB, bounce and fade. Communications, that would be Meta, Google, Netflix, etc. Communications. Okay, that needs to bounce. Okay, Netflix needs to bounce. Microsoft looking for the follow through. NVIDIA, Amazon, Google. All right, so I guess Warren has been buying Google. Not him personally, but his crew been buying Google. So this dip, if it gets down to the 50-day, I'll be looking to buy some more Google. Okay, there goes Tesla. Tesla. All right, so they're buying the dip on Tesla. Tesla looks pretty good. Bouncing at the 200-day. Tesla bounce. Stop below. Low of the day or 200-day. Loss of the 200-day. Tesla, good bounce. Okay. Tesla bouncing at the 200-day. If this holds good, you can see this nice return. Okay, I'm going to buy some more Tesla. Let's see. What do I have? Tesla. I have Tesla for the IPO as a surrogate. Tesla. Let me see what I have here. Tesla. Okay, I have July, and I believe I have January's too. Let me see. July and December. July and December. Okay, July. How much do I have? I had 10 of these. Okay, 10. Do I want to double up? Double up, maybe?
Filing confidentially, of course. Sometimes think if you file confidentially, then you would
440.
about it publicly, but they did put a
440.
saying they filed confidentially for an IPO. Not a big surprise, but there is a bit of a race going on, it would seem at least. SpaceX, of course, expected to price perhaps as soon as later next week, to be followed perhaps by Anthropic.
All right, I bought some more 440, 445s. That's a 43 delta for July. Remember, this is a surrogate for the SpaceX IPO.
To deliver the best technology and build the best business, but going public is a financing event. I don't think that's one that we're focused on the timing of. We'll do it when we think it makes sense.
But you will do it as well.
I assume we'll do it someday.
At some point. And when it comes to sort of that competition, I mean, again, back to sort of where we started with
440, 445.
Are you confident that all, that it's not a winner take all?
I'm confident it will not be. I think the world will demand. This is going to be such critical infrastructure.
There goes Tesla.
That the world will rightly demand robustness in the system with multiple providers. I think that's a very good thing.
And you think the computer, again, the last week I was hearing about compute, for example, companies starting to wonder, well, what are we spending it on? Our bills are going through the roof, and it's not clear to us exactly what in other words, I know a lot of my spend is going well, but I don't know which part of it.
So I think this is the most.
Okay, Google's still rising. Google, this is one Warren's been buying. Okay, so Google.
I know some great stuff is happening, but I know there's a ton of waste. And how long do I have to wait for it to really show up in revenue?
Google, add to my position.
And I assume that the industry will figure that out pretty quickly, but I think that is a fair issue. You do, yeah.
I have August calls. Google.
I would bet that by another year or two from now, there is a much better rationalization of companies' spend relative to outcomes.
So it's still a while to figure that out, another year or perhaps as much as two, as you heard from Sam Altman. Of course, back to that race, to the extent there is one, between Anthropic and OpenAI, at least when it comes to the business customers. Certainly, Mr. Altman said there's a race to serve them. But joining us to talk more about
all right, Google from oversold. Look at this. Look at this setup on Google. Oh shit. Look at this setup on Google. Looking good. Google.
It's good to have you with us this morning. I'm curious as to how you view it. Is it good to get out early, in your opinion, for Anthropic? Does it really matter whether they're first or second or third in the IPO race, so to speak?
First of all, thanks for having me. My full name is pronounced Anjane. Friends call me Anj. You should feel free to as well.
Who cares?
I think people call it a race, but it's really more of a renaissance. I have the opportunity to teach a class at Stanford called Frontier Systems, CS153. It's available online for anyone.
Okay, hammer. Okay, a hammer on Google.
The core message of the class, and one I think I've realized over the last 5 years, 6 years I've been doing this, is that there's just a whole ecosystem of new opportunities at the frontier of AI, which means you can take the recipe, right, of scaling, of taking machine learning systems and applying them to new domains. And I think this idea that it's somehow zero sum is quite is misleading. What we're seeing is, whether it's coding, whether it's cancer, diagnostics, whether it's supercomputer, there's just a whole set of, innovative new.
Okay, there goes Apple. Apple about to go. David Tepper was buying. What the hell was he buying? Tepper was buying too.
Everything that goes into actually producing that compute, certainly as we've been discussing as well. Something I brought up with Mr. Altman, I'd love to get your thoughts as well, though, is understanding within an enterprise what compute is going to a good use and perhaps what is actually being wasted, if you want to call it.
Might have been Micron. Might have been.
Yeah, that's a great point. So we look at AMP, we look at a lot at.
I think Tepper was buying. What was he buying recently? Was Tepper buying tech lately? If so, what companies? Okay. Just loaded up on these tech stocks. David Tepper. Micron. Okay. All right, there we go. Micron, Google, Cloud, Meta. All right. Appaloosa. Always like that name, Appaloosa. Like the horse. Appaloosa horse, right?
One way to solve the compute issue
where AMP is investing a ton, primarily because that's what the public wants, right? The public would like a lot of they like the benefits of this technology, but they don't necessarily want to make
Tesla. Okay, looking for that follow through. All right, CRML just came back down. CRML. Google.
like space, frankly, like the oceans. Deep water is a great place where you can put networks of floating data centers, something we're looking at quite intensely. I expect that to be these sources of sort of compute supply and places to locate this compute supply in a way that's sort of less in your face, but still providing all the great capacity we need to scale is how we're going to get to that $5 to $7 trillion of AI infrastructure spend by 2031 that everybody keeps talking about.
Although the reason that those spaces are underutilized is because there's often no oxygen or radiation, hard to get back and forth, even in the ocean. I just wonder whether or not, for example, this new Glen explosion on the Blue Origin pad is a lesson in how hard that path is going to be.
Well, one of the most exciting things about failures is that they give you the data to improve next time, and that's the core recipe of machine learning, right? When you have feedback from verifiable outcomes, you can take what was previously an intuition, measure the outcome, and then drive that back into AI. And so what we're seeing actually is advanced manufacturing teams like those working on rocket launches using AI to improve the accuracy of their next launches. Until now, it's been, as much as we like to think of them, these systems as science, they're really more art. And what machine learning allows us to do is actually bring much more accuracy and predictability because our decision making is now getting verified by quantitative feedback in a way at a speed and scale that really wasn't possible before.
Finally, just to come back to Anthropic and its potential IPO. I mean, I was at the site yesterday where 45 to 50.
There goes Google some more.
Spent to create the value you're talking about. The ultimate customer there, OpenAI, but it might also could be Anthropic and any number of other similar sites around the country. Are they going to be able to get a return on all of that? Ultimately, do they need to change their business model in some way?
Supermicro. Okay. What's Supermicro doing? Supermicro. Microsoft turning back down. So I figured it might make one more shot to the downside. SMCI. SMCI. All right. So a little dip. SMCI. Okay.
Decide to take that large of a position in the AI infrastructure build out, I think it should be a signal to those of us think we're smart enough to analyze, other strategies. When Berkshire invests, I listen. So yeah.
Well, that's an interesting point. Although I would point out Greg Abel runs Berkshire.
Tesla.
Warren Buffett's retired.
That's true, but the lineage is quite strong, and from what I hear, Mr. Buffett's teachings are still well.
Okay, Apple looks like it wants to keep going. Apple's still pushing here.
Appreciate your time today. Thank you.
When we come back this morning, some big moves in the retail space today, including Dollar General and Victoria's Secret. We'll get what's behind that action next. Robinhood entering the Canadian market, just closing a new acquisition. We'll get more on the company's AI trading tools as well when CEO Vlad Tenev joins us in just a few moments.
All right.
Semiconductor rally last night off the back of STM. We're going to be talking about that in a little bit. But how are you thinking about the European tech?
Nvidia is still pulling back a bit. Google, Apple still higher. Microsoft lower. Tesla looking for that follow through. Google looking for the follow through along with Apple. S&P, no follow through yet. S&P.
The overall economy and stock market higher. So they are lagging in that space. I think we're more focused on areas in.
Okay, you're boring. Okay, let's see. Dollar General down over 3%. Dollar General. Okay, Apple is going here. Apple starting to go. Apple breaking out. Apple breaking out. Apple breaking out.
think was not as positive as before.
Well, overall, I think it was a very positive report. I think it's tough to kind of pick holes in it, but look, I mean, in this market, it seems like a lot of investors sort of sell the stock first and ask questions later. I mean, if there's one thing that you could potentially look at, it's the fact that they didn't
Apple breaking out.
fully through to the numbers in terms of the increased earnings guidance. I know they benefit from a lower expected tax rate. But overall, I actually thought it was a really, really solid quarter.
Michael, I know on the call that the CEO did talk about their customers being financially constrained with the dollars they couldn't use, but I guess that's one of the reasons that they come to them in the first place, right? So I guess it's a little bit of a double-edged sword. How is that Dollar General consumer doing, and are they spending more of their dollars there versus other places as a result?
So the Dollar General customer.
Google.
That has been the case for a bit now. It is seeing a benefit from the trade-in consumer. In fact, it noted that some of the best performing cohorts were those customers who have household income of above $100,000 per year. So by and large, Dollar General is serving its purpose. It offers value and convenience, which...
We're about 30 minutes into the hour. Here are three big movers we're watching right now. First up is Dollar General raising its annual profit forecast. The company saying the value proposition of its goods and expansive footprint positions it well to navigate the current macroeconomic environment.
Google's still going.
Victoria's Secret moving in the opposite direction, surging EPS doubling estimates. The company also raising its outlook on better than expected sales and lower tariff costs. And we're also watching Generac, the power company, saying it has signed a...
Okay, Tesla looks like it wants to keep going. Tesla. Amazon turning the corner. Amazon, big trade on Amazon, noted by several. Amazon.
Ukrainian authorities say at least 18 people were killed and more than 100 injured. Ukrainian President Volodymyr Zelensky pleaded for more help from the U.S. after the strikes, saying more missiles are needed for its Patriot missile systems to blunt the attacks. A federal jury...
Tesla looking really good. Here's Google looking really good.
Yesterday, prosecutors accused him of using his reputation and media appearances to manipulate shares in a way that would reward his trades. Left argued that his statements were authentic and attributed his conduct to being an active trader. He said
Tesla.
He got it wrong and plans to appeal. And Golden State Warriors star Steph Curry is taking his Curry brand to Chinese apparel maker Li Ning. ESPN says the deal is for 10 years and will include basketball, athleisure, and a full golf line. Curry will also be allowed to sign athletes.
Tesla, nice little pop there on Tesla. Microsoft's still sitting there trying to figure out what it wants to do along with Oracle.
AI trading, a new acquisition, and the latest on the Trump accounts. Plus, as SpaceX gets ready to go public, concerns are growing over xAI's challenges and its cash burn. That's a story that we're working on more when we come back.
Google looking good. Okay, Tesla's still going here. Tesla's ripping. Breakout, Tesla. There goes Tesla. Go Tesla. Go Tesla. ARM Holdings turning back up. Oracle fading a bit more into yesterday's price action. Shake out a few people. Okay. Intel, hammer on Intel could see a little reversal here. We got a 3-candle reversal at the highs turning back down, Palantir. So that's a little worrisome. I'd like to see Palantir follow through. Amazon looking okay as well. Amazon. Tesla looks good. Okay. Google. Amazon. Let's get Nvidia to bounce. There goes Tesla. Tesla looking good. Tesla at the highs. Okay, Nvidia, no follow through yet. Nvidia pulled back to VWAP. Nvidia is still pulling back. Okay, about almost oversold now. Nvidia. Here's Nvidia, almost oversold. After that nice run up, Nvidia.
Welcome back. Robinhood just completed its acquisition of crypto exchange WonderFi, marking its first foray into the Canadian market. Joining us to discuss first on CNBC interview is Robinhood CEO Vlad Tenev. Vlad, welcome back to CNBC. Walk us through this acquisition of WonderFi and why an expansion into Canada makes sense right now.
Okay, Nokia got the bounce. Nokia, some of you are looking for Nokia to bounce. Okay, Nokia trending. It faded 3 days last week, Wednesday, Thursday, Friday. Today it's following through. Nokia follow through day. Trending. Nokia trending. Nokia new highs. He's doing a lot of good things. A lot of people don't like him, but doing good. Okay, Amazon still pushing here. Amazon still on the move. Amazon going. Nice reversal. Double top or a double bottom. It looks like a range. Okay, we're definitely coming off the low quickly here. It looks just like Google looked earlier. Google looked exactly like this. Came off the low. Tesla did something similar. Okay, not as clean. Tesla not as clean, but Amazon looking really good here. Amazon coming off the low. Apple had a nice little dip early. It really started off on a dip from the close and then popped up this morning, following through. Apple. Okay, what's IONQ doing? IONQ. All right, dip. Looking for the dip to rip. Looking for the trend to continue. There goes CRML bouncing. CRML. S&P is bouncing. Whoops. S&P. S&P is bouncing. Okay, so we're looking for S&P to get up here at this higher strike. All right, we got hedge flow starting to turn. 76.20 is the target. If we can maintain this trend, 76.20. If we start to lose it, I would target this area at 75.70. New York Fangs are being very supportive. Let's see what junk bonds say. Junk bonds gapped down yesterday, right? Junk bonds. Okay. Junk bonds trying to get back above the 50 day. All right, so this is basically neutral. Okay, these traders not giving you much of a signal here. This is neutral. It's at fair value, intermediate term fair value, the 50 day. Let's look at what else do we want to look at? We want to look at the 10-year yield. Okay, see what the 10-year is doing. We want this lower if you're trading IWM or tech. Okay, so it is lower than yesterday. So the 10-year, that's good. Let's look at breadth. See if breadth has improved at all from yesterday. Everything was pointing down, if you recall. All right, these are starting to hook upward. S&P 500 top panel, mid caps turning up, small caps turning up. That's thanks to the 10-year yield, and Nasdaq still pointing lower. All right, so we got 3 of 4, with 2 of 4 pretty bullish, mid caps, small caps, whereas large caps not so much at the moment. Okay, Apple's still pushing. Tesla, looking for more upside. Tesla. NVIDIA still dropping here. NVIDIA. Okay. Tesla. Google. Keep clicking the wrong button. There goes Google. More. Okay, Google looking really good. Mm-hmm.
Hey, Vlad, it's David. Just real quick, another area of diversification. I mean, the prediction markets. Now, I wanted to get a reaction to this news we got on Friday from Kalshi, and this involves crypto as well. It's going to launch perpetual futures contracts starting with crypto. Give me your sense there in terms of what that means, whether it's a competition or an opportunity.
Yeah, so we've been offering perpetual futures for quite some time in Europe. So you might remember we acquired Crypto Exchange, one of the longest continuously running crypto exchanges in the world, Bitstamp. And so we launched perpetual futures about a year ago. So bringing those to the U.S. is obviously something that's very, very attractive. Now, I think the U.S. Also has established.
Tell you what, I'm really enjoying using Gemini and Claude for programming. If I don't know what I'm doing, I just take a snapshot of the screen, Claude. If I have an error, give it to Gemini. Gemini tells me what to do. Honestly, Claude hardly ever makes mistakes. That's so bizarre. You know, to give it a whole list of requirements. This is built from some things that Aaron talked about with me. A leader dashboard, trending scanner, what's bullish, call wise, etc. What's bearish, put wise. All done in Claude. I just gave it the requirements, and it gave me a nice little dashboard to work with. I'm still working on it. It's not 100% yet. All right, so Berkshire is sitting on 58 million shares of Google. Google. So buy the dips in Google. You got a hammer today? Excuse me. This week you got a hammer. Okay, Google's still going. Mm-hmm. Okay, LL. Good morning. Okay, LL. I did see something on that yesterday. Oklo. 978. 978. Then 1053. Then 1357. Yeah, Oklo. That was I saw something yesterday on Oklo. What was it? Oklo. The nukes, right? The nukes were looking good. Oklo, SMR following through. Oklo, SMR, nanonuclear. Okay, SMR took some calls yesterday, right? Let me go take a look at that. SMR. SMR. Yeah, SMR. June. August 13th.
Welcome back. Marvell surging in early trade after NVIDIA's Jensen Huang called it the next trillion-dollar company at Computex yesterday. Joining us to discuss this morning, Cantor Fitzgerald Senior Managing Director CJ Muse.
Somebody mentioned it yesterday.
220 CJ, it's good to have you back.
Yeah, good to be here. Thanks for having me.
We've had Marvell on. We've had Marvell on with Jensen.
Somebody mentioned SMR yesterday. I think it might have been David. Did you mention SMR yesterday?
Well, I'd say, Jensen's a great cheerleader, and, the investments he's made in the last 12 months have been spectacular. I think his only regret is not seeing the same kind of performance for himself.
STM is still going here. STM. Okay, that's at the highs. STM.
Aspirational, figurative, not literative. That would require, a five-fold increase from today's price. But, Marvell's in a great spot in terms of interconnect, which is very important in the scale up and scale out of AI compute. And so, I think Jensen was highlighting the importance of that part of the market, and that obviously includes Marvell.
In your note coming out of the quarter a few days ago, you did say we simply see better upside elsewhere. Can you talk about where?
Okay, so nanonuclear, NNE, Oklo, these are starting to go. These are starting up. Okay, when these get going, they'll all start moving. Took some SMR yesterday. SMR.
forward, Nvidia's in the sweet spot here. Long onlys are underweight, and I think as we go through this Vera-Rubin product cycle, that as the stock pushes higher, you're going to have positive momentum cause investors to chase it.
Yeah, a lot of discussion in the past 24 hours about, obviously, in light of the PC news, their willingness to dominate or ambition to dominate at every level of the stack. Was that news incremental for you on your models?
I think there's two takeaways. The biggest one near term is that TSMC is sold out, right? So if you're NVIDIA or AMD and you're deciding to build a CPU,
Google at the highs right now. Google.
Right, and then I say the second point is that Jensen understands with agentic AI and soon physical AI that he wants to have a dominant role at the edge, and so I think it makes sense for the work that they're doing in PCs and their incredible work that they're partnering with MediaTek on.
Back to Marvell, CJ, how much of its success will hinge on one of its biggest customers, Amazon?
Well, Amazon Trainium is their largest customer. I'd say the good news is that Microsoft Maya will start to ramp in the second half of 2027.
Intel turning back up a hammer for now. Intel.
Google XPU attach business that could be meaningful, and so I think that the design wins that they have in custom silicon combined with their awesome Inphi interconnect business means that numbers will push higher. We just see more relative upside in earnings, but that doesn't mean Marvell can't work on it.
We'll be watching this stock now up 27%. Pretty incredible in one day. CJ, thank you for joining us. CJ Mueller.
Thank you.
All right, up next, what the options market is signaling about the crypto market, with Bitcoin at its lowest level since April and now down 20% on the year. Stay with us.
Okay. We'll stay with you. Oklo. All right. Oklo. Nano. Nano. All right, watch these nukes. They look like they might do something here.
Welcome back. Bitcoin at session lows, extending its decline this morning and pacing for what would be its worst first half of the year since 2022. Let's go over to Oliver Rennick at Cboe in Chicago. We've got more on what the options market is signaling about crypto. Oliver.
Hey, good morning, David. Crypto assets are in a world of pain with Bitcoin down 5%, strategy down 8%. Price action in coins is only getting worse relative to the rest of the market, with Bitcoin now lagging the NASDAQ by 70 percentage points since Bitcoin's high last October. Options flows have been pretty resilient the past few weeks around the Bitcoin ETFs like IBIT and an MSTR, but it looks like some of that confidence is starting to fray a bit. In Michael Saylor's strategy, more than twice as many calls are being sold than bought, and almost 5 times as many puts are being bought than calls. The stock's down 10%. It's possible crypto diehards are getting spooked by the so-called digital asset treasury company selling digital assets for the first time in 4 years yesterday. Or maybe it's because they're not selling enough. Master's average cost per its 800,000 Bitcoin is about $75,000, a level we crashed through big time yesterday. Now in IBIT, the flows were a bit
strategy. All right, so
ETF, but there still is a hint of panic there too, with puts trading of more than calls and more than twice as many puts bought versus sold. One trader we saw this morning spent about $1.4 million buying 2 legs of put contracts, 2,000 in the money 42 strike puts that expire mid-July, and another 2,000 of much more bearish 33 strikes that expire in December. And that would target another 13% drop in Bitcoin into year-end.
Yeah, already down 25% for the year. Oliver, thanks. Oliver Rennick watching some crypto for us. When we return, the CEO of HPE is with us with earnings reaction. The biggest beat since 2018, and the stock is surging. More Squawk in the Street continues in just a minute.
okay, we got a pretty big position in. Taiwan Semiconductor looking for the follow through. Google's still going. All right, looks good.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanillo. We see Modi here at Post 9 of the New York Stock Exchange. Sarah's on assignment today. This morning, shares of HPE are surging on pace for their best day ever after the company posted its biggest earnings beat since 2018. We're going to break down the quarter and the outlook with CEO Antonio Neri.
Plus, Generac joining the data center circus, shares rallying as the company reaches a backup power deal with an AI hyperscaler. We're joined by the CEO, Aaron Jetfield, and we'll also get a read on the state of the consumer and the travel industry with the CEO.
All right, NVIDIA with a nice dip. That'd probably be another opportunity to buy NVIDIA at the low. I don't think NVIDIA is going to stay down here.
Materials also up 1%. VIX is still around 16. Yields have come back a bit, even though we got a pretty good JOLTS number for April. Let's begin with the markets. Our senior markets commentator, Mike Santoli.
Tesla still pushing Intel. Pretty big trade on Intel. Intel.
And sort of how extreme are the extremes that we're observing in terms of the AI theme, what it means for index level valuations, and all the comparisons to the tech bubble in 1999 to 2000. So I think on one level, the burden of proof is on those people who insist we are in a rerun of the bubble peak in 2000, because we have to keep in mind what that actually meant. That meant the S&P went on to be cut in half in 2.5 years. The NASDAQ went down 75%. It was a lost decade for stocks. The indexes were flat to down over the next decade. In real terms, much worse. You saw devastation in equity land. And I don't think that most people say, hey, it's just like 1999, 2000, actually believe that. It cuts the other way, too, though, because if you say it's only 1998, we're still on the way up. Well, you still had a 5-year negative forward return in 1998. So all that stuff is in the mix. And I do think right now you can point to some of the synchronicity.
Okay, Intel, INTC.
Semis just had their best 2-month run since the top in 2000. You look at things like the concentration of the market and equity supply. All those things atmospherically seem familiar to me. And then you see the urgency, the grabbiness of this market when it comes to looking for tangential ways to play the same dominant theme. Whether it's HPE, you guys are talk about going up as much as the function that we're seeing right there. So all of that stuff, it sort of feels similar, but I don't think it's necessarily to the point where you can say with confidence that we're at some kind of major trend change.
Is it clear to you what's being sold in preparation to buy things that are coming online?
It's not quite clear to me that there is a dollar for dollar. Let's just set aside the cash so we have something to buy down the road. I think you can see it in the total neglect in defensive parts of this market. They're getting blasted out. Nobody cares that they're cheap. Nobody cares that there's dividend scarcity at the index level and they have dividends. So I guess arguably the direction of travel is away from anything defensive and old economy and toward tech. I think there's enough money out there. I think that honestly it's not about a scarcity of literal dollars to go into these deals. It's about whether they can achieve these, whether the initial valuations are going to at all be substantiated by what the fundamentals are offering.
That's another way of saying you think the IPOs will be rich on day one?
I think SpaceX is an arbitrary valuation. It's arbitrary. It's not related to what the business is right now. And so that's a great test of investors' willingness to accept that kind of proposition and to invest alongside.
Anything we should glean from these big one-day pops that we're seeing in a number of tech companies? I think back to Snowflake, Datadog, Akamai. Today it's HPE and Marvell.
For sure. I mean, honestly, Steve, I think it's about, well, I might have missed Micron. Micron was considered an old cyclical, dirt cheap company. I'm not going to miss the next one. And so the way that the theme and the dollars and the revenues and the profits are going down the value chain and back in time to the older companies and the ones that have been around a long time and have dispositions in CPUs and memory, I think that's what tells you that people are very, very twitchy to try and make sure they catch the next one. So who knows if that can, and also a lot of these stocks were really cheap before the pop. Right? Micron was really cheap before the pop. Dell was dirt cheap before the pop. HPE, dirt cheap for years before the pop. So I think that there's a little bit of room for them to get revalued in this way.
Yeah, we didn't really see this hardware rally coming, but to your point, investors are are taking notice. Mike, thank you. Mike Santoli. Let's turn now to one of the companies we were just discussing, HPE, surging this morning after reporting its biggest earnings beat since 2018 and raising guidance for the full year, with both server and data center networking revenues posting massive gains year on year. Joining us in a first on CNBC interview, HPE President and CEO Antonio Neri. Antonio, thank you so much.
Here goes Apple continuation. Apple.
Walk us through what you're hearing from customers that gives you the confidence that this demand story is durable.
Well, good morning, Seema, and thanks for having me. As you saw, we posted an exceptional quarter, and that quarter came with record-breaking results across pretty much all the metrics. But what I'm really pleased is the fact that we see tremendous demand for our portfolio. We have been working on our strategy for a number of years to build a portfolio that's perfectly timed to the inflection points we see today across networking, cloud, and AI.
Tesla still pushing. Amazon, Google just off the highs now. Google.
It's a full dollar for 26, but also give the guide for 2027. And that's because of the durability of the demand and the attractiveness of our solutions and the tremendous progress we make with the Juniper integration. That's why.
Okay, Intel coming back down a little bit. Intel.
The market that we can see it and it's durable, and we see more ahead as we progress in the future months.
What could complicate this bullish vision that you just articulated?
Okay, we continue to move up towards 7620.
The idea that there could be a bottleneck emerging in networking.
Size, long data. I will say, it's what is not in our control, because we are a company that generally when we guide in a prudent way. In fact, in some of these guides, people say, well, we're somewhat conservative on networking. The reality is that what we guided for 26 and 27 comprehends all the supply challenges we already see in the market, and the ability to procure the supply, whether it's in 26 because the
S&P
allocated or
getting close to that 7620, Mondo.
For 27, and how we divvy that supply is up to us.
Size.
So that's why it's about what is not in our control. Otherwise, we would not be that leaning forward for 6 quarters ahead. And I think that's the things we need to watch out. But the team has executed with tremendous discipline, and we have the best portfolio we ever had in this company.
I believe Elliott Investor, one of the activist investors out there, has one of its partners on your board. How much of an influence do you see Elliott having on your company's growth strategy going forward?
Well, first of all, we have had a tremendous constructive dialogue with
Caterpillar. Thank you. Thank you, Rich.
Quarters since they joined the stock and joined our board. I know Chris Yu extremely well. He and I used to be peers, and I value his forward.
Okay, there goes the S&P. S&P on the move.
In the old HP, and then when we split the company, so we welcome him on board to bring that perspective. But ultimately, I think.
Okay, looking good. There goes Apple.
It's a tremendous opportunity, and you can see the value we have created in the last few months.
When you think about competition, do you get the sense that
Apple's on the move, David.
Continue to invest? Now, how are you thinking about, being able to build a server?
NVIDIA price, long dated,
Well,
deep
I
puts,
think about the future, right?
Micron Pulse,
And I'm thinking about
Apple
5 years
Pulse.
in increments, because you have to think that far. And if you think about the context of AI for a moment, by 2030, at the end of this decade, the vast majority of the demand will be in AI inferencing. And the question is, what type of architectures will be
Okay,
to reduce the cost per
Apple's gone now.
improve the efficiency of the systems as the infrastructure.
Okay, let me take a look here at some of these shorter term. Okay, Tesla's still going. Tesla 1 minute chart gets oversold. You look for the follow through. Tesla, Google, Apple. Okay, oversold at the close yesterday. Apple's still going here. Apple going. NVIDIA might be a nice entry here. NVIDIA on the dip. NVIDIA. Might just look at NVIDIA. NVIDIA. Okay, it's oversold. NVIDIA. I'm going to buy some NVIDIA down here. I've been waiting. Been waiting for NVIDIA. Okay, NVIDIA. Come on. All right, so Thinkorswim's getting sluggish. I'm going to have to reboot, I guess. NVIDIA. Thinkorswim. Oh. Okay. Today's the 2nd. So we got expiration tomorrow and we got expiration Friday. NVIDIA.
Soft pulse. Spider pulse. 0 DTE. Call side. Size. Alpha pulse. Long dated. Shenanigans. Spider pulse. Size.
For 2018 through 26. Let's not forget, at the same time, we are paying the debt much faster. And the fact that we're going to pay that debt to 2 times leverage by the end of 26 instead of 27, which will allow us to return approximately 75% of capital in 27
NVIDIA.
holders, and that free cash flow will be approximately $4.5 billion. But it's all about driving the relevancy
NVIDIA.
that ultimately drives profitable growth. And
for Friday.
Our people still have way to go, and the only way you do that is by executing order in, order out. And I think the Juniper acquisition has been a terrific move from us to drive that shareholder value creation, and I think you will see it as we go forward.
But as a CEO who looks at this chart and sees your own shares going parabolic, isn't it incumbent upon you to think about ways to leverage that currency, secondaries, M&A, anything else?
Long dated.
Well, as a CEO, this is a proud moment because I represent 65,000 team members that work really hard, but at the core, I'm a fiduciary duty to create shareholder value. So we are looking at all of that, whether it's capital return, we will continue to invest in the business. I think about the innovation in 3 different steps: organic, inorganic, and through partnerships. We made a bold move with Juniper. I have acquired, several companies.
Okay, Apple's still going. Amazon at the high of the day. Google just off the highs. Microsoft at the low of the day. Microsoft no follow through.
NVIDIA Pulse. Long dated.
NVIDIA Pulse.
I met with some of them even as earlier this morning, and who believed in us in the Juniper acquisition.
Yep. Lastly, Antonio, I wanted to ask you about the type of spending that we're seeing
Triple
in order to
semi-pulse.
make this AI dream a reality, whether it's in
SPX
the hardware
pulse.
market,
Long
servers, or
dated.
even Google
Micron
issuing
pulse.
$80 billion in equity. What does that tell
Micron turning.
needed to make this promise work?
Well, I think, Seema, we need to all recognize, and I was hearing the commentary from Mike Sartori, which I think he does a fantastic job in making the complex simple. The reality is that
Micron turning. Nice long setup just below this. Put your stop just below this pivot.
The equities market, there is a lesson there. But I think from an IT perspective, we are living in a completely different market. Everything has changed. And I think the future belongs to the fast. The people who are adopting these technologies will be the winners. And in our case, right, so we have 1,200 use cases in AI deployed across the company and 250 in production that are really delivering results. That's why we get better cost structure, right, using agentic AI. So this amount of investment will continue for years to go. Now, the enterprise side of the equation, where I spend a lot of time.
Micron.
Q's pulse.
They're all
Long dated.
accelerated investment because they understand the relevancy depends on the adoption of this technology.
Tesla at the high, starting to see some profit taking. Meta's at the high. It's got a ways to go. Meta has a ways to go. Higher highs, higher lows, coming off the low. RSI oversold at the close yesterday. A little dip this morning and pushing higher. Meta. Maybe Meta can keep going. I'll keep an eye on NVIDIA for a moment. NVIDIA looking for a follow through. Looks like a bear flag for now.
0 DTE. Call sign.
Okay, what is the S&P doing? S&P very close to 7620. S&P 7620. Call wall 99 percentile. 7620.
Apple Pulse. Long dated. 0 DTE. Call side.
Spider pulse, long dated. Avgo pose, triple semi pulse, deep calls. Q's pulse, long dated. 0 DTE, call side. Size. AMD pulse, long dated. Avgo pose, deep calls. 0 DTE, call side. Size.
Okay, looking good.
Avgo pose, long dated. Deep calls. Avgo pose, long dated. Deep calls. Zero DTE, call side. Size.
Welcome back. Our next guest joins us after recently raising his year-end S&P target to 8,000, forecasting a bumpy path to higher returns from here. Joining us at Post 9 this morning is Goldman Sachs Chief U.S. Equity Strategist Ben Snyder. Ben, it's always good to have you back. Good to see you.
Okay, S&P is almost there.
It's earnings driven. Yes,
that's right. It's an incredibly dynamic market environment.
Deep calls.
Lots of uncertainty.
Deep
But
puts.
one way the market has
Palantir
dealt with
pulse.
uncertainty, not just this year, but over the last few years of the AI boom, is to really focus on near-term visible earnings. And that means if earnings strength continues, and our view is it will, the market should continue to move higher.
What are your S&P numbers for this year and next?
We have
Q's pulse.
24%
Long dated.
earnings growth this
Marvel
year and
pulse.
13% next year.
Micron pulse.
It is a
Deep
concentrated
calls.
group
Deep
that's delivering the increase.
Meta
That's
pulse.
right. We have about half of that
Tesla
earnings
pulse.
growth being driven by the AI infrastructure beneficiaries. And actually, if you look on a
Tesla
bottom-up
pulse.
basis, you can
Long
argue that the
dated.
largest semiconductor companies, just 2 or 3 of them are counting.
All right, looks
over
good.
half of that.
Which is why you want to be exposed to those areas, obviously.
That's right. Now, I mentioned earlier the relationship between the market and earnings, but it's also true if you look within the market. If you look at the stocks that have been performing best, they're the ones with the strongest earnings revisions.
Are you expecting once SpaceX goes public and then we had Anthropic filing confidentially, how these larger IPOs, I know there's been an active discussion around this, could change some of the flows that we see in and out of tech?
We just visited that in our note last week. There's no denying that equity issuance is increasing. By our forecast, this will be a record year. About $200 billion of IPOs, about $700 billion
semi-pulse.
to include
Long
follow-ons
dated.
and other issuance.
Deep
The good
puts.
news is, if you
Soft
compare that
pulse.
to market cap, it's still going to be much smaller than some of the peaks we've seen in the past. And the other good news is that demand still looks very
S&P,
strong.
S&P almost there.
On the $80 billion of issuance Google signaled, but just a couple weeks ago, NVIDIA also increased their buyback by $80 billion. And so in total, we think buybacks across the market will be over $1 trillion. And the bottom line there is, despite the increase in issuance, we still think the supply-demand balance will be pretty healthy.
Do you see more equity raises from the hyperscalers?
It's a great question. Our view has been that if they want to continue to build out the AI infrastructure, and we've expected they would, they can mostly do that through cash flows and through debt. The balance sheets still look very clean. So this was a surprise to us and a surprise to a lot of our clients as well.
You don't think multiples necessarily expand?
We're expecting that we basically stay flat here at 21 times. The story so far this year has been all earnings.
Yeah.
Right? Just a few months ago, we were trading at 23 times. It's actually incredible how well the market has performed alongside declining multiples. Our expectation going forward is that remains.
Does that mean the bull is potentially more long-lasting if multiples don't go bananas?
It's certainly not the typical kind of market people think of when they think of a bubble or a tech-driven rally. you know, I think you should think about the upside risk there. It's possible multiples start to expand, but ultimately the question for investors, back to the original point, is how long can this earnings strength last? And if it's really just being driven by infrastructure, the answer is probably not all that long. Ultimately, what we're going to need to see is broad-based productivity enhancements that really make this a durable technological
right. Is rate risk rising?
Well, rates have been rising.
Yes, although they've come off the highs
a little bit. And our view is that the Fed may be a little more patient, cut a little bit less than we expected coming into this year.
You were looking for 2, I believe, right?
Correct.
December and March?
That's right. We've pushed those back, but we still think the likelihood of hikes is fairly small. And for equities, if you look at the peaks of bull markets in the past, Fed hikes are one of those characteristic telltale signs. And so it's comforting that for the moment, that still looks like a pretty small
right. Although some would argue ECB hikes often have been damaging. What if they go?
That's right. Although, you know, the good news is we still think the Fed believes, as we do, that the current inflationary pressures will subside over the next several months.
Outside of tech, where do you see the most opportunity?
Because that earnings strength is so concentrated in tech, that to us is the most obvious place for investors to focus. The issue is we're seeing a number of yellow flags that signal investors should expect momentum volatility. We've actually seen a lot of this just over the last couple of weeks.
All right, we're almost there. 76.20. Sorry, 76.20. I was busy taking some notes. S&P 500.
For example, the materials sector, and so we think those can be helpful diversifiers for a broad portfolio.
Final thing is, I think someone this morning argued.
Okay, Amazon's still pushing here.
Apple Pulse. Long dated.
Soft spot in a presidential cycle. Is that do you think that means there'll be some payback in the back half, or as we get closer to November?
You know, seasonality is always hard to rely on, but there is a pretty consistent pattern historically where in the summer months and early fall ahead of midterm elections, the equity market usually trades sideways. I think you can add that to the number of factors that suggest, as you mentioned earlier, it may be a little bumpier for equity investors over the next few months.
Apple's still going.
But we don't think that will derail the bull market.
ARM Holdings at the high.
It was news when you raised it. It's good to see you. Thanks for coming in, Ben.
Spider Pulse. Long dated. Deep call. Apple Pulse. 0 DTE. Call side.
Apple still going here. Apple.
And coming up, shares of Generac are jumping today, although now, up about 5.5%. The company is striking a deal with a major
Apple at the high of the day. Jeez. It looks like it's going to break out, right?
Bitcoin Ponzi Pulse. Deep calls. Micron Pulse. Long dated. Shenanigans. Nvidia Pulse. Deep calls. Marvel Pulse. Bitcoin Ponzi Pulse. Long dated. Deep calls. 0 DTE. Call side. Size. Marvel Pulse. Long dated. Micron Pulse. Shenanigans.
Apple's still going. Looks like it wants to take the 315 out. 315 level out. Apple's still going. Apple looks good. And Microsoft's starting to turn. Made a lower low. RSI oversold. Let's see. Microsoft, lower low. Lower low. RSI rising. Higher lows. Okay, you see that? You do see that, right? All right, so we got higher lows. Prices make lower lows. Now, this time it should go. This time I think it should go.
SMH Pulse.
All right, Microsoft should go from down here.
Deep puts.
Okay, Microsoft looks good. I'll watch Microsoft for a sec. Should go here, Microsoft.
SMH Pulse. Long dated. Deep puts.
Microsoft should reverse here.
Pulse. Shenanigans.
Cisco.
SMCI.
Cisco looks good.
Money.
Cisco following through. Cisco. All right, nice little pop on Cisco.
People cannot rip off the American consumer. And so it's a safety and soundness issue as far as I'm concerned. And also, Congress charged my position with making sure that there's a competitive market. And when people are increasing prices 100, 300, 500%, in the case of credit scores 1,000% in a period of years, it shows great disrespect for the American people, and we can't let it happen.
As FHFA Director Bill Pulte
0 DTE. Call sign.
Cisco.
The president names him to a new role.
NVIDIA pulling back a little bit more.
Morning, Megan.
Okay, Apple's still going.
Announcing this morning that he's appointing Bill Pulte to be the acting director of national intelligence. Now, this will put Pulte in one of the most powerful cabinet positions, overseeing the entire U.S. intelligence community.
Crypto is for real this
Director of
time.
national intelligence is supposed to have extensive experience in national security.
Smart ass. Crypto is for real this time. Pulse, you hear that? Pulse audio. He's got a sense of humor.
And he was among the loudest critics of former Fed Chair Jerome Powell. So this move, guys, is already generating pushback this morning from lawmakers on both sides of the aisle on Capitol Hill as well as around Washington. The concern is that Pulte could leverage this new role to weaponize the intelligence community, similar to how he did while he was at FHFA, and then use the intelligence community to attack political rivals. He also could use the role to investigate Trump's claims that the 2020 election was stolen. That's something that the current DNI, Tulsi Gabbard, was already doing. Now, guys, despite those concerns in Congress, including from Senate Majority Leader John Thune, he said this morning that, quote, we don't need a weaponized DNI. There's not a lot that lawmakers can do about this. The president is appointing Pulte in an acting capacity, and because he was already confirmed by the Senate to lead FHFA, he's technically eligible.
That's hilarious. Crypto is for real this time. I love it.
This morning, Megan calling Pulte a partisan thug, but I wonder whether the Thune comment was a surprise.
All right, NVIDIA is at the low. Microsoft looking for a turn. We're probably going to get a turn here.
Marvel. Long dated. SPX.
Congress could maybe do some things around the margins. The acting role is still supposed to be somebody who has extensive experience, again by law, in this position, which was created after 9/11, and that's not something that Pulte would seem to fulfill, coming from the housing sector the way that he does, not seeming to have any experience here. So maybe because of that, lawmakers could try to make their voices heard. It does come at a time, too, that Republicans on Capitol Hill are feeling a little bit unleashed in a way. So
0 DTE. Call sign.
Back against the president in ways we haven't seen before. So we might be able to see them start to talk about this a little bit more, starting with Thune at the top. And I flagged that there could be these few weeks here before Gabbard leaves. She had originally announced.
All right, Amazon at the high. Looking for a lot of these stocks to turn back up in the evening session. ABCD patterns. CRML turning up.
NVIDIA Pulse. Long dated. Deep call.
Scaled back the number of suspected Ebola cases in Central Africa. The UN Health Agency lowered the suspected number from more than 900 to 116, with 330 total confirmed cases. Most of those suspected cases were cleared after researchers said they were attributable to other diseases or unrelated fevers. The Defense Department has now declared its press office as a classified space A Pentagon spokesman wrote the department simply needs to move Pentagon speechwriters into the area where they use classified material. It's the latest of several moves to restrict journalist access to the building, which prompted a walkout of most of the Pentagon press corps last October.
HPE CrowdStrike.
French Gates will join the NHL Seattle Kraken as a minority investor pending league approval. In a statement, she said after many years,
Now we're starting to retreat from the highs.
she's excited to have
Intel, Apple's at the high now. Apple.
the Kraken's ownership group is also pursuing an NBA
long dated,
franchise in Seattle.
deep calls.
Seema, back to you.
Q's Pulse.
Okay, thanks. Pippa, thank you. Pippa Stevens. After the break, the CEO of Generac will join us. The stock jumping today as the company strikes a deal to provide backup power generators to a leading hyperscaler. We'll get more on that.
Alphabet's planning to raise $80 billion in stock sales through this $10 billion investment from Berkshire. We're going to take a closer look at what that investment signals in just a moment.
Okay, Apple at the high of the day.
DTE, call side.
ASTC. LILKB halted to the upside. MRBL.
Amazon at the highs, Apple at the highs, Microsoft turning. Watching for Microsoft to turn. Cisco.
Triple semi-pulse, long dated. Q's Pulse, Avgo Pulse. Micron Pulse, deep calls.
Cisco, looking for more upside in Cisco. All right, we're starting to roll a little bit here. Maybe a BNC pivot, give you a better entry. RSI is starting to fade a little bit. Cisco. Okay, this time of day, shouldn't be chasing anything. You probably get better entries if you wait. Let's see what CrowdStrike. Cisco, looking at Cisco right here. Cisco, CrowdStrike. All right, CrowdStrike is at the low here. CrowdStrike. CRWD, CrowdStrike has earnings tomorrow. CrowdStrike tomorrow. Palo Alto is tonight, right? Palo Alto tonight. PANW. Yeah, I don't like that sound. I don't like the sound when the markets are retreating. It's annoying. Only like when it's going up. All right, so we got earnings tonight. Palo Alto earnings tonight. Looking for more upside. Palo Alto. Palo Alto Networks. Okay, CrowdStrike, PANW. Apple's still pushing here. Apple at the high of the day, just flagging a little bit right now. Sitting on top of the 9 EMA. Lest we forget, the markets have been up. This is week number 10. All we need is some sort of catalyst to knock us down a peg. That said, got to have the catalyst because the market's just showing so much strength that if you're not careful, you'll miss out on a lot of gains. That said, also, we have been reducing our exposure as we rise, which makes a lot of sense. Bring your stops up and tight instead of loose as we run up over the last 10 weeks. Stops were a little bit looser, more loose. Now we're getting them up and tight underneath today's low, not yesterday's low. You can run the 5 EMA or the 3 EMA as well. Let's see, what do I have shown here? 9 EMA. All right, so I can add another one. Let's see, exponential. Let's use a 3 EMA. So we have a nice tight stop trailing us. All right. A 3 AMA is right underneath price, as you can see. What about 5? Just go to 5. 5 EMA. Okay, 5 EMA. Okay, 5 EMA is basically the low of the day. All right, that's cool. Save that. All right, they're talking up Google right now. Microsoft turning the corner. So Microsoft, we told you that there's potential for this to make a lower low this morning, with RSI making a higher low. So here's Microsoft with a gap down. Okay, so right now we're watching RSI is rising. Price has made a lower low. So generally, most of the time, this will move back up. The reason is, if you look at the daily chart, RSI is up here near 80. Granted, it's turned down a little bit, but as long as this is up at the highs, this is telling you look for closes in the upper half of the daily range. Right now, we're in the lower half of the daily range, so we're looking for at least move back up towards 450. Okay. We have positive gamma as well. So positive gamma tells us that dealers will buy the dip. And if you look at Brett's graphics, okay, look at Brett's graphics from yesterday. I don't know if he showed it this morning. It was really late, so I didn't update you. Let's look at yesterday. All right, this graph right here, this is the top 100 stocks on the S&P 500. When it's dark blue, it's telling you that most stocks are positive gamma, especially these top 100. Okay, 7,500 is dark blue, 7,600 is still red, medium blue. So dip should get bought, like Microsoft is getting bought right now. Okay, so Microsoft's turning the corner.
We'll see if others follow suit. Mackenzie, thank you. Mackenzie Sagalas. Sticking with AI, Generac shares are popping after announcing a deal to supply backup power to its unnamed hyperscaler. Joining us now in a first on CNBC interview is Generac CEO Aaron Yagdil. Aaron, we appreciate you making the time. It's so fascinating to see how your company has transitioned from residential backup generators to now finding yourself sort of in the midst of this AI boom. Walk us through this new customer that you've brought on and this dollar size of this deal.
Yeah, thanks for having me on this morning, Seema. I mean, obviously, as you said, I think we're probably most known.
Okay, NVIDIA's starting to turn. Watch NVIDIA at the low. Another one of these that should turn, barring any accidents. Okay, here's NVIDIA. NVIDIA is starting to turn as well. You got RSI making higher lows. Okay. Prices should turn. You got a higher low in price right now, NVIDIA. Okay. So if you're taking a long here, put a stop underneath 225.50 or 225. That's going to be about a $2 stop. Look for prices to scoot higher, at least 2 to 3 points. Generac CEO talking data center supply. Generac CEO on agreement to supply backup generators. Okay, who is Generac? Let me go find out. GNRC. Any idea who bought generators from Generac? CEO is on CNBC as we speak.
Nvidia Pulse, long dated.
The exact identity of the hyperscale buyer undisclosed, according to Generac's formal announcement and CEO, who's on CNBC right now, Aaron Jagfield's commentary on CNBC. The deal is a multi-year global agreement, industry consensus on potential buyers: Microsoft, Amazon, or Google. Might be Google, because Google just landed a big endorsement from Berkshire Hathaway. Contract followed a highly rigorous vetting process. It includes factory inspections, extensive performance testing, and deep supply chain audits. The AI infrastructure play. This elevates Generac out of a traditional reputation as a residential-only backup brand. We've been talking about this for a few weeks now. Generac, this should be good. GNRC. Okay, nice move to the upside on Generac. Yeah, I would like to get a Generac propane system. I already have solar.
In terms of when we get a chance to talk about it, it's when there is a landed hurricane or an ice storm, some other dislocation like that. Again, we love talking about it, but I think this is a generational opportunity in data centers that I think are going to change completely the complexion of this company. I see that side of our business, we're going to more than double in the next 3 years, and that's going to be more than 50% increase for the overall company by 2028. And so, it's a great opportunity, and it's awesome to see kind of everything kind of coming together at once to give us this better balance between our residential business, which is a legacy business for us, and this new opportunity in commercial and industrial.
Yeah. Well, we're in a moment where, it really did become about power, scarcity, and demand, and it's just an incredible inflection point. But also, too, has been supply chains and components and imports and tariffs. Has production been challenged on that front at all?
We're ramping right now, so it's something that's been a challenge. Supply chains have been a challenge since COVID. I think every company went through that experience and realized on the backside of that you can no longer be sole sourced for major components from a single supplier or a single area of the world. So, we've started on that journey like other companies have, and we're dual sourced, triple sourced, multiple areas of the world. Obviously we've reshored a lot of production as well. The companies have, but you're spot on. Power is at the center of so many of these conversations. Not only the power to connect these data centers initially, but the power to back them up. It's just front and center in every.
Generac, is that pulling back a bit? Okay, that got the news, and I was pulling back in.
Between technology and energy, it's clearly you need both sides to win and make this AI experiment work. Aaron, thanks for walking us through what your company is doing. That's Aaron Highfield, CEO of Generac.
Thank you.
Still ahead this morning, CEO of IHG is going to join us. We'll talk some booking trends, pricing, and more as the summer travel season is already kicking off. Squawk on the Streets back in just a moment.
ASTC. SFR.
All right. So Generac, I put in a very low bid. I'm going to try to get into some Generac. Okay. So it's one of these three. Okay. It's one of these three. It's either Microsoft, okay, Generac. They have an NDA with one of these companies. Generac's formal announcement this morning. Commentary on CNBC, the deal. Multi-year global supply agreement. Multi-year global supply. So what's the PE now? What's the PE? Let's see. Generac, GNRC. What is the forward PE now versus forward PE versus current? All right. PE ratio of 89.4. Steep current, which compresses sharply down to a forward PE ratio of approximately 30. 285. Factors in aggressive consensus estimates for accelerating enterprise data center sales. You just got a contract for future deals, so that's good. Generac. All right, I'm trying to get in Generac, but I put in a very low bid. I'm lowballing it. I'm looking out at September, and I put a limit order August. I'm looking at August 300 calls on Generac. I put in a low bid at 275. It's being offered at 365 right now, so I'm basically 90 cents lower. No, I'm over $1 lower. Okay, so and that is for August, right? August. Okay, let me just look at the deltas on this. Delta is a 51. All right, so I'm looking at this 300 strike. I got a low bid at 275. Okay, low bid at 275. I'm trying to get into Generac.
IBIT Pulse. Crypto is for real this time.
Crypto is for real this time. I love it. Love it.
Zero DTE. Call side. Size.
Getting some text on that White House AI executive order. Let's get back to Megan Casella.
Carl, the president just appears to have privately signed that executive order on artificial intelligence that we have been waiting for. The White House just posting this a few minutes ago on the White House website, and it appears to be a scaled back, slightly weaker version than what we had initially been expecting. Remember, the president had scrapped plans 2 weeks ago to sign this AI executive order after some pushback from industry. Now we're just reading through this, but the crux of the news here is that it would design a voluntary framework with AI developers, voluntary being the key word there, through which the developers will be able to engage with the federal government to determine which models under development will meet a new designation of covered frontier models. Those covered models then will be providing the federal government with access to the models for a period of up to 30 days before they plan to release their models to other trusted partners. That 30-day window has been negotiated extensively. It had at one point been expected to be 90 days. Now it's a voluntary framework to give the government a 30-day early review period only of covered models that the government gets to decide which models will qualify there. They also say they will collaborate with the federal government. These developers will collaborate with the government to select trusted partners that will also have early access to covered frontier models to promote, they say, secure innovation and strengthen the cybersecurity of some of this critical infrastructure. It also says in this EO, guys, that nothing shall be construed to authorize the creation of a mandatory governmental licensing, pre-clearance, or permitting requirement for any of these models, guys. So still reading through this, and we'll see, we'll bring you more news as we have it on this, but clearly a more scaled back, downsized version, I would say, of this AI executive order, all of it appearing to be voluntary rather than a mandatory framework for these AI companies.
Yes, the word voluntary appearing several times. That's going to be a good one to dig into, an important doc. Megan, thanks. Megan Casella at the White House. Switching gears a bit, travel demand remaining resilient even with rates showing consumer sentiment at or near record lows, as you know. IHG Hotels and Resorts says it's seeing growth in business, group, and some leisure bookings. Let's bring in Nellie Malouf this morning, CEO of IHG Hotels and Resorts, who joins us here at Post 9. Welcome back. It's good to have you again. Hi, Carl. Hi, Steve. Good to be with you. We have been looking for signs of inflected demand.
Crypto is for real this time. It's hilarious, right?
Sound like corporate or business is a big part of the growth. Yes? Corporate, business, group, and leisure are still strong. I mean, we reported our first quarter revenue. We saw growth in every brand in our portfolio and every part of the world.
AMD pulse.
Despite the
Long
conflict in the
dated.
Middle East, we managed to
Deep
grow very well in
calls.
every part of the world. U.S. economy strong, GDP growth, big infrastructure investment around the country, AI investment.
All right, NVIDIA is still drifting a bit lower right now. Microsoft pushing a bit higher off the low. Microsoft. Oh, let's see, Generac. I got a low bid in Generac.
That radiates a pretty broad circumference of the U.S. economy. So, yeah, there are some headwinds because of inflation, but there are also some benefits that's driving the business.
Does that mean that are certain income cohorts growing faster than others?
I would say, I mean, clearly the lowest income cohorts have been pressured more by inflation, but where we play, say from Holiday Inn Express all the way up to Six Senses and Regent and Uber Luxury, we are not seeing that. We've seen growth in every one of our brands in the first quarter. We think it is continuing here into the second quarter. Our average household income for a Holiday Inn Express traveler is about $123,000. So it's above that, say, different cohort. And I think that places us in a good position to continue our trajectory.
On that note, there's been a lot of talk about the wealth creation from these three highly anticipated IPOs, the amount of millionaires that will come out from the SpaceX IPO in LA, OpenAI, Anthropic, Silicon Valley. Are you thinking about how that could create an opportunity to go after that luxury consumer at all?
I mean, Seema, you're touching on one of the two long-term structural tailwinds in our business right now. One is the growth of affluence. There is not just the uber wealthy, founder, billionaire, but also just broad affluence being created, not just in the U.S., Europe, Asia, China. These people want to spend their money differently. They're preferring live experiences to possessions. They want concerts, art, theater, travel, live sports, and they want hotels and restaurants and bar, and that's where we get into the picture. So that's the first one. The other one is longevity, right? Longer lifespan, longer health span. So people with more affluence, living longer, healthier, and they want to travel too. So these are structural tailwinds for a long time.
How do you think about managing capacity? Hotel business is famous for, in some prior eras, overbuilding, right, or over-opening. Is there discipline in the industry?
I think there's a lot of discipline. Part of it is driven by financial markets and lending that is a lot more restrictive than it used to be. I mean, literally yesterday at the hotel conference, the NYU conference here in New York, there was a new update for growth and supply for the U.S. downgraded to 0.5% for this year. It's, I think, the second or third year in a row that we're not even at 1% supply growth. Wow. Now, we're taking share through 50% of our openings being in conversions across all of our brands. So we had net new rooms growth in the first quarter of the year of 5%. But new supply is not really a problem. Actually, Carl, the industry has never put itself in trouble through oversupply. It's always been a demand shock. 9/11, the GFC, the pandemic, of course. It's been restriction on mobility or demand shock. It's never come like in, say, office or residential. It's never come from oversupply.
What about the footprint you have in China? Does it expand or get smaller over time?
Our footprint in China has been expanding at a record level for last
Okay, Apple trying to break out a bit more. NVIDIA still drifting down.
2 years of negative RevPAR, but growing demand, but negative RevPAR to positive RevPAR, which accelerated to the first quarter.
Taiwan Semiconductor, been watching for that one to continue as well. TSM. All right, nice look to TSM, Taiwan Semi, breaking out.
Chinese love to travel. Travel is growing domestically, it's growing outbound, and it's growing inbound.
By the way, just on that note, when you talk about expansion, I heard there's a lot of developers in the hotel space that are.
All right, Taiwan Semi probably gaps up tomorrow, I would think, given the strength that we're seeing today.
That is part of the issue. But it's actually good for the economy in general. It goes back to the point that we're talking about with Carl earlier, is people are finding employment from the broader radiation of the AI tech spend, which is, we think, sustainable and is a long-term driver for the strength of the middle class in the U.S.
It's an important gut check on the economy for sure, and the consumer. Thanks for coming in. Always good to have you.
Good to be with you. Thank you.
All right, after this break, as investors count down to SpaceX's IPO, XAI is raising some questions. We're going to take a closer look at the company's long-term strategy there as that roadshow kicks off later this week and the messaging for shareholders. We're back in a moment.
TSM. Yeah, that looks good. Okay, let's see. So my son, first day that he is working during the summer, driving himself, taking my car, of course. He got up early this morning, 6 o'clock, got ready. I made him breakfast. He left for work at 8:30. He's working 2 jobs, making money. This kid is just like blowing me away. So much more motivated than I was when I was his age. All I wanted to do was play basketball, football, whatever. I did work though. I did work when I was like 16, I guess. All right, so let me just check out and see where he is. Make sure that he's where he's supposed to be. If you don't have it, Life 360 is a great application for your kids. You know, let them have a cell phone, but with the condition that they have to have Life 360 on it, so you can track your kids. I mean, there's other ways to do it, but you know, with Find My iPhone or whatever, it's on your account. Yeah, so he's there. Cool. And he's got a 45-minute break. Then he goes to a second job later this evening, Russian restaurant. Okay, NVIDIA is still drifting a bit lower. Hope everyone's having a good day. Uh, Okay, Microsoft looking for a higher low. Okay, New York Fangs are mixed, but looking okay. I'm sorry, I didn't mean to be on this screen. New York Fangs. Okay, we want to keep an eye on these because if the equal weight can continue to push higher and we have a bid in New York Fangs, that's good for the market. So always keep in mind this week in particular. Last week we started talking about this, that we need we have a razor thin edge as far as, you know, any bad news comes out, we can see the markets drop 1-2% easily. So we are keeping an eye on this and the equal weight index, along with the number of stocks trading above the 20-day. That gives us an idea of what to anticipate. So long as this continues to move higher, you can see in the far right screen, Okay, we're making higher highs, zoomed in. You can't see this right here in the smaller screen. But the number of stocks trading above the 20-day, we told you yesterday, this needs to see, we need to get a pivot. Okay, we got our first pivot. We got our first pivot. Okay, looks good. Okay. All right, it's 12 o'clock, so let me shift gears and go over and see who's manning the ship at CNBC. Okay. Okay, CRBS. What is that? CRBS. CRBS? What is that? What is that, Mondo? Is that a misspelling? CRBS? What is that? Okay. Okay. Let's see what Bitcoin looks like. BTC/USD. Oh, look at that. That's awful. Bitcoin, that's awful, awful, awful. Jeez. Okay, Bitcoin. Let me see. Do I have any on BITX? I think I sold that, didn't I? Pretty sure I sold that. No, I didn't. All right, so much for that. BITX. That one got blown up. BITX. Let's see. BITX. Okay. Yeah. There's any chance for this to work? It's going to have to bounce. Okay. What can I get for these? Yeah, they're pennies. Pennies. I have some calls on the BITX. I haven't been paying attention to those. It's not a big position, but it's still down. So it's still down. Everything else is up, so that looks good. Still looking for Intel to run back up. Okay, what's going on with my audio here? Audio. Let's see what they're talking about on CNBC. No. Stephanie. Okay, Oracle. If you like Oracle, now's the time.
If the $800 billion that the big four Mag 7 are going to spend this year, if it doesn't go to $1.6 trillion next year, because that's what
Oracle's turning.
If they scale back, then you have many different industries that are going to be.
Okay, so far looks good.
We are seeing growth. Companies are indicating they want even more to spend, right? So that's what today is all about. And that is still fueling a red hot economy. The economy is growing 3.5% because of that. But it's not
STM looking good. Apple's at the high. Apple. Let's see. Oracle's turning the corner. Oracle. Okay, Oracle just turned back above VWAP. This kind of move here smells of institutions. You need that kind of volume. So they're going to buy some more. We'll see. STM. All right, that had a nice little pop. STM.
Jensen Wong is saying about the 5-layer cake. It's real, and the numbers are real.
Speaking of some notable market voices talking about the AI trade and momentum.
Man, somebody animated Stephanie, huh?
The market momentum in an interview with our Scott Wapner just a short time ago at the CNBC CEO Council Summit. Here's what he had to say.
I worry about crowding in different markets, not just in overall markets, but in single name stocks where you see more crowding, more momentum trading than I've ever seen before. That being said, like when you step back and say, okay, these are the multiples I'm buying at, and I say, gosh, it's actually not that scary.
Right, again,
Rick Reeder talking about multiples not being that scary.
Council Summit. Brelsky, I'm going to come over to you on this one because Rick Reeder made a point. The multiples are I guess, benign or tolerable at this point, even though it seems like this trade, a lot of people seem to think it's just getting ahead of itself.
Well, I think he's also talking about PE to growth rates. If you take a look at PE to growth rates for the market, they're nowhere as extended, let's say, relative to what was in the late 90s, number one. I think in the early comments here, I think it's interesting to point out the return on investment comment. I think that's a really, really important thing. Our process for years has been looking at valuation, earnings, and then the operating performance of these companies. And all of that needs to sift through into return on equity, return on assets, return on invested capital. And I think not enough people are appreciating that. And I think that's what's really going to be exploding in 27 and 28. Exploding like we have never seen before. Tom Lee comes out with this big thing about the market's not going to see these returns that we've never seen in 2027.
All right. Inside day on Oracle and many stocks looking for dips to get bought. ARM Holdings still pushing higher.
We would be keeping some powder dry to move around some stocks. There's no way that the value index should be doing what it's doing, especially given the fact that Micron, by the way, Amazon's a 2% position in the Russell 1000 value. Is that a value stock? I would say no, it's not. So some of the indices I think are fallacies, and you can't just chase the indices right here. So we would say, yeah, we're bullish. Our 25 years.
Okay, do we get a dip enough to buy the S&P again? Okay.
Very similar to what we're hearing from Wells Fargo today. They go on
Okay.
to
STM. All right, TSM, Taiwan Semi at the highs, Taiwan Semi. Okay, Oracle looking good. Oracle turning the corner. Let's take a look at Oracle. NVIDIA. Okay, we got a lower low on NVIDIA, just a slightly lower low. RSI, a higher low. This probably going to be fine end of day. NVIDIA, Oracle. Okay, so you got oversold conditions at 10:30, a higher low at 11:05, 11:10, a higher low. Oracle, now we're starting to move. Oracle. Okay. If you don't use this setup, I would suggest taking a look at it and start to look at stocks that you've traded recently. Look at the 1-minute chart and see what it tells you, especially in a positive gamma environment. Okay, taking the risk on a positive gamma environment, buying the dip when you get the 1-minute oversold, and you got stochastics rising on the daily, and you got the 60-minute, you got the price above the 60-minute. Okay, when price is above the 60-minute 20 EMA, you look for these little dips to get bought and follow through. I mean, it's trending, certainly trending for the last few trading days. Oracle, last 4 trading days have been really nice. We got an inside day today. That's okay.
Basically disappear over the coming 4 or 5 quarters. I don't think any of us believe that's the case. So yes, the market feels a little bit overbought. Why is the momentum factor up nearly 35% quarter to date? I don't think enough people give a fair understanding to the dynamic change in market structure. Market structure is becoming more and more quantitatively driven. It is about algorithms, and it's about algorithms driving the marketplace, a lot of non-discretionary capital. And in that environment, momentum is prioritized. You're chasing price. That's the common denominator for all of those quantitative type.
Okay, Oracle still grinding higher, so is ARM. Looks good. Microsoft trying to turn higher lows on Microsoft. Poet trying to turn up. Chevron at the high of the day. Chevron. Okay, Apple.
And that's where there is value. So if you're looking for places, I don't think you want to chase technology.
Qualcomm. Let's see what Qualcomm looks like.
Look at financials. What they have done year to date. Look at materials. Look at discretionary. I mean, you have companies that are reporting really good earnings.
All right, Qualcomm looks pretty good. All right, here's Qualcomm. Qualcomm with the bounce. Okay, showing up on my scanner. Qualcomm. Showing up on my scanner. Qualcomm. Here's a number one. Qualcomm.
So you think the market rotates over the coming months versus a larger?
Okay, let me just let me update this and see what this is. Qualcomm. Looks good though. IWM. IWM. That is below. I want to look at the above. Wells Fargo. Wells Fargo. Okay, let me look at Wells Fargo. Wells Fargo was from this morning. Wells Fargo. Okay, Wells Fargo trying to get above the 50-day. The banks look really good, so I would definitely be dabbling in the banks if I were you. I don't know everybody's. Obviously, I don't know what your individual circumstances are. But all right, Microsoft's down. What I'm trying to find here is Morgan Stanley. Okay, Morgan Stanley. Okay, the bank's obviously on the move. Morgan Stanley. If you bought this a couple of weeks ago with me, we were looking at Morgan Stanley. The catalyst was the Tesla IPO, or not the Tesla, the SpaceX IPO. Same thing with Goldman Sachs. These two are the leaders. Citigroup this morning and Bank of America, we saw these two showing signs of a break higher. In addition to Wells Fargo. Wells Fargo coming off the low. Okay, Wells Fargo is probably going to catch up with these. You got a double bottom. You got a higher low, so you can put a stop underneath today's low. Look for a break above the 50-day soon, just based on what we're seeing from the whole group. KBE, the regionals, KRE. Okay, so stocks like Ozark should be moving higher. HBAN, Huntington Bank shares, Zion National Bank. Let's see. PACW. Are they still in business? PACW? I don't think so. PacWest Bank. What's the Bank of California? Bank of California. Let's see. Bank of America Bank Index, NASDAQ. That looks good. All right. Bank of California. Bank of California. It's Bank, BANC. Okay, that one's okay. Only reason I'm looking at the Bank of California is with all the bad news that's been coming out of California lately with the fraud and stuff. I'm just want to see what these. David Solomon talking here. All right, so Bank of New York Mellon. Bank of New York Mellon. Okay, Bank of New York. Bank of New York Mellon. BNY. Okay, that's grinding higher. All these banks look good. Banks look good. Get some banks.
There are a number of people that are talking about this, and I felt they weren't creating a constructive discussion about the gives and the gets and the balance. And I decided that it's an important discussion. There's a lot of change in the world that's happening very, very quickly.
publicly, and I thought it was important for Goldman Sachs, to weigh in, on some of that evolution. And so I don't believe that we're going to have massive structural.
MPC, you looking at, Corey? All right, looks good. Yeah, looks good. Looks good.
At a very, very quick pace. We're going to have to upskill people. The labor force is going to have to adjust. But I think it's important to really step back and understand the labor force, understand the construction of the labor force in the United States. When you think about these things,
MPC is a refiner, right? MPC.
one of the things that I stated very clearly in the op-ed is if the disruption gets to a place where it's very dislocating.
Generac. All right, so.
Government and business has a responsibility to work on policy to soften that, that journey.
Palantir.
As we get 10 years out, just as other technologies
Okay,
have
Intel.
disrupted, we will have
Working on a hammer. Intel working on a hammer. Palantir. Higher low. Hopefully. ARM holding, still going here. ARM, geez, ARM is just killing it. Super Micro, what's Super Micro doing? Super Micro, SMCI, Super Micro, still going. We bought this below the 200-day moving average. It bounced off the 21-day. The volume just keeps piling in here. Okay, Super Micro looking good.
So I'm glad I did it. The feedback I've got, first and foremost, and I was at a big meeting, private meeting of a large group of CEOs last week. People want to engage. They want to think about it. They want to talk about it. They don't like the doomsday narrative. They want a productive narrative about the goods and the bads and how we balance and how we move our economy forward, how we move our communities forward, how we move our society. And that's important.
Absolutely. And as we think about kind of upskilling, I think in historical technological cycles, upskilling was all about learning how to code and learning how to do things and go to college and all that. Now it feels like the skills that could be more valuable are skills where you use your hands and things like that. Do you buy into that notion? And have you seen as a leader of a very dynamic organization with lots of people and lots of different types
Super Micro, Wells Fargo, looking for that to follow through and break out. Wells Fargo. Let's look at the banks.
65% of all the jobs that are created in this country. This country is a very dynamic economy. For the last 25 years, on average, every year, we've created and destroyed 30 million jobs. 65% of all the jobs
Banks.
small and medium-sized enterprises, a lot of which
Okay, candle glands.
that has to do with people serving people. Okay, and that's not shifting, anytime very quickly. So we're
BMO.
talking about what's different.
Citi, CFG, Deutsche Bank, Goldman, Goldman outperforming.
25 to 30 years ago, as we opened up the global manufacturing economy, we dislocated a number of people, and I think there are a lot of things that we can learn, from those dislocations. Let's hope as there's change here, we find better ways, to manage through some of the dislocation that will come. But the economy is very nimble. New jobs are created. New skills develop, and people will evolve appropriately. And it's just not black and white. People want black and white answers. We were talking, in the back room there about writing as a career, and it's not going away. It's not going away. And so it's just not simple. It's much more nuanced. And I think the economy is dynamic. I think people are dynamic, and I think people, will adapt. But they need time. They need help. And it's our job to figure out, as that comes, how to operate. We shouldn't be so sure about how everything plays out. There are a lot of people that are very sure. I'm very unsure. But I think the direction of travel is going to be quite exciting and quite positive when you look at it holistically over a moderate to longer term period of time.
Yeah, one thing you mentioned in your op-ed is just because a job can be replaced doesn't mean
it will be. Doesn't mean it will be.
We've talked a little bit about the social impact of AI, but what about kind of beyond jobs? Large data center builders will say that it used to be the biggest hindrance was
Okay, banks look good.
an issue for them. Now it's permitting and going into these municipalities and facing some blowback from
Goldman Sachs. A lot of the big banks look good.
How do you
Wells Fargo.
shaping up amid this kind of
Well, like I mean, there are different issues, tucked in that. First of all, communities will wrestle with, the parameters of benefits and drawbacks to having, data centers in their communities, and it's different in different communities. That's been the case with all sorts of infrastructure over time, and that will evolve. The way it evolves. But the thing that I'd highlight, just when you talk about all this, that I know is true, whenever you have a technological acceleration, everybody anticipates, the journey as though it's a straight line in one direction compounding, and just the demand for the compute, it's just not going to go in the straight line that everybody's now currently projecting. And I think we have to be prepared for that to ebb and flow. Also, the technology will change. The productivity of the chips will change. The cost of manufacturing will change. The cost of distribution will change. And so, all of this is in the early stages, and there are going to be, more data centers for sure. I think that the implications for power infrastructure are real, and we're going to have to wrestle with that more, because certainly it can't increase, the cost of power and the cost of utility services to average Americans. That's not going to work.
All right, Wells Fargo looks like it wants to keep going. There goes Microsoft. Microsoft, we told you Microsoft would probably, we never want to guarantee that this setup is going to work, but most of the time it does. Okay, so we're starting to turn now. Microsoft, RSI, way oversold at the open. We made a lower low in price. Now we're starting to turn the corner. Okay, Microsoft's starting to turn the corner. NVIDIA is making new lower lows. Apple, Amazon, Google, Meta, those are off the highs of the day. Looking for these stocks that dipped to catch a bid.
How is it impacting corporation strategic decision making? The various trade-offs, any type of crowding out that you see?
Well, you've got two things going on. You have the infrastructure being built to supply the compute that ultimately has to be bought by enterprises, okay, to be used in their business. The one thing I know for sure is that enterprises broadly will go slower at that. They will be slower to change. They will be slower to adapt. And I think some of the customer, expectations. And one of the things you're seeing that just is important, these tokens are super expensive. So you saw the
All right, so I don't know why CNBC is spending so much time talking to David Solomon. I mean, he's not telling us anything really mind-boggling. Here goes Wells Fargo, about to go here. Wells Fargo. Okay, Wells Fargo looks like it wants to go. Wells Fargo breaking through this level. Okay, on volume. Okay, Palo Alto for earnings.
I sold the 330, 340 call version. Then I took that credit and used it to buy the 260. I got $35 below the market. I bought the 260 1-week put calendar, and I did that total package. Sold the call vertical, bought the put calendar for a dime credit. So no outlay, but there is risk. You have risk in the upside with the call vertical, but you don't have to lay out any money. And this is one of those spreads, Tom.
Okay, there goes Microsoft. Microsoft on the move. There goes Wells Fargo, turning back up. Wells Fargo.
Or works its way around this area, you're doing the whole package for a credit. And if it were to move way past that 260 strike.
Okay, Microsoft's starting to move now. Microsoft coming off the low. Okay, let me go to the 3-minute. Microsoft 3-minute. You can clearly see the RSI rising. RSI looking good. Watch Microsoft here. After a big move yesterday.
But let's break this down. It's a complex four-legged spread. So in the June 5th weekly options that expire in 3 days, he sold the 330 call, bought the 340 call, short $10 wide, neutral to bearish call vertical. And he paired that with a 1 week wide put calendar that's also bearish on this one. Buying the June 12th weekly 260 put, selling that same 260 put in the near term June 5th weekly options, 1 week wide bearish put calendar as a package. You can collect roughly about a 10-cent credit on this. If you collect that 10-cent credit, that's what you could make if the stock maybe goes all the way down below 230, right? You collect a credit.
All right, Microsoft starting to turn.
Below the break even of $330.10. So anything below $330.10 is profitability on this one. But you can see here from the risk profile where Kevin did the 1 week wide put calendar is where the apex of profitability is on that. And why are you collecting a credit on a trade like this? Well, you're selling a call vertical to the upside. That gives you a credit. That's offsetting the cost of buying that 1 week wide put calendar at the 260 strike on this one. And that break even of $330.
Okay, let me run a scan here. Let me just shift gears, go to Wells Fargo. Wells Fargo. I'm just going to run a scan real quick. Let's run a scan of scan. Where are you? There you are. Scans.
But that's all the way above the 340 level, which would be a fresh all-time high on this stock. You do have some assignment risk on that short 260 put that you sold in the calendar on this also, so keep that in mind over the next
run the
3
scan.
days.
Nothing on there. Okay.
Neutral to bearish type of position here where you've got that, hey, if the stock doesn't do anything, you're profitable. If it moves down towards 260, that's where you're the most profitable. But what you don't want it to do is move more than that 1 standard deviation move to the upside, get above that 340 level. That's where you have max loss on this type of position. Kevin, you mentioned it, or I mentioned it, the fact that, hey, even though the stock's parabolic to the upside, the RSI is overbought, I looked at a strategy that is a little bit more conservative, but taking a directional bias, taking advantage of the 100% IV percentile rank on this name going into the report. Implied volatility levels in the near-term options really elevated. So I went to the June 5th weekly cycle here, Kev, that expires in just 3 days. And I'm going to sell the 270 put. That's out of the money by about $25 to the downside. And then against that, to make it risk defined, buy the 250 strike put, short $20 wide, neutral to bullish put vertical, collecting roughly about $5 credit. Stocks moved a little bit higher, so probably trading closer to 4.5 at this point. But the credit you collect is what you can potentially profit. So if you collect a $5 credit, $500 is what you can make with $1,500 in risk. So you've got a lot of risk on this one. But your break even goes down to $265. It's about $30 below the current share price. So, Kevin, using those probabilities on a directional bias trade and taking advantage of the higher implied volatility on this short put vertical.
Yeah, Tom's given himself the ability to be profitable in 3 of the 4 scenarios. Unchanged, he's profitable. On the upside, he's obviously profitable. Even on the downside, as long as it doesn't breach that 270 strike. And really, his break even is 265. It'd be the short put minus whatever credit you take in. If it's $5, that means your break even is 265.
Applied Optical. All right, Applied Optical Electronics continues today, day 2, AAOI.
This is one of those both trades are risk defined. Even one as complex as mine has still defined risk on it, Diane. Tom's, if you notice, both of them, the middle of Tom's put vertical is that.
Okay, Microsoft's still pushing here. Microsoft turning the corner. Okay. Microsoft. Okay, Meta's at the high of the day, high of the noon session. Okay. Oh, they're still talking to this guy?
You're going to see more shifts in consumer behavior because at the end of the day, consumers, 14% of their wallet approximately, force choices that will filter through the economy. Also, the supply chain
pressures because you think about the way energy gets into supply chains, that increases prices on things that are made, and that has to go through. And my own view, the capacity to keep passing that through is limited. And so you'll see that in that context. So I'm watching that. You can see some economic data in the next 6 months that shifts the sentiment and that changes the balance in all this. But for the moment, that's not coming through.
Yeah, I was going to ask you what you saw as the biggest risk.
And that's our Leslie Picker interviewing Goldman Sachs CEO David Solomon at the Economic Club of New York. We're going to continue to watch that. We're going to bring you more headlines from that discussion that they're having as warranted. I want to come back to the panel here. By the way, David Solomon mentioned a lot to unpack. He mentioned the private CEO meeting he was in. I was actually there myself as the business counsel. So the conversations were off the record, but I can tell you he's very optimistic about AI and the worker. But as you heard right there, he does have some questions about the spend when it comes to AI. And Steph, I want to come over to you. He, in his op-ed, he said in part, the historical pattern is clear. The U.S. economy can adapt to advances in tech. But what's also clear is that Stark forecasts, even by the most brilliant minds, often miss their mark. Now, he uses Stark there. Can also the most optimistic forecasts miss the mark? He talks about cable during the dot-com boom, and it ended up turning into a wireless revolution, not a cable revolution. Is that something we should be thinking about, at least in the back of our mind? I know how optimistic you are as well.
Well, I go back to the whole food chain thing, right? And if we see $800 billion in spend this year from the big four, and maybe it's not $1.6 trillion next year, let's just call it flat. You still don't have enough data centers. You have only 11,400 data centers in the world. You need at least 30,000 data centers. It costs $45 billion to make 1 gigawatt data center, including all the stuff that goes inside it, to the land and everything else. And then we don't have an updated grid. You know this more than I in terms of the grid being so old and not utilized the way we need it to. And then power. So there's just so many pieces here. Are the numbers going to be accurate? Maybe not, but the direction is going to be important in my mind. And I just don't see any indication. I don't hear any indication from any of the spenders that they're going to change their mind. It makes me a little uncomfortable for sure, but I mean, you got to just follow what they're doing. And what they're doing is they're actually increasing more dollars.
We got to go, but Joe, I want to give you one quick word. These David Solomon's words. He said there could be something that could change the lens and how we do this investment. Do you see anything like that coming up on the horizon?
Microsoft rolling over a bit.
Basically, the feeling that everyone in the financial services industry has. We're very optimistic about the environment currently. It's being supported with solid evidence in the earnings growth. We're seeing monetization in the CapEx spend. If you look at Google Cloud, their growth. If you look at AWS, the growth you're seeing there. But we also understand that it does feel exuberant. We understand, and I think what investors and the viewers really have to kind of wrap their heads around is you make the most money in the most intense momentum periods of a cycle, and that's what we're in right now. No one can time the end. The end is ultimately going to come, whether it comes relatively soon or later into 2027, it's going to come. But I think that you have to also have comfort in knowing when it arrives, there are enough indicators that will allow you to take action and hedge out your portfolio at that time. It's not like you're going to wake up one morning and the market's going to be down 40% and you can do nothing about it. You'll know when it arrives and you'll be able to take action on it.
Just to quote David Solomon, more greed than fear in the market. We're going to talk more about that. But coming up, we're also tracking the trades and the committee moves from Joe and from Brian. We're halftime. Back in just 2 minutes.
All right, looks like this is going to go. Axon looks like it's ready to go. Axon looks angry. Axon. Okay, let's see what this guy's talking about. All right, Microsoft just rolled over. All right, Microsoft just rolled over a little bit there. No follow through. Okay, Axon, the 60-minute looking very strong. Axon. Looking good. Axon. Nokia. Nokia. Making a new high, Nokia.
U.S. passengers who were aboard the cruise ship hit by hantavirus have returned to their home states following 3 weeks of monitoring at the National Quarantine Unit in Nebraska. Officials say the passengers will continue to be monitored for the next 21 days by local and state public health departments. 13 passengers remain under observation in Nebraska. And Congress is asking NFL Commissioner Roger Goodell to testify about the league's broadcasting deals at a hearing on June 10th. House Judiciary Chairman Jim Jordan said they would examine how antitrust exemption created by the Sports Broadcasting Act of 1961 has been used.
GLW, nice bounce.
It comes after the DOJ launched
AAOI, nice bounce. LITE, nice bounce.
Thank you very much. All right, we're back with some committee moves. Joe, coming over to you. You made some buys, you made some sells.
I did. So basically, there's price stops and then there's time stops. And when you're buying stocks that are in a downtrend, and I think we could all agree that Uber and Netflix are in a sideways to lower type of downtrend. If you look at Uber over the last 24 months, the stock is only up 4%. If you look at Netflix over the last 18 months, it's basically running in place. Now, these are both companies that we know fundamentally we believe in the growth opportunity and we believe in the future. But when you buy stocks that are sideways to lower, you have to give yourself a time stop, not just a price stop. And that's what I did here. I gave myself 1 month. I said, let's see where I am after my purchases, which were post earnings for both of these individual equity names. Let's see where I am 30 days later. Well, guess what? I'm down on both. So you are time stopped out of that trade because it is not going anywhere. It's not proving itself in a momentum market, in a higher S&P market to want to participate. You have to take the funds in this type of market and allocate it to where you see the performance. And the two names that I purchased are Twilio, software name that has worked remarkably well, benefiting from agentic AI, touching messaging and voice, and then Generac, which is now participating in the AI power story.
Sorry about that. I'm sure that didn't sound good. Headset just fell off my head. Twisted the wrong way. All right, so let's see. Let's get rid of some of these. Too many open tabs.
We owned a stock called Raw Stores for a long time. Ross has gotten up there in terms of market cap. So what we've done in our SMID across the board, and we're talking about consumer in particular, is taken some SMID, some market cap out of Ross and bought 2 stocks, Dick's Sporting Goods, because we believe that the integration of Foot Locker is working. We believe it's a fantastic retailer, and it's done a really great job. Academy Sports and Outdoors is a smaller cap name in Texas. We're playing on the leisure camp, and we really believe that company has some earnings power going forward.
By the way, worked at a Ross when I was in college. Stephanie Lane, coming over to you. You own Dick's Sporting Goods. What do you think about Ryan's move here, kind of getting into the name and seeing opportunities there? It's kind of interesting. Both of his names kind of a sports theme there.
Yeah, I mean, Dick's is very well run, and they're seeing the results. I mean,
All right, Meta's trying to push a bit more. Meta, Wells Fargo pushing. Wells Fargo still trying to push through that 50-day.
Which is helping Foot Locker, which is going to lead to better sales. They're seeing double-digit growth in this new concept, which they're going to build out for back to school. So 15 times forward estimates, it's up about 9% in the year. I mean, I just don't understand why it's not acting better, and I think it will. By the way, they did have weaker gross margins, but I think that that's this heavy investment in the World Cup as well as in Foot Locker. Second half, I think, skews much higher.
Yeah, Dick's up about 0.5% right now. All right, we've got a few more moves to get to, but first we're bringing our Mike Santoli to join us with this midday word. Halftime's back in just 2 minutes.
SWMR.
DXST. DSPC.
SBCO. CRCL.
DXST.
LASE. SBCO. CRCG.
All right, Wells Fargo. Banks are doing well.
CRCA.
DXST.
Banks are doing very well today. All right, so Wells Fargo looks good. All right, what happened with Microsoft? What are you doing, Microsoft? Shaking people out? Taking a break for a few days? That's why you have to have options that are further out in time when you get these little shakeouts. We are 10 weeks up, though. That's the only issue that I have right now. Is any catalyst could come across the tape at any moment and knock the stuffing out of the markets. I don't expect the markets to drop off a lot, only because we got so much positive gamma, okay? There's so much positive gamma, it's going to be difficult for the markets to drop substantially. And if you look out into the future, if you look out the way options are positioned into the future, you can see all this purple below, all right? See all this purple? All of this down here below 7,500. That looks good. I don't know. This looks supportive to me. Options into the future. Where's 75? Put wall is right there. 70. About 75.70 or so. 75.70.
Joining us for his midday word. Mike, looking at the markets once again, on pace to hit new record highs. The chip stocks are surging. Is this a bit too much of a good thing? Is this something we should be worried about, all this euphoria in the market?
I think too much of a good thing is the thing to keep in mind that it is possible
right? To actually sort of overplay one's hand in aggregate in terms of what's going well. Part of that, of course, is semiconductor leadership. Always good to see. It's always a thing that confirms a bull market. But obviously, the idea that it can be pushed, beyond the normal limits and short-term performance, you have to keep that in mind. Even the earnings story, I think, as much as it's true that this move since, especially the last 6 months, has come with valuations coming down because earnings are rising faster than stock prices at the index level. That's a positive thing. But we should also keep in mind that historically, when earnings growth is greater than 20% annualized, as it's on track to be, you've actually had subpar returns for the S&P if you're not coming out of a recession.
Where are we right now? S&P.
That we all recognize the good
S&P currently.
The market action is very alarming. I mean, Bitcoin down, software that bounce fading a little bit. Consumer
S&P.
That's been the case.
We're currently 76.10.
Of how what you're relying on to keep the market incrementally moving toward these records, as most stocks, frankly, have not been able to perform very well.
All right, by the way, our Ollie Rennick's coming up with more on that cryptocurrency trade. Mike Santoli with his midday word. Mike, it is always good to see you. Thank you very much. All right, coming up next, more committee moves. Our Brian Belsky's ready with 2 more trades now in the travel space. We're back right after this.
All right, so lots of positive gamma.
LASE. NYND.
LASE.
LASE.
Okay.
Lyrics all the way down to structures and songs and scales, because these are things that I don't think about as a musician sometimes. I want to see the different options of how I can use that verse. And AI was a great thing.
What do you want this current generation? What do you want them to take away from each album? What are the messages?
Man, this new album is, I would say, motivated for context and content. Because I wanted to bring music back that actually had substance. You know what I mean? Like a lot of records that you hear today, you hear it, but then you move on to the next record, you don't remember it.
Doesn't leave an impression.
Yeah, so I really want, when you listen to the music, it has something that touches you within your life that you can apply it to. And those are the things that I think always reflected with my records. I will always spoke and wrote about what I personally went through, and just prayed that other people was dealing with it and utilized my music as a way of kind of a solution to whatever the issues are, or maybe even an answer to it. So this album is kind of that, because I feel like a lot of us, we lost our way spiritually and like personally, because we've been distracted by so much. You know what I mean? So I really want to be able to take a record or two out of that album that hopefully can be attached to somebody's life that they can utilize in their life. Just thought
Who's pushed you to create music through the years?
Man, it was my fans, believe it or not. My last official studio album was 2008.
2008?
2008, bro. Can you believe that?
No, I can't.
I was like, what? But because the fans were so engaging and they were so loyal and like supportive, they kept me on the forefront of everything the whole time, to where I even forgot that I ain't put out a record. You know what I mean? Like, I literally forgot that it's been that long since I put out an official studio album.
Why? You just stopped? Or you just
I've been doing so many other things that music attracted, and then the music attracted so much other business that I still incorporated my music in that business, to the point where my music was always in front of me and a part of me, and the fans was always engaging with me. And it felt like we've been part of so many things that's been happening that we've been attacking our.
All right, welcome back. Let's get some more committee moves. And Brian, I know I said earlier you did some moves in the consumer space. Well, here's 2 more. You bought American Airlines and also Hyatt Hotels.
I did. I've owned both those names in the past. We have the very good fortune, again, of running a U.S. SMID portfolio. And what we've tried to do here, and we made a bunch of changes this month to show that, is we want to increase the names that we own. We want to increase the names that we own, number one, and then take our overall market cap down. And the reason is that I think I'm a believer in the spreading out. I believe that broadening out trade. I'm a believer that the earnings power of these small cap stocks are not being appreciated. What's really interesting about both these companies, okay, so we graduated our Hilton holdings to our dividend growth portfolio. We went for a one-for-one swap from Hilton to Hyatt. Hyatt's been a massive performer within the hotel space. I think it's actually under-owned by institutions. But from a perspective of where travelers are going, Hyatt makes a lot of sense. Now on American Airlines, I look back at my career like, man, I own 3 airlines: United, American, and Delta. I've owned for 10 years. Now Delta by far is the creme de la creme, and I think Joe owns it as well. But United has been on a tear. And United during the month of May had this great move. So we used it. This is portfolio management. We used the position increase in United and gave it to American to diversify out. Now, the other interesting thing is on both these companies, they're exactly a quarter the size of the 2 names that we replaced them. So American's a quarter the size of United, and Hyatt's a quarter the size of Hilton. So we're getting smaller, and we're liking companies. We want to own more companies. So small caps.
Really quick, it's yes or no. Are you buying American with the thought they might get acquired by United and the share price goes up?
No, I think American could go on its own, number one. And I think given the strife that we've seen in the airline business the last year or so, especially with Spirit and some of the other things, I think American can make it go on its own.
Joe, you do own Delta. You're taking on some of his moves here, specifically the airline.
Well, if I could, I want to touch on the hotels. The airline trade is a strong trade right now. But Hyatt, what's interesting, Steph said this to me in the commercial break. Why don't you think Netflix is moving higher? Maybe too many people own it. And sentiment is important to measure, both when stocks are going down and you have analyst rating near 90%. And then when stocks are 52 weeks highs like Hyatt, and no one is recognizing it, no one's believing it. So only 54% of the analyst community have a buy rating on Hyatt. It's like very sneakily, Hyatt's at a 52-week high. You can make the same argument for Marriott. Near a 52-week high, only 44% of the analyst community have a buy rating.
Hyatt up 2.5%. Up next, options action. Oliver Rennick, as mentioned, is standing by with the check-in on the crypto trade as Bitcoin hits its lowest level in 2 months. Ollie's got a lot more. Stay with us.
All right, so I just posted something on Markov chains. If you're, into the market, there goes Apple. Apple going. Apple's going. I don't know what's up with Apple, but it's definitely on the move. Apple looking very strong, trying to break out. Lots of volume here. Look at the volume this morning. Look at the volume dispersed across the 5-minute chart or whatever. Look at the volume. I mean, it keeps coming in. Lots of volume keeps coming in. All right, now we just broke out. Apple broke out. About to take out and about to take out. New all-time high. All right. Look at Apple. Damn it, Apple. Just keeps going. Apple keeps going. Still going. Somebody's up. Lots of volume there, Apple. Apple going. Apple's gone.
Hey, Frank, crypto bulls looking nervous, and options are an indicator. Bitcoin's a relative strength next to stocks peaked last July, and that spread is now widened to more than 70 percentage points. This latest sell-off is extra painful, though, because it's happening while the software sector is rebounding back into a bull market. After all, crypto is software, and at the start of this year, the two were trading in sync. Not anymore. Here's what we see.
Microsoft turning off the little Apple breaking out. Jeez. Check the volume. Apple.
And more calls selling than call buying. In Coinbase, calls were popular, but 3 times more were sold than bought. And in Michael Saylor's strategy, MSTR, more than twice as many puts were bought than calls. And the most popular contract right now is currently the 130 strike put, expiring Friday. That's looking for about a 6% sell-off to break even, Frank.
Oliver Rennick down at the SIBO. Thank you very much. Steph, want to come over to you. You own Coinbase. Just
Let's get it, Mondo. Let's get it.
some of the sentiment that seems to be around not only crypto, but crypto-related stuff.
Well, I'm surprised that it hasn't rebounded with software because it is correlated, especially the unprofitable software names. So it's kind of strange action. Look, I own this thing for the long term. I don't know what the price of Bitcoin is going to do on a day-to-day basis, but I do know the exchanges benefit from having a buyer and a seller, and that
Holy smokes.
also expanding their offering and also doing a really good job of investing for future growth. So it's a small position. I like it for the long term. I kind of set it and forget it. We'll see what happens in a couple of years.
All right, today, Coinbase down about 4 1/3%. Stay with us. Final trades. They are coming up right after this.
Okay, Apple gone. Apple, Microsoft, little dip there. Whew. Holy smokes. Look at Apple go. Tesla turning back up. Okay, Tesla looking good. Wow, look at Apple. That's impressive. Yikes. Look at that volume. Look at that opening. You see that opening candle over there? Check that opening candle. Beautiful. All right, the 200 days over there. 200 day, 50 day, 921 up and to the right. Is Apple going to announce something? Sure acting like it. Sure is acting like it. I wish we could get NVIDIA to turn.
JC may res in 10 seconds. SO. Be halted.
And we are back on final trades. Brian Belsky, you're up first. Eversource is a play on AI, the power grid, almost a 5% dividend yield. Stephanie Lane.
I continue to like Alcoa. It's a fairly new position for me. I think the demand growth is going to be 40% between now and 2030. These guys are the winners.
The Alcoa shares up almost 6%. Jeremy, you get the last word.
Stephanie could provide the fundamental reasoning why I'm suggesting Starbucks. From a technical perspective, we have a nice pullback here into the support of moving averages. Use the 200-day as your stop at 91.
Starbucks up over 1% as well. Quick check in the markets before we let you go. In the green across the board right now. Looks like we're on pace for more record closes, and that does it for halftime. The exchange starts right now.
Thank you very much, Frank. AI headlines are very much dominating the market again today with a surprise capital raise, the next trillion-dollar contender, and Bitcoin has very much moved to the back burner. Welcome to the exchange. I'm Kelly Evans. New highs, as you can see there, for the Dow and the S&P today. Everything is positive. The S&P is on track for its 9th straight positive session, in fact. The semi-stocks continue to outperform, with Marvell the notable standout of 30% today. We'll have more on why ahead. Similar story for the hardware space. HPE soaring 16% after its earnings last night, and new all-time highs for the memory names once again.
Can you imagine if Palo Alto blows it out?
Seagate and Western Digital. All of this.
Whew, Apple's still going here.
Google's parent company announcing an $80 billion capital raise, one of the largest equity deals of all time, in part to fund its AI build-out. The stock is only down 2.25% right now. So that's where we begin. Joining us in today's opening exchange, Rohit Kulkarni, who's Roth Senior Research Analyst, and Laura Martin, who's a Senior Analyst over at Needham. It's great to have you both here just to kind of hear.
Wow, Apple just taking off to the races, huh?
Size and scale of this, and why do you think they did equity, Rohit, instead of debt?
Hey, thanks for having me. I think back in February they did a 100-year bond. Probably wanted to be a little bit conservative here and go not affect any further credit rating risk. So go for an equity raise, which was quite remarkable. I think the clear message from them is AI compute demand is not linear; it's going parabolic. And more importantly, I think from their standpoint, the internal hurdle rate of return that they're seeing is very attractive and getting even.
All right, what's XME doing? I have some flies on XME. XME, very nice.
Right, to have 10 billion of that coming from Berkshire is, I think, to many a gold seal of approval. It suggests that they believe that the internal rate of return you're talking about is going to be incredible, and that it's worth that extra. And as I understand it, part of this is going to cover the tax bill for stock options and that sort of thing. Is that right?
That's what they seem to have indicated. But again, I feel that there's a bigger picture here. I think tax bill and tax options is just a small part of the equation. I think the bigger thing is that for the first time since the IPO, or probably the second time this company has raised equity, I think there's a opportunity cost of capital that's extremely high, in my opinion, and that's why they went to equity as well.
Yeah, only the second time they've ever raised equity. I mean, it's incredible to think about the first time being the IPO, like you said. Laura, what does it tell you?
So 3 key takeaways. First, the access to capital is becoming a competitive advantage for these hyperscalers, and it makes it really hard for people like OpenAI to compete when basically Anthropic and Google will pay any price for energy, for compute, for back office, and they have the capacity to raise the money. So that's the first thing. Second thing is all of our estimates are too low for CapEx. What this tells us, since they did equity first, is they're going to do debt on top of this, and they're going to raise their $185 billion CapEx, not only this year, but I think it's going to be higher next year when many of us had the CapEx spending going down next year. That's going to end up being wrong. And the third thing is the government. Like, we have the FCC focusing on taking ABC's broadcaster away. Meanwhile, Google is hitting $5 trillion, and it's about to double if these bets on Gen AI are correct. And the government has no regulatory authority over these giants that are about to take over the world and retool the global economy. So the government's totally focused on the broadcasters, which are 50 years old, and they're not focused on these things that really are about to dominate commerce.
So Laura, that point that you made about the implications for OpenAI are super interesting. I mean, OpenAI is about to go with this mega IPO, and maybe it's not until the fall. Google, meanwhile, is just turning around, snapping its fingers, collecting $80 billion. The current equity investors are barely sneezing at it. How do you compete with that?
Very hard, especially because one of the things that feeds LLMs like Gemini is data. And between YouTube and Google search and AI answers, they really have a leg up on data, similar to Amazon. Amazon also has excellent data, but you sort of need data to feed your LLMs, and then you need to be able to build sort of the back office infrastructure and pay. We're in an arms race, and these guys can basically pay anything. And so that becomes harder for companies that cannot keep up. It becomes a moat, an additional moat in the next 3 years.
Absolutely. Rohit, do you agree with that?
I would take that there is a very fierce battle for owning the frontier model, and there is a very high price for that. And so far, Anthropic and OpenAI, so far what we've seen year to date, seem to be outperforming the likes of Facebook and Google. Google and Facebook, as Laura said, I agree that they have tremendous amount of data, they have fantastic distribution. But what we have seen so far, objectively speaking, the private companies are outperforming from innovation and research standpoint and the quality of frontier models.
Well, since you raised it, maybe my team in the back can pull up this quote now. We're going to talk about this a little bit later on, but maybe this is the right place to do it. This was a comment from Michael Sembalist from JP Morgan that he made a couple of months back on a podcast, but to the point that the market is starting to differentiate.
Apple. Okay, we're starting to flag out now at the highs. Okay, making a new high here, Apple.
It depends on who you're talking about. He said, when I hear Google's explanation for their CapEx, it makes sense. When I hear Meta's, it doesn't. Here's the whole quote from the podcast. He said, whenever I see Google explain what they're doing, it makes perfect sense to me. Again, this was in April, before today's announcement. Whenever I listen to Meta saying what they're doing, it doesn't. As he notes, Meta is spending 70 to 80% of its revenues on capital spending, which is a number that's unheard of in the entire history of corporate finance. So, Rohit, do you mention Meta as well in order to draw the contrast between what you see in these two companies' fortunes?
I think Meta wants to own the frontier model because they have the largest distribution. They have 4 billion users using the apps on a daily basis. They have almost 20 million businesses using their ad platform on a daily basis. So I think they have a lot to gain and also a lot to do. So they're betting the house over here. And if you objectively look at the last 18 months, Meta is one of the best proxy for return on AI spend, when their revenue growth went from 20% to 30% over the last 18 months. The next 18 months remains to be seen. That's why the stock is under pressure and people don't have the creativity and the outlook.
Okay, Apple.
Have a high conviction that Meta is the stock to own. We believe so, and we should buy Meta here.
You still believe it is. It's down 8% year to date, Laura. It's only up 30% in the past 2 years. And they are literally Meta again,
Apple.
betting the farm. How would you contrast what you see in terms of Meta's bet and the way that it's approaching this versus the way that Google's approaching it?
Right. So the first key point we have to make is Meta's CEO is really fast, and he's not an idiot, and he thinks that generative AI is the future, and he's betting the farm on that. Okay, great. He's also going to go consumer first. He's laying off people. We just did the numbers this morning. His total employee count is down 8% since 2022, and as you know, he's about to lay off.
All right, Apple's still going here.
So he has the ability to act fast. He believes, like Google does, that AI is the future, and he's accelerating his revenue growth at the same time he's cutting full-time equivalents, replacing equivalents with technology. So the question is whether he can keep up. If capital becomes a moat, can he raise as much capital as he needs? He's got the data. Probably a smart idea for him would be to go and do a JV with OpenAI after it's public, where he supplies data and he puts his financial resources together with somebody else so they both win together. I am not sure even if either of them can win separately, because OpenAI doesn't have the data flow, and I'm not sure Meta's big enough to compete with Google and Amazon and Anthropic in terms of access to capital.
And Laura, I like the way that you said that. And kind of the last question back and forth of both of you is, we used to talk about the Mag 7, and this playbook needs to be completely rewritten, don't you think? Especially once these private companies go public. The new Mag 7 to you, Laura, is what?
Anthropic for sure. OpenAI, I prefer to see OpenAI to combine with Meta, but let's assume that's two companies. I'd still put Meta in that. I would definitely put Amazon because of the data and because they are good with physical plant and a big chart here is getting the physical data centers built and not running out of memory or energy. And Amazon is best in class at that, better than Google.
So you would have Anthropic. You'd like to see maybe a partnership with OpenAI, but it's on the list. Amazon, you've got Google on the list, presumably. I mean, who else do we talk about? NVIDIA. That's a different story. Does Tesla become SpaceX?
I don't know. Don't cover Tesla. I'll stay away from that answer.
Yeah, understood. Rohit, what would your kind of new Mag 7 as taking this Google announcement, looking at the diverging fortunes between the old Mag 7 and the new players who are coming on the field? Who do you think should be the new kind of leaders atop that list?
I would say from the top, NVIDIA, then Google, probably Microsoft, Amazon, Meta, and then Anthropic. And that would be the top of the my list. We are forgetting other hardware companies like Broadcom that are building a bigger business based on what we hear from Google. So that would be how I would put it.
All right, and a quick final follow-up on that. You did put Microsoft in almost, I think, the third position, if I caught that. I'm curious why.
Microsoft does have a lot of distribution mechanisms, although they have been caught between the sentiment turning positive to negative towards OpenAI. I feel over the medium to longer term, they have a software business, and once they start taking the right direction, probably Microsoft is the one will start to gain some positive sentiment.
We'll see if Microsoft Build can help with that. That's underway right now. Really appreciate both of you joining to not only talk about that news, but put it in some perspective. Appreciate it very much. Rohit Kulkarni and Laura Martin. Meantime, check out shares of Marvell. They're trying to make the Mag 7 on their own here, up 29% after NVIDIA CEO Jensen Huang said they could become the next company in the $1 trillion club. And our next guest owns it. Vince LaRusso is the CEO of Cloud Capital Partners. Vince, welcome. Is this Jensen making an AI prediction or speaking about the importance of the AI companies that NVIDIA's success will rely on?
Yeah, hi Kelly. Thanks for having me. We think that overall you have this spending capacity into AI that touches just about everything. I mean, it's just really hard to think about an area of the AI infrastructure that does not need more supply, which means more funding, more money. And clearly what NVIDIA and Jensen is signaling there is that, first of all, Marvell is an important partner to NVIDIA, right? Not a rival in the GPU space, but somebody who's able to deliver the custom silicon that's needed and help with the networking and connectivity and the speeds. And, there's just going to be a proliferation of companies that are going to benefit from an extreme shortage. It's a CapEx cycle, maybe like the world has never seen. And the companies that are hyperscalers or the leaders of the semiconductor arena like NVIDIA, the perfect example, they're going to be spending just hundreds of billions, potentially trillions of dollars to build this out. And a player like Marvell is a partner to that build out, and they're going to benefit.
They were a smaller market cap when people were first looking at the kind of, what do they call them, the custom silicon providers or what have you. That was a year or two ago. They very, very quickly started to catch up. So at what point, Vince, does this you become, you have to think about this from your portfolio point of view. At what point do you want to take those gains and walk away, or do you just stay in this because do you feel like you have clarity on how long this AI build out is going to continue to ramp, or are you just going to wait until you know for sure that it's not ramping anymore?
Yeah, that's a great question, and that's what makes us active managers, right? Constantly evaluating.
All right, Microsoft. Okay, Microsoft a little shaky there. Shaking people out. Microsoft. It's a doji spinning top kind of day, so I'm not that surprised. But it is shaking people out nonetheless. RSI still rising. Oracle did push back up. It is an inside day for Oracle as well, so they're taking a break. It looks like. Okay, so it looks like we're taking a break in software. That's okay. Wouldn't mind seeing this close the gap a little bit. Mark this a bit higher. Microsoft. Okay.
Position sizing. It's thinking about how we can rebalance the portfolio into names that haven't moved as far. It's thinking about diversifying our position base, and specifically with CPLS, which is a long short ETF that I manage, we have a short book to help manage some of that volatility.
Yeah, I'd love
So
to know
I
what's
think
in
I'll
it.
give you that's pretty.
I don't know if you
a little bit of both.
Can you talk about what's in the short book? They usually don't like that very much.
Yeah, so our short book, CBLS, typically runs a net exposure about 30 to 70%, and we do disclose the holdings every day at cloudcapital.com, so folks can see exactly what we're short. But I would say, in aggregate, some of the software names, we do think there will be some dislocation and displacement from AI. I don't think all software is at risk, and some of the usage-based networking, type companies may benefit if it's kind of more of like a metered software offering. We actually are inclined to like some of those names. But if you're a user-based software company that might get dislocated by AI, those are short positions for us. Also, some of the private credit companies we think are at a little bit of risk here. And then we think about that K-shaped economy in which consumers are getting stretched more by gas prices, despite this, enormous flow of capital and the bull market within tech and AI and semis and beyond. We do recognize that some of the consumers here are a little bit more stretched. So we're finding some short opportunities in that cohort.
That makes a lot of sense. And if I could kind of summarize it, I'd say that you're very much playing the AI narrative all the way out, including, yes, it will displace certain software companies. Yes, this is all going to have that impact on private credit and the fallout. So just a couple of the names that you do like. A lot of our audience is already in these and familiar with them, but there might be a few that they're not. I'm just going to rattle them off. TSMC, LEM, KLA, obviously we've talked about Micron, Marvell. Monolithic Power is another one that you've mentioned. You've also got Vertiv. We just had Dave Cody on yesterday. Corning, Celestica, Solaris Energy Infrastructure, GE Vernova, Bloom Constellation. You do also have Freeport and Southern Copper, so there's a copper play there as well. Which others would you like to mention, or perhaps, are there still some that are less, the narrative's a little bit less well known, but you think they could be the next to put up, mega gains?
I think that the sampling of stocks that you just mentioned there, Kelly, it really does run the gamut, right? From the infrastructure, the energy, mineral, materials names like copper and natural gas player like Solaris, right into who's building the data centers, who's going to power them. I think of like a Monolithic Power, because I think within the shortage discussion, right, it starts out with semiconductor chips and then, GPUs and then CPUs and then memory needs.
All right. Tesla trying to take the high again. Microsoft still pushing higher. Apple at the high of the day. All right. These stocks are probably going to go back and forth. NVIDIA, it'd be nice to see NVIDIA catch a bid. And Oracle inside day. So it looks like we're going to have a stalemate today. So we just see a doji. I think up-down volume is still 1-to-1. Let me go check. Yeah, it's still 1-to-1.
Especially in this market.
All right, Vince, thanks. Good to see you again.
Likewise.
Vince LaRusso with Cloud Capital Partners. Coming up, he just mentioned it, but that software rally taking a breather after its best 3-day performance since 2001. Our next guest called the bottom back in April. We'll check back in with him now. Plus, Steeple CEO Ron Kruszewski is here with his take on the AI build-out. Rising debt levels, we've got Alphabet's equity raise and the upcoming IPOs. Is it all investing for growth or creating fragilities in the financial system? We'll ask Ron coming up after this.
Okay, S&P. Let's see what the S&P looks like. S&P 500. Okay, spinning top, doji. 10 weeks up. Man, I didn't think we're going to get up here for 10 weeks. That's crazy. First thing you're going to notice is intraday swings are going to start becoming wider. That'll be the change that we need to see. If we're going to pull back, we need to see intraday ranges changing. It's expanding. So we got 75, 80. So basically 40 points. We've got a 40-point range, okay? So if we start to see 50-point ranges, 60-point ranges, and you can also track that on your options chain. If you look at the S&P 500 and just go to next week and you look at the expected move, that can tell you a lot, okay? So if you've been watching if you look at the watch list, by the way, watch list, at the very top of the watch list, you can see where it says contracting Okay. That doesn't usually lead to a big move. So it's a more setup for, to keep doing the same thing that we're doing. Netflix turning up. Okay, so
Welcome back. The software rally taking a little breather today with the IGV down about 3%, but it is coming off its best three-day run since October of 2001. Our next guest called the bottom back in April. Jonathan Krinsky is the chief market technician at BTIG. Jonathan, we just heard Vince over at Cloud Capital a few moments ago telling us he's still a little bit cautious about the software names, especially those that are user-based. Well, what are your thoughts on this rally?
Hey, Kelly. So, yeah, I think, it all kicked off back in April when I had that false breakdown. And we said from false moves come fast moves in opposite directions. And we've certainly seen that. I think it may surprise a lot of people to note that from April 13th through yesterday's close, the IGV software ETF was up about almost exactly the same as the semiconductor ETF, SMH, about 38% over that span. So it's been a pretty nice recovery. I think what's interesting is the move it made on Friday, the gap up was basically it created this island of prices where you had a bunch of trading from January through April and started with a gap down back in January, and then the gap up on Friday kind of left that island of prices. And so that can be a bullish sign. So we think, the fact that it held that gap, as long as it holds that gap around $96, $97 on IGV, I think you can target up towards 110, 115. Now it did reach 108 on Monday, so you got pretty close on Monday, but I don't think that necessarily means it has to be the end of the software run. I think maybe just time for a little bit of consolidation and allow things to kind of reset here.
And people will pick up in your tone. You're not exactly pounding the table on this, and you're describing it as low-mo, meaning kind of low momentum upside. This is not an area that you think people should look for their next, double or triple.
Well, yeah, I think despite the fact that it's had a significant, almost 40% rally off the lows, most momentum strategies will look at least 6 month, if not 12-month prior returns, right? And so software is still significantly down from its highs, and has not done much over the last.
All right, so
in the factor world, software is still
Snowflake turning up. Snowflake turning up.
And I think what we're looking for in June, when you look over the last decade or so, June is one of the worst months.
Wrong screen there, Vinny. Wrong screen. Snowflake is turning back up. Okay, I'll watch Snowflake here. Snowflake here.
We also have the high momentum, so the semis and anything AI related is, as many of your guests have mentioned.
Okay, this is probably going to go. Snowflake. Let me just grab some Snowflake. Snowflake, I'm going to get some at the low here. Snowflake. Let me go out to August. Most of my positions are now out in August. Snowflake, let me see. What is that? That is a 45 delta, 290, 300 by vertical. 290, 300, 290, 300.
Look, at this point, I think that's
all right, Snowflake.
Again, on any number of
All right, I bought some Snowflake 29300 call spreads just now, August. It's the final countdown. Bah, bah, bah.
So again, that's dominated by tech and AI. You had a 9-week gain of over 40% into a new high. The only two other periods you saw that was November and December 1999 and January of 2021. Now, both of those periods did see further gains in the months ahead, but they were, very close in time to the final top for those rallies. So
290,
the final top is usually a losing
290, 300 call spreads.
All right, Jonathan, thanks. Appreciate it for now. Jonathan Krinsky with BTIG. Coming up, before that possible pause, the AI spending is spreading to names like Dell, HPE, and Lenovo, each soaring double digits after their earnings reports. They're up 200 to 300% just over the past year. We'll have more on that next. And as we head to break, Victoria's Secret having its best day ever under its new CEO, soaring 44% to a
Wow.
after blowing
Victoria's Secret.
They're raising sales outlook on better than expected sales and lower tariff costs. We'll have more of today's biggest movers right after this.
Okay. All right, here's Snowflake. Snowflake. Jay-Z, is that what he just said? Jay-Z. It's a 44 delta. All right. All right, I need to take a couple of minute break. I'll be right back. Give me a couple of minutes. I'll be right back.
The sweet sound of earning and saving money on Vinted. By selling clothes she doesn't wear anymore with 0 fees, she earned the cash to buy these pre-loved boots. Don't wear it? Sell it. Download Vinted.
Hi everyone. I've tested many money-making apps over the years, and most of them are scams. The terms are hard to understand, they drag on, or they're outright frauds. But this game really works. You can earn rewards by completing simple tasks. I've already stacked up to 2,000 SC. Logging in gives me up to 300 free spins. There are no ads or pop-ups. The gaming experience is fantastic. Click the link below to claim your jackpot.
This is real. I just won $900 on Kangluck. I had no experience. I'm still learning, but win up to $800 in this game. That's insane. You can cash out to your bank account. Just try it.
You have a chance to hit the jackpot in 10 minutes. No ads, no scams, no withdrawal limits. You can smoothly access your rewards anytime. Try it now.
Kangluck. Play now. We're celebrating our nation's 250th with the biggest discounts ever during the All-American Getaway Sales Event, June 8th through the 14th. Shop travel trailers from just $79 a month. Motorhomes start at just $439 per month for 1 week only at General RV. Everything not to drop a few F-bombs, get my face right into the camera like a 1980 WWE. Oh, I gotta sound myself like that now. This is the level of intensity as I stand here watching AI stop radio. This is a bubble. It's an all-out mania. A race by investors not to miss out on the game. A race by companies not to miss out on catching in on this special moment in time. Look at what you're seeing today. This is just continuing to feed of last week. Shares up to 30% after next earnings guidance last night. It's like everything in the AI stocks.
Easy.
So that's another $10 million in the company, and it too, it sucks into AI thesis. I mean, this is just getting crazy. There are going to be down there with AI and maybe the hot takes are Jackson.
I don't think it's a mania, Brian. I'm gonna take issue with that. I would never Easy. Taxi drivers are not talking to me about AI server or GPUs yet. It hasn't happened yet. So we're not in the full quantum mania phase yet. But what I think is important, like with the HDD earnings last night, as a continuation of Dell from last week and then Intel from a few weeks back, is that this is just not a chip story anymore. It's not a GPU story anymore. We see massive upgrading of all the IT backbone that's needed, from CPUs to storage to kind of traditional HP servers, which saw like triple-digit growth last night, and it's happening quickly. Like one point on HPE, their AI backlog doubled, Ryan, in 90 days, doubled. So this is like people are buckling in. They are spending real dollars on like .com, right? And this thing is real. So there's more to come.
I appreciate that perspective. So to your point, it's not a mania. What are we seeing? You tell me HPE is worth 35% more today than it was a couple days ago. Same thing with Dell. I know Dell is doing well. A lot of the AI infrastructure build out the price to get that stock. When they report last week, the stock goes up 32.6% according to Dell $5.
Well, I'm going to quote Matsusan, who gave an interview yesterday, and he said, basically, if you don't want to use the term bubble, if you want to just call it more of like, how big is the magnitude of the intensity of this AI moment versus .com from 25 years ago? He said he thinks ultimately this is going to be 50x the size in terms of impact, reach, dollar amount, so forth. And I agree. Like I just think we've never seen anything like this in terms of how much more efficient it makes me. I see it on a daily basis myself in my work. I know lots of other people tell me the same thing. And it's just hard when something sneaks up from behind and kind of is right in front of us in the moment as current to place it in historical context. And we tend to kind of dismiss it and kind of brush it off. And it can't be that big, because we're living in the moment. But that's really what's happening right now.
Well, speaking of living in the moment,
seems like Anthropic is dropping an announcement every single day, and just this morning, this just crossed the wire. Anthropic announcing that its Project Glasswing, which includes those Mythos models, that has many concerns over their ability to expose vulnerabilities in the software. They announced today that they're actually expanding that to about 150 companies. Originally, they're going to provide that really strong AI model that meets those models, now 150 up from 50 companies. But these companies can then really put it to the test and see exactly how their own code goes up against this model, and ultimately where exactly vulnerabilities lie within the system. This is a major advancement. We continue to hear not only more and more announcements that it seems like last models, not necessarily this really strong AI model, very similar, will come out in the coming weeks. Of course, we got that confidential S1 filing yesterday, and just last week they announced Claude Opus 4.8, and so Anthropic just really stepping into their stride here. It seems like announcement after announcement, Ryan.
And yes, I felt that. I sent over to Joyce Lang out. Stock market crashing. But I didn't want to be that guy, but I am that guy. I am a little concerned about that stuff.
Yeah, let's take a look at that chart that Deutsche Bank put out about the market melts up and then crashes, because they're basically saying that over a 2-month period, you saw that the rally from April to May with the S&P 500 increasing 16%, and there's been only 4 times when we have seen this kind of action over a 2-month move, and Deutsche Bank is saying that 3 of those times followed recessions. So look, strategists have been pointing out to the sort of narrow leadership, the narrow breadth when it comes to this rally and it being concentrated in tech, in the AI trade. Now, within the AI trade, you are seeing sort of this broadening, as you were just mentioning, the HPE and the AI infrastructure play now being that hot trade.
Where else ASTX. The AI ASTS expansion is going to be surprising. I actually have to take some show up in a company like CrowdStrike or Earth. Not necessarily only in a quarter in guidance. So cybersecurity, like I think Dell or Cisco, or these companies that report, and the whole stocks all very
I think so. I think security is definitely kind of underappreciated, Brian. I agree. But I would focus on some additional players that are going to be part of the build-out of the whole.
Intel's still not following through.
So obviously we're talking about HPE this morning, but last night in Taipei, Jensen was giving a lot of love to Marvell, for example, and calling Marvell like the next $1 trillion company. Credo reported yesterday. I don't own it. Their stock was down, but they've had they basically doubled since kind of end of March. Astrolab is a name I own. That's also kind of similar to Credo. It's doubled. And so Credo, Astrolab, these are some of the Marvell, to a lesser extent, are kind of not as well known, but they are definitely players here in this build out. And so I think they will have their Dell and their HPE moments to come for in future earnings.
What is the average investor to do when they are seeing some of these AI stocks trade up in unison and trade up in unison in different ways? I mean, you have Micron basically going up every single day. You just mentioned Marvell, which might be the next $1 trillion company at this point in Jensen. Then you have Dell and HPE, both companies rivals, big quarters, big outlooks, both stocks shooting up. Like, do you have to own all of these names?
I think there will be winners and losers, and I actually think Anthropic, Brooke was just talking about it, is really smart to be going out first ahead of OpenAI. I think OpenAI is going to be the loser, and Anthropic is the winner. And Anthropic is the revenue run rate has gone from $10 billion last year to $47 billion this year run rate, and like that's an incredible surge. And obviously, it's coming off big time from kind of the build out of Claude Code and the adoption of Claude Code. OpenAI has their answering codex, but it's not as well, not as much traction there. And the revenue delta is just how important that is for the enterprise space. So I think it's great that they're getting out ahead. I think OpenAI is going to be perhaps not have as strong a story coming in second behind Anthropic when they do final IPO.
we used to toss out, $1 trillion market cap wasn't really a thing. I still remember when NVIDIA hit $1 trillion market cap, it was such a big deal. It was just a couple of years ago. But every day we're getting a new company.
Brian, getting a new company hitting $1 trillion market cap, but now you have NVIDIA at a $5 trillion market cap. The momentum behind it, Eric and Annette were all pointing out, it's truly unbelievable. When you think about Micron and where it was a year ago, I believe it was trading about $100 per share, and now look at it. I mean, the momentum within this market is truly unbelievable. As you can see on your screen, there are so many companies that now have surpassed even that $1-2 trillion market cap. You have Amazon, Alphabet, Apple, Microsoft, all within above $2 trillion. Even Broadcom, even Tesla, and Meta, and Micron approaching that $2 trillion mark. And so the momentum within this market is truly unbelievable to watch. And really, when you think about the adoption of AI, how we continue to talk about this circular valuation, this circular ecosystem within AI. I think it'll be really interesting now that we'll get exposure to even more of an understanding of financials once we do get that official S1 filing from Anthropic.
And let's be clear. It's this AI trend that is driving the S&P 500. I think yesterday marked 26 closing highs for the year.
Yes, and I will say that I've also been taking a look at retail traders and their enthusiasm over this AI trade. And I just want to tell you this note that is Vanda Research said that yesterday HPE was number 2 on their leadership board. It has never been on their leadership board. So retail investors have been pouring into HPE in anticipation of a blowout quarter, just the way Dell had their blowout quarter, and it was one of the most thought stocks yesterday. And today you are seeing this move on HPE. One other note I just want to make that during the earnings call, what was very fascinating was that management said that during COVID you saw double bookings. They're not seeing that this time. They're saying no, there's no cancellations. They're seeing strong demand going to 2027, and the reason why servers are so hot right now is because of AI inferencing and because you can do that on CPU servers, and this is what's driving this demand. That enterprises want them on premise for security reasons because you can do this kind of work on CPUs, and this is what's driving this record backlog that they have.
That's good intel. Eric, last word to you. I'm talking to the CEOs of HPE and Cisco later on this afternoon. What would you want to hear from both these leaders just to keep more excited level, I guess, with the AI trade? What do they need to say at this juncture after giant moves in your stock price?
Just the follow through in the order book. I mean, I think I think we now pretty much dispelled this notion that it's just like .com, it's circular deals, it's not real. Like these players like Cisco and HP, they're talking about real demand. So the more that they can kind of flush that out, describe how real it is, the length of visibility that they see, I think that's really important.
Snowflake continues higher. NVIDIA continues lower.
In the .com era, like everything was correlated, everything went up, whether it was exposed to .com or not. So it's kind of like and look at crypto these days and Bitcoin. Bitcoin is like crashing below 70K right now. And a week ago on that Horizon IQ, one of my sites, we declared like it had entered a stress regime, like a stress market. And it's fallen another 10% since that signal fired. And so that gives me hope, actually, Brian, that we're not all kind of on one side of the boat. There is still kind of this ability in the markets to kind of differentiate, and that usually means more sanity, and usually means then a rally that's existing within sanity can continue.
As always, Eric, good to see you. Brooke, and good to see you as well. Appreciate it all. Coming up, Snowflake suddenly has one of the hottest stocks in the market this year. Its CEO joins me next from its annual partner conference.
Google, Apple at the high.
And our $1,000 low price guarantee will beat any other dealer's price or give you $1,000. Whether you're in the market for a sleek sedan, personal SUV, or powerful truck, our massive selection and smooth buying process make it easy to find the vehicle that fits your needs and budget.
NVIDIA is still trailing off. NVIDIA. Tesla looks like it could turn back up. Tesla. Oh boy. Apple at the highs. Apple at the high of the day. What's Bitcoin look like? Bitcoin. Ouch. 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 Jeez. Bitcoin. Yeah, doesn't look very good, does it?
Zero DTE, call side. Size. SPX pulse, long dated. NVIDIA pulse, Q's pulse, deep calls. Marvel pulse.
Cisco stand out as two tech giants that have experienced this trend recently. Investors have sent each of these stocks skyrocketing. Another winner here looks to be software player Snowflake. Company stock is fresh off, lifting almost 40%. Response to strong growth, even stronger guidance. In large part due to AI. Snowflake CEO Sridhar Ramaswamy. Now, here you see and
Marvel pulse, long dated. Intel Pulse, long dated, shenanigans. Intel Pulse, long dated, shenanigans. Micron Pulse,
Similarly, the product organization has been hard at work releasing amazing products. FSLY. CLM. We brought Coco, which is our coding agent, to GA in the first week of February.
Nvidia Pulse, long dated, 0 DTE, call sign, size. SPX Pulse, long dated, deep puts, Micron Pulse, shenanigans. SPX Pulse, long dated, deep puts.
This is a key growth driver because not just one quarter, this is a look at the future. That's right. What Coco does, it makes every aspect of Snowflake go faster. Whether somebody wants to do a migration or set up an agent, they get it done faster with Coco. And I'm also fortunate that I had the entire company make itself AI literate over just the past few quarters. Co-work is equally important because that is what is going to let
SPX Pulse, long dated.
on their business. Look at what is going on, whether it's in a Slack or Gmail or anything else that they use day to day.
Nvidia Pulse, long dated.
Actually make a PowerPoint deck right within Cowork. It's a new way of working. I've been doing this for quarters now. It's pretty exhilarating to have all of your projects in one place and to be able to act on it. We're going to be talking a lot about how these can drive getting even more value from Snowflake. Is there anything preventing your business from accelerating again and surprising investors? If you want to have this conversation right now.
Nvidia Pulse, long dated.
Is everybody has a strategy that they talk about, like I do. But the thing that matters are the results. No one can doubt the strength of the beat, the performance of the 34%, the increased number of logos that we won, or the raise by 400 basis points. I prefer to let results speak rather than make prognostications, and it's that grinding that's going to continue to deliver great results. Not every company is like yours, Snowflake, like Snowflake right now, that is benefiting really from AI. It may show some on the top line, but not benefiting on the bottom line like people. Why do you think it is that disparity starting to emerge? Because it is actually hard to transform yourself with AI. It takes a lot of hard work. It takes a new way of thinking about work. It requires every employee to say, how can AI truly benefit me, even if I need fewer people to get my job done? Part of our message internally is that we need to show, we need to practice what we preach, and that's why you see our sales teams acting differently, our communications, our investor relations, our finance teams, all doing it. But the benefit of that is that when we talk to a customer, we can actually bring in subject matter experts, Ryan Robbins, our CFO, and have them talk to the finance team and our customer about how it's transformed his life. I think practicing what you preach is our biggest asset, and we press on that to full advantage. What are some of the biggest changes companies should expect from AI over the next few months? Roughly, my mental model is that AI needs to accelerate the core of what you are as a company. I effectively describe Snowflake's job as creating great software, deploying great software, selling software, and getting our customers to deploy. So we spend a lot of time thinking about how do we make each of these go faster with new products that we can create, and how we innovate, having a clear-eyed view of where can it make a difference. You know, companies really wanted to do things, make more money, spend less money, and figuring out how AI can help you do both of that, that's the unlock. That's the unlock for Snowflake as well.
Jason, less than 10 seconds.
Nvidia CEO takes down some interesting comments over competency cafe. You push back on this notion.
0 DTE, call sign, size.
AI can bring up so much more opportunity. You can get things done faster. Some things will be done faster with AI. And at Snowflake, for example, we used to have a demo team. Now anyone can create a demo. I can create a demo. What we did was move that team over to a quota carrying function where they can actually win more customers and win more use cases for us. That's the kind of internal transformation that's going to be essential. But companies can do a lot more, expect more from themselves by using AI. Sridhar, how are you using AI in your daily it's everything. Whenever I have a particular topic, we want to explore some product data, I use Coco to run a deep research report. If I want to check up on how is some particular feature of Coco getting adopted, I use Cowork for doing that. I'm also able to perform things like, as you know, like everybody uses some sort of
Oracle's trying to make a new high in the evening session.
Long dated. Spider pulse. Long dated.
Okay, you can see that hedge flows just keep moving sideways, peaks and valleys with a sideways direction. You can see the 99 percentile has traded out a bit.
0 DTE. Call side. Size.
Futures continue to sit here. SPY flat at VWAP. Pulling back to VWAP. We got a spinning top, small body candle today.
Long dated.
Not expecting a big range or a drop of any magnitude. Just looking for prices to stabilize along VWAP as up-down volume indicates it's 1-to-1 up-down volume, 3-to-1 on the diamonds. Dow Industrials. Let's look at the Dow Industrials, INDU.
SPX pulse. Long dated.
Okay, the diamonds. Let's look at the New York Stock Exchange. When in doubt, always check the New York Stock Exchange. New York Stock Exchange is breaking out.
Tesla pulse. Long dated. Holy cow. SPX calls.
Okay, so got a holy cow S&P calls. What's somebody gonna? Are we gonna get a push here? Let's see.
Tesla pulse. Long dated. Micron pulse. Long dated. 0 DTE, call side.
SWMR.
0 DTE, call side. Size.
Welcome to Market Catalyst. I'm Julie Hyman, 30 minutes into U.S. trading day, and with take a look at major averages, we're seeing kind of a mixed, a little change picture here today. The Dow is lower by about
Alphago
30
Poe,
points, about a third of 1%.
long dated,
Very
deep
slightly lower.
calls.
The Nasdaq Composite very slightly higher. So a little bit of
Soft
treading
pulse.
water here today. As we look at some of the other asset classes we've been watching closely, we do see a little relief on the bond yield front today after a big jump up in yields yesterday. They're coming back down 4.44% for the 10-year, and we've got the 30-year down below 5%. Also, we keep checking on a couple of other things. One, Bitcoin, which is
NIMO's flat.
10,000 and just keeps falling recently. It's down another 4% today. And on the flip side, crude oil, not seeing much change today, but holding above $90 a barrel. Now, in terms of the individual sectors that we are watching today, what's making that sort of push and pull that's creating a little change in the S&P 500? Healthcare and communication services and discretionary are lower. Tech is up, though, and as we know, because the weighting and tech is up,
JC may resume in less than a
perform a
minute.
little bit better, but that's not salvaging everything today. But look at the movers here. Really interesting movement.
CGYL.
Google shares, Alphabet shares trading lower. The company saying it is working on raising $8 billion in order to fund its AI build-out, among other
All right, Microsoft just dropped off. Microsoft.
Sandisk Pulse, long dated, deep calls.
Microsoft's down 3.45% at the moment. After a big move yesterday, Microsoft is down more than 3%. Are they shaking the tree? What are they doing here? Jeezy. Yeah, the New York Stock Exchange, it's kind of hard to get the markets to drop off when this is turned up and breaking out, right? 60 minutes trending. You want to stay long above the 20 EMA. Okay, NVIDIA did pull back, right? NVIDIA, all right, it's pulling back to the 20 EMA. Microsoft doing the same thing, below the 20 EMA. So that could be changing direction. Apple at the highs. Tesla needs to get above the 20 EMA, and that needs to turn up over the next few days. It is Tuesday. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's June the 2nd, second trading day of the month, second half of the year. All right, so yeah, market's not going anywhere. So people getting frustrated, probably taking trades, and things are not working like the way they were over the last few weeks. Does that automatically mean we're going to pull back? No, not necessarily. Look at the broad market for signals like New York Stock Exchange Composite. Oh, gosh, shut up. These people just keep talking about the same stuff, and the markets, meanwhile, continue higher. All right.
or so when we talked earlier this morning. What about Marvell, another big mover here in the green? Now that one
Yeah,
remains
Marvell
on a strong
looking really, it's really strong, Marvell.
It is up more than 20% as we speak.
We've got Palo Alto with earnings tonight. I do have some calls out of the money, calls, spreads. I'm not going to take puts, but if it fails, it fails. But I've been looking for these stocks, these meme reactions where you get these stocks rip higher. Okay, you get these stocks pop up on earnings and do this sort of thing. Looking for Palo Alto to do the same, excuse me, the same thing. What's Nike doing? Nike pulling back. Nike no follow through. Nokia at the highs, making new all-time highs. BlackBerry making new all-time highs. What was that one you mentioned, Joel? Path, P-A-T-H, with a lot of options trading on Path. Joel mentioned this one yesterday. Excuse me, looking for the follow-through. Let's see, Snowflake up there. Cisco following through. Cisco with the breakout.
Unlike HPE, which again still has a big advance, and you have analysts updating their price target, but Marvell has held on to it throughout today's session, and momentum has been in favor of the bulls. Yeah, incredible. I mean, it's been moving higher since this morning, so really showing some momentum there indeed. And last but not least, we talked about software being such a big winner. And any thought on the group here as a whole? So the group taking a step back today, it appears like there is some profit taking off of that big swing higher yesterday. But, you have to take this into context. We've seen this move off of those lows that we saw earlier this year. IGV is down today, but we've seen a powerful move over the past month that by yesterday's close had brought it positive for the year. Taking a little bit of a step back today, but again, as investors, it looks like there's some profit taking. You got Microsoft under pressure today. You got Salesforce taking a step back. It's off by more than 5%, but keep in mind, we saw that big swing higher yesterday for Salesforce. That was up double digits. You also have Oracle shedding a bit today, but again, we're seeing
Zero DTE
in the
call
software
sign.
names after a big
Size.
move to the upside today. Some of those names in the cybersecurity space taking a little bit of a step back today as well. But cybersecurity, in terms of the recovery in the software sector, has been a big comeback story. I know you mentioned Palo Alto, Nicole. That one is obviously on our radar ahead of its quarterly results. Now, there are some who say that the bar may be high for Palo Alto to jump over, unlike, for instance, CrowdStrike, because you want to see more about that CyberArk acquisition and how that feeds into its numbers from here. All right, Diane King-Hall, great to see you. All right, great to be with you. Thank you so much. All right, coming up, we will spotlight tech and cybersecurity ahead of Palo Alto Networks earnings.
SPX
Software
calls,
stocks are under
long
pressure
dated,
today.
SanDisk
Still to come,
calls,
big moves.
deep
Tom White will
calls.
join us in real
Holy
key
cow,
trades for Amazon,
SPX
Alphabet, and
calls.
Intel. So much more when the watch list returns. Keep it right here on Schwab Network. We'll be right back.
Cisco. All right, the New York Fangs are all mixed at the moment. We've got less than 2 hours to go. 1 hour, 50 minutes, 40 seconds to go. 1 hour, 50 minutes, 40 seconds to go. It is a flat sort of day. If you look at VWAP, you look at hedge flows, rocking and rolling sideways. We briefly got up to this level here, 76.20, and we moved above it slightly, I guess. Some of you traded that all the way to 76.20. Congratulations.
Here's pulse, long dated, deep puts.
Okay, let's see. The diamonds, the Dow Industrials are at the highs. Almost an outside day. The Dow Industrials. Let's see. What is the industrials? Indices. Dow Jones Industrial Average. Okay, DJI. All right, that's good. Making higher highs, higher lows. The New York Stock Exchange. New York Stock Exchange Composite. Okay, that made a new high today. Compared to recent pivots, so we made a new high. We're still off of the all-time high up here. But the fact of the matter is, a lot of people are expecting the markets to pull back, and yet this isn't giving us any kind of bearish signals. 2,400 components, 70%, at least 70% are U.S.-based companies, about 25% are ADRs, average American Depository Receipts, and about 5% are tracking funds and REITs, real estate investment trusts. You can see this is nearly at the highs of the day and recent highs, recent all-time highs. So if I was worried about the markets pulling back, I would not be expected to see this moving higher. In addition, what's junk bonds doing right now? Junk bonds back to the 50-day, the 10-year yield. The 10-year yield should be moving lower. If you're bullish equities, you want to see the 10-year yield lower. That's lower. Okay, so that's moving lower. 60-minute is trending lower. 20. All right, that looks good. 20-minute, 60-minute. 60 minutes dropping. 20 EMA is dropping. Trying to hold right here. The 10-year yield. Junk bonds are holding at the 50-day. Okay, just talking about the Cisco breaking out there. Let's look at the equal weight index. Let's look at the number of stocks trading above the 20-day. We want to see that moving higher. Okay, number of stocks trading above the 20-day. You can see this is hooked to the upside, so that's a good sign if we want to see a follow-through tomorrow. We were looking for a pivot. Exactly what you're seeing is a pivot. A V shape is what we're looking for. Or an inverted V shape if we're looking for a top. The S&P 500 equal weight continues to show bullish activity. Number of stocks above the 50-day is still drifting a bit lower. So it's the shorter term number of stocks above the 20-day that look good. Okay. What else can I tell you? Let's go look at the New York Stock Exchange. Again, another index, 2,400 components. Okay, so this is the McClellan volume oscillator. Okay, so the way this works is you have capitulation in either direction. You have extreme buying, which is in the red zone. You have extreme selling, which is in the green zone. So we want to be buying. We want to be going long when we get down here and we pivot and turn back up, along with what we were just looking at with the number of stocks above the 20-day. If this is rising, we'll be getting the 50-day turn pretty soon. And if that's the case, then we want to look at the McClellan volume oscillator. That should be rising. That's bullish. Also, we want to look at the bullish percent. We want that to be rising. It's only at 54%, so this has got a ways to go to get anywhere close to maybe overbought. This is the number of stocks on a point and figure buy signal. What's a point and figure buy signal, you might ask? This is what a point and figure chart looks like. Okay. Point and figure looks like this. Column of X's and O's. Okay, this is breaking to the upside. That is not a bearish signal. The blue line is automatically plotted at a diagonal across all of these squares. Okay. There's probably going to be another. See how this has two trend lines? This is probably going to get another trend line pretty soon. It's going to start right here at 7,300 and start going up to the right. If we get a reversal signal, we would see a column of O's dropping off, and then we'd see a red line like this. Okay, that's not the case. S&P, that's a point and figure buy signal. So when we're looking for point and figure buy signals, we'd be looking for this indicator to rise. Okay. Additionally, you know what we didn't do? Let me just check one other thing here. S&P. Let's look at the XII. This is what institutions are doing. All right, very important to understand what institutions are doing, right? Are institutions selling? No, they are not. Okay. Yeah, if I was concerned about the markets, I'd be looking for red elder sticks dropping below the moving averages. Okay, that's not the case. Okay, I'd be looking for red sticks like over here. I'd be looking for red sticks below the moving averages. We have green sticks. These stocks that institutions commonly hold in their core portfolios, 75 of them, is the XII, the ARCA Institutional Index. Good to know what this is doing. All right, so a few of you are asking me, about being concerned, what should I trade if I'm thinking that the market's going to pull back short term? Should I hedge? I posted that in the trading room on Sunday. And also a little while ago, you might want to check that out. But I don't see any reason to get too concerned about the markets right now. Okay, so let's go back to the New York Stock Exchange now. Okay, let's look at the number of new highs minus new lows. Very simple calculation. You just take the number of new highs and subtract the number of new lows, and you're either above the zero line or below the zero line. And the trend line is rising. So breadth is improving. Okay, advanced decline is at highs. That line right there is advanced decline. Okay, number of stocks advancing versus declining. We're not breaking out, but we're also not breaking down. We're in a range. The New York Stock Exchange again, green elder sticks. Okay. So there's no concern here.
People have to understand about Microsoft. They're always late to the game with new rollouts because of security reasons. That's number one. Number two, 95% of Fortune 500 companies are using Microsoft services, which means that the data is all in Microsoft, which is the graphic, etc. Microsoft wants to be the AI operating system for these agents. They want the agents to sit on top of all their data.
Long dated.
So Copilot will become a success. Right now they are using Claude within Copilot and OpenAI as well. So Microsoft, I do believe, and you're going to see it in the numbers and you saw it last quarter.
All right, let me just think about this for a second. What else do I want to look at here? Okay, let's look at some of the sentiment indicators. Consumer price index, industrial production. Is that moving lower or higher? Industrial production is rising. Okay. What about AAII bull bear ratio? Okay, this is drifting lower. So this is closer to a reversal and a turn back up than it is at highs, right? This is a monthly time frame. So it's not at a peak, which you would expect, right? With the markets at the highs, you expect this to be, well, I guess you wouldn't. I guess you'd expect this to be lower because more and more people would be getting bearish because we get so far away. We get so far pulled away from the 20-day and the 50-day and the 200-day. People will be thinking bearish. Okay, here's a jobs rate of change on non-farm payrolls. That purple, that magenta color line is still rising. This is a rate of change. Okay, this continues to drop. So unemployment is a good thing, I guess. Lack of people. We got the farm, non-farm payrolls coming up. University of Michigan sentiment. Now this is at the lows, so that's not good. So not everything is bullish.
Zero DTE. Call sign.
We're below $100 a barrel. All right, so we were up there for 3 months during Obama's term, 45 months above, and yet, you know what? The markets rose. The markets rose. So, which is it? Are we going to roll over and die? Well, you'd expect to see the New York Stock Exchange dying if that were the case, right? All right, so
Size, long dated, deep calls.
Sometimes, you know, you could have done better. Same goes for where you invest.
0 DTE, call
Level
sign.
up and invest smarter with Schwab.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast
NVIDIA
Market
Pulse,
weekdays at
long
noon
dated.
Eastern, live on Schwab Network at schwabnetwork.com. We're back here
NVIDIA
on the watch
Pulse,
list watching
long
Intel,
dated,
trading lower
deep
this
calls.
today after Goldman Sachs downgrading the stock to a sell. The $276 price target. The firm believes consensus estimates are too high for the next 3 years and that Intuit may have to revise its long-term growth targets lower. The stock has struggled since the SaaS apocalypse, or the SaaSicer, whatever you want to call it. It's 50% lower in 2026. Here are some of the other names in the group. You could see some down
Apple
arrows to the
Pulse,
tune of Intuit
shenanigans.
down 8%, Adobe over 4%, Workday down over 6%, and Salesforce down 5.5%.
all right, so New York Stock Exchange still rising here, folks. About to take out the high of the day. Apple trailing off from the high.
And we welcome in Sid Powell, CEO and co-founder of Maple Financial. So it's very interesting to folks. A lot of folks are talking about that Michael Saylor's
0
strategy
DTE,
for
call
Bitcoin this week
sign.
for the first time
Size,
since 2022. Something it seemed that he was never going to do. It was reportedly to pay for some dividends for preferred stock. Some of your thoughts on why this happened? How did you interpret it?
Yeah, it's a great question. I think the market's a little bit spooked. As you mentioned, they previously assumed that strategy would not be a seller of Bitcoin.
SPX calls.
I think the question is less around solvency and more people are treating it as a bit of a cash flow issue, and they're wondering.
New York Stock Exchange about to break out. Oy, oy, oy.
So the key issue that came up for them is they have this preferred equity that requires them to pay around 1.7 billion a year in dividends. Previously, they had around $2 billion in cash, so they were adequately covered there in dividend payments. However, recently they elected to retire some of their bonds that weren't due until 2029 and had a 0% coupon on them. So folks, I think, were scratching their heads as to why they chose to retire these bonds over keeping a cash surplus for immediate dividend payments.
At the same time, we think about the fact that right now Bitcoin is roughly 40% off its highs of October of last year, 126,000. And the question is, who's going to be buying Bitcoin now at these levels? Is it still very desirable or not?
I think so. It's a good point you raise. So we are down 40%. There's definite concerns that geopolitical tension, whether it's some of the flare-ups we've seen in Iran or some of the potential energy inflation, might cause the Fed to be raising or hiking rates over the next 6 to 9 months.
There goes the S&P. S&P on the move. All right, let's do this. All right, S&P is on the move. Okay, S&P is on the move. The New York Stock Exchange turning up.
SPX pulse.
Can we get back up to the highs?
Avgo pulse.
Around the $60,000 mark, where we're close to where we were on the 52-week lows. So I think we're starting to see some institutions come in and look to buy at these levels, thinking that they might get a rebound from here.
Understood.
All right, hedge flows are still low. Don't see the advantage here, but we are rising. S&P is rising a bit.
MicroStrategy, so they have the key concern that they have to address here is the liquidity to pay the preferred dividends
At the VWAP.
Now, Saylor is sitting on around $900 million cash reserves, so he's got more than enough room for about 6 months. But at the present level, so around 1.2 MNAV, he's able to sell shares to raise the cash to pay those dividends. But look, if Bitcoin rebounds from here, then he'll have the ability to continue selling shares, or he could take in more capital from issuance of these prefs and continue buying more. He's always maintained that his most important metric is
Futures are starting to rise.
I think, they have
IWM is starting to rise. IWM. IWM. So if the 10-year starts to drop off, that would be good for equities. Small caps. All right, let's look at IWM. I'm watching IWM turning here. Thinking it was futures. IWM rising. Looks like it wants to break out.
Definitely. So, I think this cycle we now have ETFs. We have significant futures and derivatives markets around Bitcoin with the CME. The numerous ETFs, whether it's or some of the others. So there are now more and more means for institutions who want to get Bitcoin exposure to do so, whether it's through holding the ETF directly or through using synthetic derivatives to try and replicate that exposure. And I think this is why, notwithstanding we've seen a 40% drawdown, I mean, typically you have to remember, Nicole, that in past cycles we have a 70 or 75% drawdown from top to bottom. So that volatility is getting a little bit less each cycle. And it means that there are also just more market participants who can scoop up
long dated
when we do get to these 52-week lows.
Sid Powell, nice to see you. Thank you so much. CEO, co-founder, Maple Financial. Thank you, Sid. Coming up, well, we've got a good look at some of the consumer names. We've got a slew of retail earnings that we've watched. Our panel takes a closer look at some of those numbers. The watch list. We'll be right back.
Okay, IWM pushing higher. IWM. Okay, the 10-year moving lower. 10-year TNX, 10-year moving lower. Be nice to see that drop off a bit. The 10-year, if this does drop, continue lower, that'd be good for IWM.
Oracle pulse. Long dated. Deep calls.
Okay, Oracle. Oracle did pull back a little bit to the 10 EMA on the 60-minute. Bounced earlier. Okay, Snowflake, big gap up. Palo Alto has earnings tonight. Palo Alto.
Long dated. Deep calls.
Intel below its 20 EMA. 60-minute needs to turn back up. Apple above. Fading a bit. So buy on the dips, not the rips. Okay, Microsoft. We were looking for Microsoft to turn the corner. That actually dropped back below the 20 EMA on the 60 minutes. So right now, hands off, waiting for Microsoft to do something else. drift lower. What's Oracle doing? Oracle still up there. We just talked about CRM. That gap down today. CRM.
SPX pulse, long dated, deep puts, spider pulse.
New York Fangs are not doing much here. New York Fangs. New York Fangs just been fading today. Not the end of the world, but it's been trending. New York Fangs have been trending for the last 2 weeks. Trending for the last 2 weeks, so inside day for now. This could lead to a couple of days more of tight price action if the ranges start to expand again. There's a possibility that we could transition to a fade. Right now, the 9, 21, 50, 200 day are all pointing up and to the right. I see that's off right there. Let me just change this. 200 day is now below. 50 days above. All right, so all the moving averages are stacked. All moving averages are stacked. Okay, looks good. RSI, sideways, embedded. Stochastics, MACD. All right, stochastics is embedded. MACD is still bullish. The big thing, though, is the New York Stock Exchange. That's the big takeaway. New York Stock Exchange, if that continues to move higher, that's a broad measure of market participation. Okay, it's at the high of the day. New York Stock Exchange. Okay. New York Stock Exchange above the 20 EMA on the 60 minutes. So this would have to drop below 2350, 23,350. In order to get a sell signal, we need to drop below 23,400. That would be an early sell signal. Speaking of early sell signals, let's look at Gerald Appel's 3 MACD setup. Okay, so Gerald Appel, the creator of MACD, stated he used a short-term MACD, which is defined by 5.14.5, a default, which is 12.26, and a long-term 1939 for the 3 phases, the short-term, intermediate term, and the longer term. As long as these are all pointing higher, this is bullish for the market. That's New York Stock Exchange. Let's look at the S&P. S&P 500. Okay, so these are starting to flatten out a little bit. 500 stocks versus 2,400. Still, the short term is flattening out. This is what you would expect. A lot of people are thinking we're going to pull back. So you would expect this to be fading a little bit. That's the S&P. The Qs. Okay, same thing here. Starting to fade a little bit, starting to flatten out. But the intermediate and long term are still bullish. Now, Brent made the comment that the indices are being priced, or traders are selling premium, pricing in a stagnant or for price action to stay right where it is, basically. So they're selling overhead calls because implied volatility is like 10% for the Qs. We showed you that yesterday, or rather the S&P. If you look at this, you'll see. Okay, if you put SPY on here, right? SPY, where is SPY? Right here. Okay, SPY, you see it down in the lower center. Okay, SPY, you've got implied volatility of 13%. Okay, versus something like Microsoft, which has an implied volatility of 71% and a risk reversal rank of 100%. So Microsoft, I'd be thinking short-term trades on Microsoft, not long-term right now, because at some point this is going to slip and we're going to pull back a little bit. So you're going to lose a lot of that implied volatility. But you can see this with SPY. Okay, SPY, 13%. So you'd expect to see this. Okay, you would expect to see momentum slowing a bit. Does that make sense? Okay. individual names like NVIDIA. Okay, NVIDIA. Okay. Short term, it just crossed up. Intermediate and long term are still bearish. So it's fighting the trend right now. It's trying to push higher. Okay, so you got Apple. Apple. Okay, so intermediate term is flat, neutral. Short term is somewhat bearish, needs to turn up, and long term is still bullish. So the big cap tech names are showing high implied volatility, more potential to come back in, while the indices, conversely, aren't really giving us a reason to sell or be concerned about selling. If anything is going to sell, it's going to be the overpriced calls in these big cap tech names. And we can see that right now in the New York FANG index. Let's see what this looks like. New York FANG index. Okay, you can see this here too. All right, starting to flatten out. Intermediate and long term are still bullish. Okay, that looks good. We're, trying to make new highs. The momentum is still clearly bullish. Does that make any sense? I'll say, okay, so the expensive calls, things like Amazon. Okay, Amazon, you can see, has crossed lower. All of these are pointing lower, so buying against this isn't working right now. Google, same thing. Google, even though Berkshire bought some of Google, the momentum is still pretty bullish, still pretty bearish. So the short term at a minimum needs to turn up, not down. So Google looked more like a hammer earlier. All right, so back to a doji. This could still come down to the 50-day, most likely will. Look at RSI starting to turn down. So you have enough time, that's fine. If you got like July, August options, you should be fine. This should maybe pull back a little bit more and then bounce. If you have longer dated calls, you don't have theta to worry about as much. Snowflake. Okay, it's topped out. All of these are rising. Palo Alto, PANW, that has earnings tonight. Palo Alto. I might buy some puts against these calls. I have a call spread on. Expected move is just shy of 10%, so take $30 and add it to price action in either direction. Add or subtract $30. That's basically what you got to deal with. Somewhere inside of that expected move, most likely, or not. Lately, we've seen these moves like HPE that have gone way beyond the expected move. I mean, HPE is up 16% right now, and that's not even the high of the day. HPE, Snowflake had a big gap up last week, right? So a lot of these stocks are showing meme price action. NVIDIA is still fading. NVIDIA pulse, long dated, deep calls. Micron pulse. Okay, it's 2:39 on the East Coast. We're looking for institutions to show their hand. Are they going to sell? All right. S&P is pulling back. Are they going to sell? Or are they going to buy? We look for direction this time of day, after 2 o'clock, between 2:50 and 2:45, more or less. It's not an exact science. We just know that institutions tend to come in the evening session if they like what they see. Apple. 60-minute Apple looks good. 60-minute Apple. SPX. Markets feel tired. 10 weeks up. I'm not surprised that we're starting to stall a little bit. We're stalling a little bit. Just make sure you have enough time if you're holding on to options. Make sure you have enough time to weather a couple of weeks of sideways action, anywhere from a few days to a couple of weeks, maybe. Q's pulse, long dated, 0 DTE, call side, size. What are these AAOI look like? Okay, nice pop in the last 3 hours. It just faded. AAOI. All right, so Doji, GLW, holding its own for now.
Micron Pulse.
Trying to get about 200.
Long-dated.
RSI rising, MACD stochastics turning up.
SPX Pulse.
If you're going to take a long, you definitely want to see this kind of action. You want to see stochastics turning up. You want MACD to turn up, volume to increase, RSI to rise, and price to be above the 21-day. All four of these conditions look really good. 5, actually. Volume included. NVIDIA continues to fade. NVIDIA was it a fake out yesterday, or do we see a follow through tomorrow? It reminds me of Thursday, Friday action last week in NVIDIA. Thursday, it looked like we're going to jump back above the 21-day. Then we came in on Friday and they sold it. Tesla, what's Tesla doing? Tesla just starting to perk up a little bit. Tesla, spinning top on Tesla. Let's see what. Okay, so you can see Tesla. All 3 of these are turned down. Momentum. So if Tesla does bounce, short term will have to turn up. MACD. Short term RSI is turning up. Tesla starting to show something going on here. Tesla, just sitting here, right? It looked more impressive on one of my charts. Now, when I look at this right here, it needs to break out above 430, 423, 424. Tesla.
They made money from that. Are they in a situation where they have to settle tomorrow? Probably not. And we'll hear from Netanyahu tomorrow on this network. We'll see what he has to say. But firing back and forth between him and the president this week. Wow. And meanwhile, we hear that the U.S. is trying to put leverage on the Arab countries to agree to the Abraham Accords as part of all. And they're concerned about what's going on in the Strait. So how is Israel complicating our ability to reach a deal right now?
That was the issue with Lebanon. And what was so interesting was the Iranians essentially expanded the scope of the conversation.
They just cannot help themselves. They've got to talk politics. CNBC.
Zero DTE. Stop.
If it's something like a Peloton, for example, versus an Apple, the former is nice to have. Shoes, nice to have. Apple devices with 2.5 billion of them installed on the planet, largest consumer database in history, consumer access point history. That's must have. So we approach it very simply. The idea behind it is simply this: that most investors had spread their money around 29,000 stocks over the last 100 years. Fewer than 1,000 of them actually make money. We're concentrating on the ones that are making money, that are must-haves.
Understood and well explained there. And you said when you look at diversification within the portfolio, what kind of names are in there? You mentioned, having an Apple phone, for example. We see some of the top holdings: Palantir, NVIDIA, Apple, IonQ. Talk about the different kinds of names that go into here.
Well, that's actually a very sharp question, because must-have is not just tech. It's things like Chevron, for example, that are producing oil and related supplies that we literally can't
Zero
live without.
DTE.
It's not on off like everybody thinks.
Stop.
We're talking about medical suppliers that are first, second, and third order derivatives of the artificial intelligence. The idea.
Okay, so I don't need to tell you again. Being the markets are up 10 weeks straight, I don't need to tell you that you should be reducing your exposure, tightening up your stops. Okay, I've only been saying that for over a week and a half, 2 weeks now. There's no sell signals at the moment. On the contrary, we've got bullish signals in the larger or more broad indices like the New York Stock Exchange. That's not even fading from the high of the day, really. So if this can continue to move higher, that includes the New York FANG components. It's just they're weighted differently. If this can continue to make new highs, and if the Dow Industrials can continue to make new highs, and if IWM can hold on to the highs, IWM's up here at the highs, 9 EMA. Let's see what Breath is saying. Breath going into the evening session. Breath S&P is turned up. Mid caps turned up. Small caps turned up. NASDAQ turned down. Okay, so NASDAQ you want to stay away from, or at least reduce your exposure. When it's telling you this, you want to reduce your exposure in the tech stocks, you know, the big cap tech. This is, I don't need to go to the number of stocks above the 20-day because this looks very similar. Okay, all right, so Tesla. Tesla turned up. We're at standard deviation 1 VWAP. All right, so here's VWAP here. We're 1 standard deviation away from VWAP, so that's bullish. Inside day, looking for Tesla to hold, at a minimum, hold up here. Why are you looking for it to hold, Vinny? Because this is a surrogate to the SpaceX IPO, which is next week, right? Or is it this week? I don't even know. But a lot of people are buying Tesla as a surrogate to the SpaceX IPO. A lot of people are expecting the SpaceX IPO to be a liquidity drain. People buy, and then institutions sell. All right, so that's speculation. Nothing in the markets right now says that that should be the case. Okay, it's just, I just want to share with you what the speculation is. Speculation is that the SpaceX IPO is going to drain what is it, $1.5 trillion IPO, whatever it is. And Sam Altman talking about their IPO. They'll do it when it's the right time to do it. So it sounds like he's not going to do it anytime soon. He's probably been told, don't do it during the time that SpaceX is going to be going IPO, because your odds of a winning IPO diminish when you're foreshadowed by SpaceX. Anyway, there's a lot of speculation about that. So let's say you have a bearish outlook going into the SpaceX IPO. Okay, so it's like, I think it's the 10th or the 12th. When is the SpaceX IPO? SpaceX IPO? SpaceX IPO date.
Long dated, deep call.
Okay, they already released the Form S1. Okay, so 2 days from now, SpaceX is going to officially kick off its institutional investor roadshow. Okay. The drum up demand, finalize order books. Then the 11th, the final IPO share price is scheduled to be calculated. And June 12th, okay, it is the 12th, okay. The official launch date, the 12th, okay. 1.75 trillion to 2 trillion in valuation. Where the hell is that money coming from? I guess a lot of people are looking to get in. So Morgan Stanley, remember Morgan Stanley and Goldman Sachs are the leads on this. I think Goldman Sachs is technically the lead and Morgan Stanley is doing some other things. These two are up. So when I said that banks were up this morning, these are looking good. And a lot of other banks are involved. Okay, Wells Fargo above the 50-day. We talked about Wells Fargo going long this morning. That was way over here. Okay. Okay, so this morning we told you that Wells Fargo looked good for the breakout. That was at about 70, 750, something like that. So we're up $2, about $2. Banks look good. Morgan Stanley. I'm going to get back into Morgan Stanley. I took some profits off last week, but I'm not going to buy the high. Okay, I'm going to buy the next dip. Hopefully it dips a little bit. I don't think it will, but hopefully it dips a little bit before the IPO on June 12th. Because as they're on this roadshow, Morgan Stanley and Goldman Sachs, they're being touted as the leads in this IPO. So what do you think their stock is going to do between now and the 12th? It's probably just going to keep going. I could buy some and hold my nose. I bought Morgan Stanley last week before last, and sold into strength last week as I was reducing my exposure. Okay, Amazon's starting to turn back up. Apple looks like it might do something here. Apple. Okay, turning back up. Apple.
Apple Pulse. Long dated.
Okay, Apple Pulse. Apple Pulse.
Joining me right now, Tom White. And I say, welcome back to you. I haven't seen you lately. Welcome back, Tom White. Glad you're here. Let's take a look at Amazon, which right now is at 258, down 1%. And you were combing through and found an options trade that you're going to share with us. This was bullish, I believe.
Yeah, Nicole, it's good to be back. If you take a look at Amazon, it's pulled back about 7% from those all-time highs that we hit just last month. This comes on the heels of pretty good earnings. Their growth rate on the AWS cloud side of their business was about 28%. That was the biggest gain as far as growth in that area of their business in about 15 quarters. So we're seeing a re-acceleration in AWS. They're also doing well on the advertising side. They reported over $70 billion over the fiscal
long dated,
12 months.
deep
That
calls.
continued to increase at over 20% gains. And then the Tranium chip that they've got going on, that's showing solid.
Okay, there goes Apple turning back up. All right, Microsoft at the lows, Nvidia at the lows, Netflix at the lows, Meta at the lows. I expected more from Meta. It looked like it was going to do something, Meta.
Stock's still up about 12% so far this year, but off those all-time highs by about 7%. I think there's some traders trying to take advantage of this, and a lot of times when you miss big rallies in names like we've seen in Amazon over the last year or so, people start selling cash secured puts, and that's what I kind of picked out here today that kind of stuck out to me. And this was on the August monthly options, so 80 days to expiration. Saw traders sell 5,000 of the August 230 strike puts out of the money to the downside here. They collected an average credit of $6.63 on those puts. That's what they could potentially profit per put that they sold. So this takes a break even where the trader starts to lose money below 223.37 over the next basically 2.5 months here. That's about 13% below the current share price. So on the weakness that we're seeing today and over the last couple of sessions, we've seen some traders trying to take advantage of that where, hey, if the stock does fall below that 230 strike into August expiration over the next 80 days, they'd be willing to buy the shares, but they're buying the shares at that break even of 223.87 or 37. That's 13% discount to where it's trading today. So if the stock does not go below that 230 level, they just get to keep this massive credit that they collected on a per book basis. So yeah, selling some cash secured puts in Amazon, trying to maybe get in on this dip that we're seeing today.
All right, and next up we look at Alphabet.
All right, stocks are fading a bit. Some are fading. ARM Holdings trying to turn back up. Oracle trying to turn back up. What's Palantir doing? Palantir.
Beta Pulse. 0 DT. Call sign.
They had in May also in this big capital raise. It's helping to fund this AI infrastructure build out. Remember, they reiterated that, hey, in fiscal year 2026,
feels like a little bit more selling underneath the surface. Just seeing some big stocks like Microsoft, Nvidia, Netflix, Meta moving lower at the moment. So good idea to be reducing your exposure, not increasing it. 10 weeks up, despite the New York Stock Exchange being at highs and breaking higher. We don't have any bearish signals. It just feels like people are being preemptive. Feels like traders are being preemptive. That's not a bad idea to be preemptive. We've been doing that for a couple of weeks now, selling some positions, rotating out further out in time for some other positions. July, August options. Okay, can we get a rally? Can we get a rally up?
Pretty hefty option premium that they're selling. So that takes a break even for this trader where they start to lose money down to $338 over the next basically 3.5 months. That's about 7% below the current share price. So maybe same type of setup where they're taking advantage
Nvidia
of rollbacks on
Pulse,
some of these big
long dated,
tech names,
0
selling
DTE,
downside puts
call
with the
side,
expectation that
size,
hey, it's going to stay here, move higher, or below.
Micron Pulse, long dated, deep calls.
Understood. And last but not least, we look at Intel, which had, since its last earnings, that it reported
Okay.
a gap up and then moved
Alrighty.
132, it's up over 400% in 1 year. What kind of trade did you find today?
Yeah, still up about 190% so far this year also. And I think that's the same thing. This traders may be taking advantage. The stock's
Google fading. All right, Apple turning back up. Tesla.
Long dated,
Apple
Micron
Pulse.
deep calls, shenanigans.
Apple turning back up. All right, let's go to Apple here.
Of this pullback. One that stuck out to me was out in the September monthly option, so 108 days to expiration. Trader bought over 16,000 of the September 110 strike calls, paid an average debit of about $16.80. So they're paying for this duration because they've got over 3 months in this.
All right, Apple.
The break even where this trader starts to profit is above
Apple.
126.80 over the next 108 days. That's about 18% above the current share price, but within that range, those all-time highs that you mentioned above $132 that it recently hit. So a lot of call buying in there on this down day today, Nicole.
Tom White, thank you.
Micron
And
Pulse,
thank you, friends, for
shenanigans.
joining us right here on the watch list every day. I'm Nicole Pedalides at 9 a.m. and 2 p.m. here on Schwab Network, and you can get our app. It's available in the Apple App Store 24/7, schwabnetwork.com. Market on close.
Spider Pulse, long dated, SMH
Schwab
Pulse,
Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you
Micron
can stop
Pulse,
waiting and
long
start
dated,
investing in stocks,
shenanigans.
bonds, money market funds,
SMH
and more.
Pulse,
Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, without the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
Microsoft still dropping off. Microsoft. That's too bad. Microsoft looked really good yesterday. Giving some back pretty quickly.
You're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it to leave everything behind,
SPX
literally come across the
long
entire
dated,
world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
ASTC may rest in 10 seconds. SPX may rest in 10 seconds. CLF.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters. And I'm Sam Barnes, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We will break down this morning's jobs data, which, hey, better than expected. What it tells us about the state of the market. Then we'll discuss how the implementation of AI is reshaping corporate America and what companies can learn from
Apple turning back up more.
And after the close, we'll get quarterly reports.
Futures trying to turn back up.
But for now, Marley, what have you been watching today?
Apple, what was the high of the day? Apple's high of the day, 315.45. Okay, we got another 60 cents to go. Apple, another 60 cents to go to take out the high of the day. Okay.
0DTE call sign. Size.
And shares of exchange stocks are falling today after the CFTC approved perpetual futures for Bitcoin trading on Kalshi. Both CME Group and Cboe Global Markets are now on pace to record their biggest weekly drop since 2020.
Triple
As
semi
investment
pulse.
concerns grow
Long
and
dated.
regulators could potentially
Deep
approve
calls.
other asset
Deep
classes to
puts.
trade via
0DTE
Lots to get to. There are
call
lots of
sign.
numbers to unpack.
Size.
Let's check in with the markets before we get to that and more. We are holding on to these gains throughout the day. We've been in green territory. The S&P still trading a 1/10 of a percent higher at 76.08. On the Nasdaq, we're 1/4 of a percent higher, 30,595. The Dow up 0.5%, 51,332.60. And the Russell 2000 is up more than 0.8% on the day, 29,3009 right now. As we take a look at our 10-year, we're slightly lower, 447. The dollar's at 99.18. Gold is trading a 1/4% higher, 45.1770 a troy ounce. Crude oil 93.84 a barrel. That is slightly elevated. Bitcoin has fallen under that 70,000 mark. We are now at 67,435. We haven't seen numbers like that since April. That is a 6% drop off since last April for those Bitcoin numbers. Sam, I do want to check in with you though and see what's sticking out to you on this session because we certainly have no shortage.
Okay, Micron turning back up. Micron looks like it wants to go some more. Micron just crazy strong. Microsoft's turning, Nvidia's turning up now. Shorts are covering. We've got less than an hour to go. Less than an hour to go.
My analyst. Long dated. 0DTE call sign. Size.
So Dan, I just kind of mentioned Microsoft biggest drag on the S&P. Obviously, the S&P's higher, but it's one of the reasons why it's not higher as high as it could be, I should say. You have a very bullish price target on Microsoft, 575 or more than 25% upside.
0DTE call
conference today.
Size.
Does it change your view on the stock long term at all?
Yeah, Frank, I mean, look, they're defending their turf. They're going after developers, and that's really front and center in this arms race that we're seeing play out. And I think these are the important steps, not just on Copilot and build, but what ultimately will be Azure. And that's why I think right now the market is mispricing Microsoft to what I believe is still going to be the monetization phase that's going to happen the next 6-12 months. We like everything we're seeing here at the developer conference.
All right, like everything you're seeing. I want to just very quickly touch on that.
Okay, there goes Microsoft, Apple going.
Because we're going to talk about cybersecurity in a minute. A lot of people see quantum as basically something that could really hurt the cyber sector. Is this quantum news?
Apple go time here. Apple.
From time to time, but the news out of the developer conference today.
It's a step out and look at IBM's playbook with ARM, right? I mean, you want to see more exposure to quantum.
Microsoft turning back up.
And look, it's our view. That's a derivative of the fourth industrial revolution that we're seeing, and not just what we're seeing from.
Please take the opportunity to reduce your exposure in the markets. Okay. Also talking to myself.
As we're continuing to see innovation expand, and I think it's accelerating a lot quicker than anyone would have expected.
Okay, looking good.
Obviously been focused on some smaller companies that have now become pretty large.
All right, also want to hit on Alphabet. Your price target there at 370, just about 1% or 2 upside. In your view, what do you make of this $80 billion equity sale that they're doing, and the fact that it's going to be in tranches?
Look, I think that's a smart way to do it. And obviously, you see Berkshire as another, sort of backer of it. Look, we're talking about $1 trillion that's going to be spent in big tech next year in terms of CapEx. So this is going to be, if you look at how tech companies are doing this, partial debt, partial stock sales. I actually think the market's shrugging this off pretty well relative. I think it just shows. Right now,
Shenanigans.
you go back a year ago, New York City cab drivers bearish on Alphabet. Look today. They are in a phenomenal position, when it comes on the cloud side, when it comes to Gemini. And I think it's a smart time to do this. You want to see them go on the offensive, not defensive.
All right, to your point about the timing, earlier we heard from David Solomon and Leslie Picker doing a great interview. He's saying right now there's more greed than there is fear in the market. So actually, I emailed with Alphabet. They say the $40 billion of this is going to start after July 1st, as opposed to right now. Are you concerned that maybe sentiment could change? Solomon also talked about the lens that people are viewing these AI investments, that could potentially change. I know it's only a month. I know everybody's bullish. But these days, a month seems like a very long time. Are you concerned at all that sentiment may change when it comes to the AI trade and the AI build out over that time?
And I get, obviously some of the concerns out there, but it's my view we're still a third inning of the AI revolution, right, relative to where this 9-inning game's going. And we could definitely have sort of ebbs and flows in this market, but when you look where Alphabet's positioned, they're kind of front and center. They're top of the mountain right now. Amazon clearly has made up, sort of narrowed the gap. Microsoft, I think, obviously is doing a lot of great things in terms of Azure. But look, Alphabet can't think about weeks or months. We're talking about years. We're talking about fourth industrial revolution in terms of what they're going after.
Dan, please sit tight. We want to shift gears just a bit, looking at Palo Alto, up nearly 60% this year, thanks in part to strong AI-driven cyber demand. The company reports after the bell. Our Seema Modi joins us now with what investors should be watching. Seema.
Hey, Frank. Well, Palo Alto Network CEO Nick Ashore needs to answer two important questions tonight. One is how have
All right, Microsoft coming off the low, short covering. NVIDIA a little short covering as well. Netflix still at the low. Apple moving a bit higher, just off the highs of the day. Apple.
The attack surface is evolving and expanding at an unprecedented pace. They point out that Mythos has discovered critical vulnerabilities that survived decades of automated testing, and many, Frank, are pouncing at the opportunity. IBM revealing a new security platform to identify vulnerabilities in the open source software space. CEO Arvind Krishna telling me last week that Mythos really is the driving catalyst behind that new product. Cyber stocks, as you mentioned, have rallied in recent weeks. Expect competition from the AI labs to come up on the earnings call. In terms of numbers, the big metric to watch will be guidance for the fourth quarter and the full year outlook. Remember, last quarter, Palo Alto Networks beat on all major metrics, but missed on its lighter guide, and that's what sent the stock lower.
Seema Modi, thank you very much. Again, Palo Alto reports after the bell. Dan, I want to come back over to you. Look at your price target on Palo Alto Networks. A bit muted, very similar to Alphabet, 300, about a 2% upside or so. But you said they have a product that's a bit of a game changer, at least potentially. I want to make sure I'm pronouncing it right. Adira, you say they're the only vendor that's offering unified coverage across network, cloud, and identity at scale.
Yeah, and Frank, also the CyberArk acquisition as well.
Q's
that puts them in pole
long
position
dated,
along with
Google
CrowdStrike when it comes to cybersecurity.
shenanigans.
We talked about the SaaS apocalypse, what happened to cybersecurity. If we go back to March, that was way overdone. It was golden opportunity. I think, look, we're going to have a Jalen Brunson-like week for cybersecurity when it comes to Palo Alto and then CrowdStrike.
Palo Alto with earnings tonight.
Budgets are just going to increase with AI, with Mythos. We think going from 5% in budget to 10%, which is why this is going to be a golden age for cybersecurity.
Okay, what's Zscaler pulled back earlier, right? Zscaler. All right, starting to bounce a little bit. Looking for a follow through. Zscaler. Palo Alto reporting tonight. And CrowdStrike tomorrow. CrowdStrike. Palo Alto. PANW. Palo Alto tonight.
Long dated.
what we're seeing across the food chain. That's why the memory super cycle is going to continue to play out. And as the demand continues to outstrip supply, that's not going to correct itself. But I think investors, we're looking at numbers that are probably 20% underestimated when you look at the next 1 to 2 years.
DT.
And I think the bears will continue to be in hibernation mode when they can't see AI in the spreadsheets. And that's why it's our view. We're going to see NASDAQ 30,000 driven by
DTE.
stronger growth monetization, not hype.
All right, Dan, I'm saying this cycle is going to be longer than Wembanyama. Dan, always good to see you. Thank you very much. All right, by the way, the Palo Alto CEO, he's going to be on Mad Money tonight at 6 p.m. Eastern Time.
Futures turning back up. All right, futures looking better. All right, there goes Apple. Okay, let's see what the hedge flows look like going into the last 50 minutes of the trading day. Let's see, hedge flows kind of just sitting here doing nothing, right? Put wall down there. We got some resistance right at 76.10. 76.20 was that 99 percentile earlier, and many of you traded up into that, Mondo being one. Okay.
We're definitely in a moment where there's more greed than there is fear. Okay, and that's one of the reasons why people that need this capital are coming to the markets, because the capital is available. And so if you're advising companies that need
That's a good point.
like basic advice for 42 years of doing this, when capital is available, if you're capital consumptive and it's available, take the capital. Okay, if you know that you're going to need it. And so
Soft pulse.
Given the way equity markets
Apple.
debt markets are robust at the moment, I think
Apple 315.45 was the high earlier, right over here. Okay.
Solomon also said there's unprecedented liquidity and wealth in the markets to absorb this. He said he's encouraged by what he's seen so far. However, he notes something could change that creates more volatility given the size and scale of a, quote, capital speed race, Frank.
Leslie Pickard. Leslie, great interview. Just really insightful.
Okay, that's the morning level right there.
All right, we want to bring in our panel. Schwab's Kevin Gordon and Northwestern Mutual's Matt Stuckey. A lot to talk about, gentlemen. Thank you both for being here. Kevin, you're right here. Why don't we start with you?
A resumption of Apple back to the highs. That would be like almost two standard deviations from VWAP. VWAP is down here. Okay, the green line is standard deviation 1. Yeah, it looks like we're trying to get up there now. Nothing seems to be holding Apple back.
0 DT.
The market that are elevating cap-weighted S&P 500, but I think that some of these, more extreme moves for individual companies, even within the Mag 7, sort of underscores a theme I think that we've been seeing for, frankly, the past year or two, where there's been more dispersion, there's been more of a fraying among those names where they're not necessarily moving together as a monolith. There's a pretty big gap actually between, a name like NVIDIA versus a name like Microsoft in terms of their performance this year, but also just their contribution to the index's return. I'm not an individual stock analyst, but looking at it from the standpoint of how much is one subtracting versus how much is one adding to the S&P, this is another year in which you're seeing that dynamic take hold where there's been a pretty big split between the two. So I think it's a theme that will probably continue because those names are just not moving together as a monolith, and they haven't been for the past year and a half.
You mentioned extreme moves, Matt. I want to come over to you. Marvell today, last time we checked, it was up 20-something%. A lot of people see that as potentially a poster child for some of the froth that's in the market, maybe over exuberance. When it comes to the chip trade more broadly, are you seeing that in this?
Well, certainly those names have moved up quite a bit over the last couple of months. A lot of it has been fundamental, though. We've seen CapEx revise higher for the hyperscalers in 2026, and that expectation is getting more solid as you look into 2027. That's going to be a very strong growth year as you look forward to next year. And so while
All right, Apple, a little profit taking.
SanDisk Pulse. 0 DTE.
Fundamentals are pointing to that direction. Maybe it's a little bit overextended relative to where numbers have been trending. But I think if you're looking at numbers where they sit today versus where they're likely to land over the next 6 to 12 months, they're likely going to be upwardly biased. And so there's fundamental support behind this move, but certainly sentiment's playing into it as well.
All right, I do want to talk to you about the bubble issue. You gave us some great stats from January to February. We're talking about breadth. 66% of S&P 500 constituents out.
Snowflake turning back up. Snowflake.
Until now,
Okay, Snowflake with a nice little reversal back up now.
I think it is somewhat of a concern. I think narrow markets, just all else being equal, are a little bit more fragile than markets
Snowflake.
that broadly participated in through high levels of breadth. And the lever for that has been just this move in rates. It's been somewhat a function of rising inflation expectations as the fallout from the conflict in the Middle East. And so as a result of that, you see interest rates move higher, breadth move lower. Hopefully what we see is some sort of resolution out of the Middle East that pushes down inflation expectations, that pushes down rates, that broadens out the economy and broadens out markets. I think there's just naturally more sustainability in that type of market advance versus what we've seen the last couple of months.
All right, Kevin, I want to come back over to you. I asked you about Alphabet and Microsoft. You gave me a kind of a stoic answer, but earlier on X, you weren't so stoic. You said things are getting silly again, and non-profitable tech is back in kind of this 2021 territory. What does that mean?
Well, I mean, I think it highlights this whole discussion that you've been having, whether it was with Dan or Matt just now, or even the interview that Leslie had with David. I think the discussion around the sentiment environment, it's appropriate to point out some of the behavior that you're seeing that does harken back a little bit to 2021 and this run that you mentioned or highlighted in non-profitable tech. I mean, that's happening also with, the heavily shorted names, the weak balance sheet companies, all of which were rallying in an extreme way off that 2020.
Meta, no follow through.
Obviously,
Okay.
There are many differences today in the economic backdrop versus back then, so it's not a perfect analog. But I do think that this discussion around, breadth and how many members are outperforming the index, those are more objective measures that you could just look at and compare to any period. So yes, it is the case that there is a weaker breadth profile to the market today. The fact that you haven't seen a material pickup in the percentage of companies above their 200-day moving average, certainly nothing consistent with the strength that you've seen at the headline level for the index. All of that starts to add up a little bit to make some more worrisome signals and signal that there's probably some sort of air pocket that's not far from us if that doesn't converge at some point soon. But
Corey, is the mayoral election tomorrow in LA?
Yeah, I mean, your nose to us, the economy looks pretty strong, but I do want to go back to that Solomon interview. You were watching it as well. It was really interesting when he said there's more greed than fear in the market, and of course, for a healthy market, you need kind of a balance of both. Where does that
Micron still pushing higher.
over the fear, and where should investors be cautious when it comes to the greed versus the fear?
So I still actually find, I've been on the road almost every week for the past 2 months, speaking a good chunk of that speaking with
Today?
With
Oh,
cool. Retail investors, and I find that right now, in a behavioral sense, there is definitely more of the greed aspect showing up. You look at fund flows, especially in the tech space, it's pretty stretched, it's pretty extended in favor of just that area. What I find is that there's still a relatively healthy amount of skepticism and fear on the attitudinal side. There's times when you have big splits between the two, but I find that you're probably not going to get into that more euphoric phase until you see everybody sort of jumping in on the attitudinal side. Not that the conversations I have are the only gauge for that, but there's still a little bit of a mismatch where I think there's some skittishness around whether it's some of the large IPOs that are coming on, how much that might make even for more of a frothier environment, or what you've already seen in some of the runs, whether it's in semiconductors in the U.S. or the 226% year-over-year gain in Korean stocks. So all of that is still fueling more of a euphoric sort of nature or mindset on the behavioral side, not yet as much on the attitudinal side.
Man, I want to get over to your attitudinal. You're a bit of a contrarian, so you like the small caps and the mid caps.
All right, so the New York Fangs are mixed at the moment. Let me take a look at that. New York Fang is mixed. Okay, New York Fang is doji inside day. Can this continue higher or push lower? I mean, there's nothing that really says the markets are going to roll over. New York Stock Exchange is at the highs. It does feel, I don't know, it feels risky, but is it really? Is it really? It's just, we continue to move higher. New York Stock Exchange is at near all-time highs. 23.4, 23.6. Now we're currently trading 23.3, 25, 23.488 rather.
Nvidia pulse, long dated, deep puts,
combination of things. It's a way to be a little bit contrarian. It's a way to look for diversification outside of concentration in the U.S. large cap space. And you're paying a lower price point, all else being equal. And so to us, we like that combination. We still like, cap weighted S&Ps in our portfolios, but at the margin, we're leaning into those opportunities outside of that space.
All right, Kevin Gordon, Matt Specky, great to have you both here. Thank you very much. Want to send things over to our Christina Parts-Nevelis for a look at the biggest names moving into the close. K-Parts.
Hi, Frank. Well, Generac Holdings up about 5% after announcing it's supplying power for an unnamed leading hyperscaler data center operator. Generac CEO Telly Sandys earlier that the move towards powering data center infrastructure is going to fundamentally change the face of the company. Marvell Technology surging roughly 29%, almost 30% after NVIDIA CEO Jensen Huang said the semiconductor firm is set to be the next trillion-dollar company, adding that Marvell's networking and connectivity chips are essential to computing tasks in data centers. Marvell
Zero DTE, coal side.
But if it needed to get to $1 trillion, the stock would have to go to over $1,100. Far from there right now. Lastly, shares of Shake Shack are dropping roughly 8%, almost 9% after the fast casual burger chain cut its full-year earnings outlook.
Yeah, Scott, I have some July.
Uncertainty and competition for the lower forecast. Frank, you a Shake Shack guy?
I'm not really a Shake Shack bro. I don't hate on Shake Shack. I'm not really a Shake Shack bro. I'm more like Five Guys.
Okay. When it comes to fries.
I do like the fries. They make really good fries. Okay. Christina, let's talk about our restaurant preferences when you come back. All right.
Snowflake, a little fade there. Microsoft off the low. Oracle trying to hold on. Oracle inside day. Feels like the markets at a minimum need to consolidate some up here. Doesn't mean it will. IWM back up to the highs. IWM. You got the 10-year yield, US 10-year fading. US 10-year yield fading.
Long dated.
A little bounce just now, but fading from the highs. If the US 10-year yield can get below the 50-day right here, that blue line, that would be good for IWM. IWM, that would be good for. So maybe we see IWM follow through tomorrow. IWM is at the highs. It's starting to climb right here. IWM looks like it wants to go.
Marvel Pulse. Spider Pulse. Long dated. Zero DTE. Call side. Size.
Okay. Looks like IWM wants to push a bit higher. IWM.
Avgo Pose. Long dated. Deep calls. Oracle Pulse. Long dated. Deep calls.
IONQ, what are you doing? IONQ. IONQ. All right, that's up at the highs. Can it follow through tomorrow? IONQ, the quants have been doing okay lately. QBTS, D-Wave, Quantum, QUBT, and IBM. IBM, almost an outside day on IWM. IBM. NVIDIA trying to turn back up. NVIDIA.
And welcome back to Closing Bell. We're tracking two big moves in retail today. Our Brandon Gomez is following what's dragging Dollar General shares lower. But first, Gabrielle Fonrouge on what has Victoria's Secret headed for its best day ever. Best day since the spinoff in 2021. But that's ever, Gabby.
Yeah, no, so shares of Victoria's Secret are surging today
Spider
after
pulse.
better than expected
Long
Q1
date.
earnings.
Arm
Laundry
pulse.
retailer posted earnings per share of 60 cents, which was double consensus estimates. It also saw better than expected
Long
sales.
dated.
The strong
Deep
quarter, along with
calls.
lower tariff rates, led the company to raise its guidance and issue a bullish outlook for the current quarter. I spoke to CEO Hillary Super, and she said the growth the retailer is seeing is across all income groups. Crucially, the highest growth is coming from two distinct segments: those making under $50,000 in income and those making over $200,000 in income. She said it shows, quote, "In a world full of choices, she's choosing us." Now, during the quarter, we did see higher tax refunds benefiting a lot of retailers. The finance chief, Scott Sakella, told me the extra stimulus didn't have a major impact. He said trends have so far remained consistent in the current quarter, even after those tax refunds have dried up. Now, it's also important to note that the short interest on this stock was high coming into the print, so that is playing a big role in this break.
Yes, very high, up to about 19%, I believe, according to S3 Capital. So that could be a factor. By the way, Victoria's Secret ringing the bell here at the New York Stock Exchange. So we're going to see Hillary Super on this super day for Victoria's Secret. All right, now let's get to more of that Dollar General moves. Our Brandon Gomez right here on set with this, much more on that story for the discount retailer.
Yeah, Gabby really hit the ends of the income spectrum. Dollar General had commentary on what's happening in the middle there, delivering stronger than expected earnings, beating on profits, raising its full year earnings outlook as more shoppers continue to look for value. Now shares are lower after initially.
All right, CRML. The metals did sell a little bit in the evening session, starting to see some short covering.
The company's core lower income customer remains under pressure, telling investors there's a lot of distress right now with sustained inflation and gas prices largely above $4 a gallon. At the same time, the company says it's seeing an accelerating trade-in effect with higher income shoppers increasingly turning to
Netflix, no follow through on that short covering. It just looks like it's going to fade some more. Apple near the highs.
Adding that the drug and grocery side of the business is where it's really seen the most trade-ins. Now, still, management did not raise sales outlook, which may
NVIDIA
have investors throughout the day,
long
along
dated.
with warnings of more volatility ahead. Again, consumers are having to deal with these higher prices, fuel, what have you.
All right, so you're talking about those consumers making over 100 grand, so it sounds like they may be trading down. I was looking at the price of gas. A year ago, it was
Apple back up to the highs. Apple.
Did management say that's a factor in any way?
They definitely talked about it as a factor, not only in what folks are putting in their shopping carts,
Apple.
but also the frequency in which they're taking.
Trying to get back up to the high of the day there. Earlier, there was lots of volume. Into the evening session, less in the way of volume, a little bit more profit taking.
I know I'm getting much more mindful on how many trips I'm taking everywhere. I mean, you look at those gas prices, I think you just have to these days. Yeah, all right, Brandon Gomez, thank you very much. All right, still ahead. Greg Collin of Goldman Sachs joins me right here post 9 as we close in on the record highs across the major averages.
NVIDIA pulse. Long dated. Deep calls. Zero DTE. Call side. Size. Zero DTE. Call side.
Apple just hanging out here. S&P.
Q's pulse. Long dated. Zero DTE. Call side. Q's pulse, long dated. Marvel pulse, long dated. Apple pulse.
Okay, here goes CRML turning back up. CRML.
Marvel pulse.
Just looks like short covering in the day. This is market's getting more and more risky. It needs a catalyst to snap this 10-week rally. New York Stock Exchange is at high. I can't really say, we should be freaking out or, being really concerned. Look at the New York Stock Exchange. Does that look 23,500? Does that look bad? I would suggest that this is looking extremely receptive to the bulls after 10 weeks. Look at this market. Look at this. This is the New York Stock Exchange. All right. 2,400 components, 70% of which are American-related companies. About 25% are ADRs, and about 5% are tracking stocks and REITs. This looks really good. This is the high over here, 23.6, all-time high. Let's look at XII, the ARC Institutional Index. What is this doing? Are they buying or are they selling? They're buying. Okay, if you switch to Elder Impulse. Okay, if you switch to Elder Impulse, where are you? Elder Impulse gives you all green sticks, right? There's not even a blue stick, so there's no pause here. That's bullish. Junk bonds, JNK. Okay, this is a caution signal. Bitcoin is definitely a sell signal. So Bitcoin, no doubt about Bitcoin. I'd be cautious with this one. Bitcoin's at the low of the day. Okay, Snowflake turning up. Individual names doing okay. Snowflake is a blue stick. Okay, Microsoft turning back up. Microsoft. $60-minute.
Long dated.
Microsoft. Intel. Okay, Intel blue sticks. CRML, the metal companies. CRML, USAR. These are all pointing higher. MP materials. The banks, especially the banks. The banks looking really strong. Look at the banks. Okay, banks. These are doing well. Okay. Goldman Sachs, Morgan Stanley, JP Morgan, Citigroup, Bank of America, you name it, they're all working. Wells Fargo. We mentioned this one earlier this morning, Wells Fargo. That's closing at the high of the day. That's pretty awesome. Look at the intraday price action on Wells Fargo. We mentioned this early this morning that this is probably going to keep going. Yeah, this little dip, and then we took off to the races. That's Wells Fargo. The Bank of America was doing well. Look at that. Citigroup, PNC. KBE, the banking index, ETF. BANK, I think that's BANK. Okay, the bank index, S&P. NASDAQ bank index, this looks good. FAZ. FAS. Looking okay. EUFN, even the European banks, they're looking pretty good. What's Greece doing? GREK, Greece. That's at the highs. EWC, Canada. Okay, Canada, the breakout. We finally got the breakout in Canada. Okay, I was telling you about that. If you looked at the Sunday post that I made on EWC, we were looking for the breakout. EWC. I wasn't able to find any good options for this. EWC. Finally got the breakout on EWC. Come on. EWC Canada. Let's see. EWC December.
0
January.
DTE. Call side. Size.
INFQ.
EWC 60. Mm-hmm.
Marvel Pulse. Long dated. Bitcoin Ponzi Pulse.
EWC.
And welcome back to Closing Bell. Markets are extending their record run today with the S&P hitting a new all-time high. Let's bring in Goldman Sachs Asset Management's head of public investing, Greg Collin. Greg, great
Okay, EWC. I mentioned this one on Sunday as a volatility compression pattern. Okay, volatility compression pattern is breaking out.
Bitcoin Ponzi Pulse. Long dated. Deep calls.
Every single day in the news with what I'm seeing in markets. And today is another example of that. And then what we say to clients is, look at earnings. Earnings are the story of this entire moment right now. We came into this earnings season expecting 12%
Bitcoin Ponzi Pulse. Long dated. Deep calls.
That's a significant number. That will be the 6th consecutive quarter of double-digit earnings growth. So that's the piece of information to watch for. You may say, well, it still feels frothy. It still feels like there's a lot of momentum and movement in that. And what we would also say to that is the S&P is up something like 11% this year, and valuations have actually come down. So it is all about earnings, and that's the thing we would focus on with clients.
Okay. Does it feel frothy, or is it actually just frothy? You look at a stock like Marvell, you look at the chip trade. Also, Kevin Gordon from Schwab, he was here earlier talking about non-profitable tech, kind of moving up to the highs that we haven't seen since 2021. Isn't it officially frothy?
TSM Pulse. SMH Pulse. Long dated.
And to be humble as investors. And so that's what we take the approach on.
SMH Pulse.
We would still say that there's plenty of opportunities around the world to invest. And we bucket the categories into 3. Investing for opportunities for growth, investing for opportunities for income and being intentional about income, and the third is to be thoughtful about how to be defensive in your portfolio.
All right. You like emerging markets as well. Outside the U.S., other central banks are actually hiking. Doesn't that kind of hurt the narrative when it comes to emerging markets?
Not necessarily.
Meta
Markets are a key example of playing the AI trend outside of the United States. And so if you think that AI CapEx is going to be something like $1 trillion globally, 2/3 of that is going to be spent on data centers and AI hardware.
Micron
AI
Pulse.
hardware in
Long
particular
dated.
is predominantly built in emerging markets in Asia. And so we're preferential towards emerging equities. We're also preferential towards emerging debt. And so if you look at emerging debt, this is another example where you can get 300 to 400 basis points above U.S. Treasuries. You look at the fiscal position, which is quite frankly better off than a lot of other developed markets, and you get real income or real growth, real GDP. That's also, sometimes better off than other situations as well. So we think emerging markets still present lots of good opportunities, and that's a recommendation that we're making to clients as well.
All right, so Greg, I know you've been watching the CNBC all day because the boss was on.
Yes.
David Salt was on. I know you saw the whole thing.
Yes.
In case you're watching, David.
All right, what we got? 20 minutes to go.
Talking about when it comes to AI trade in Asia, even here in the U.S., isn't that the greed that he's talking about that seems to be overcoming the fear? Is it possible that right now we're at the peak of this AI trade, and that maybe it's time to pull some chips off the table and maybe play the broadening trade? We heard another guest say he wants to be positioned for the
Intel Pulse. Long dated. Deep calls. 0 DTE. Call side. Size.
All the leaders at Goldman Sachs and to market participants more generally, it's incredibly important to be diligent on risk when you have markets at these levels. He's not calling it a bubble per se. He's not calling it anything else like that. He's just saying focus on risk,
Oracle
be humble,
Pulse.
and that's what we're doing.
Long dated.
You're
also a
deep
bit of a
calls.
contrarian. You're kind of bullish on things like levered ETFs, buffered ETFs, I should say. You're trying to get into debt right now.
Tesla
Everybody else is
Pulse,
excited about these
long
IPOs,
dated.
SpaceX, Anthropic, OpenAI. Why are you kind of pushing towards these other kind of hedges, if you will, when everybody else is kind of going to the moon?
Because, Frank, we try to build entire portfolios for our clients. We're not just trying to get at the hot dot or whatever is, on the news today. So we're trying to build portfolios that focus on growth,
long dated.
income, and being defensive. And so income is another place where we think it's also very important to be intentional about your allocation. Municipal bonds, for example, they have 4 to 4.5% after-tax yields. On a tax equivalent basis, that's like 6.5 to 7%.
Spider Pulse,
That's a good
long
opportunity
dated.
set for all investors and investors in particular in higher tax brackets. We'd also say it is important to be thoughtful about risk and thoughtful about valuations more generally. So having investments in there like buffered ETFs, like diversifying alternatives is also an area that we think makes a lot of sense.
All right, so with the markets at record highs, I think we'd have to talk just a little bit about downside protection because there is that risk. A lot of notes about the potential for a pullback. What's the play for downside protection in this market when we see the equity market just moving high? How do you protect yourself?
You protect yourselves through some of these strategies that I was just talking about. So buffered notes, buffered ETFs, I should say, also liquid alternatives. The main piece that I would point out here is how do you be thoughtful about building a whole portfolio, being mindful of diversification. This is a moment in time when
Intel
individual
Pulse,
investors
long
have
dated.
more tools in the
Deep
toolkit than
calls,
they've ever had
Marvel
before.
Pulse.
And so either using an advisor, doing these things directly, individual investors used to just focus on investing in a 60-40 portfolio, and that was kind of their set it and forget it. There's way more tools in the toolkit today, which I think is a great advantage for individuals.
I want to ask you one other thing. You said direct indexing is one way to play this. We just heard some other
Nvidia
guests say we don't want to be in the index.
Pulse, long
There's just too much
dated.
differentiation
Tesla
between different
Pulse,
stocks. Whether
deep
the valuation
calls.
performance, we're seeing stocks with good earnings actually pull back because they just weren't good enough. When you're saying direct indexing, are there certain indexes that you favor?
Direct indexing is really a concept that's focused on tax loss harvesting, right? So as an individual, what you're actually focused on is what is your after-tax return, not your pre-tax return. And so being
Triple
thoughtful
semi
about your
pulse,
core allocation,
TSM
having
Pulse.
a tax component to it is really, really important.
Greg, great to have you here. Thank you very much.
Great to be with you, Frank.
All right, coming up next, we're tracking the biggest movers as we head into the close. But first, a special programming note. Our Sarah Eisen will be sitting down with Israel's Prime Minister, Benjamin Netanyahu, tomorrow at 10 a.m. in a CNBC exclusive interview. You do not want to miss it. Closing bell. We'll be right back.
All right.
SPX Pulse, long dated.
Palo Alto Network's earnings tonight.
Q's Pulse. Apple Pulse, Oracle Pulse, long dated, deep calls.
Okay, Canada breaking out. You got the long run up in Canada, then the consolidation, cup and handle at the top, on top of everything else. Looks good.
SPX Pulse, long dated, deep puts, 0 DTE, call side, size.
All right, NVIDIA, no follow through. It's still making lows here, NVIDIA. Not everything is working. But after 10 weeks, I'm surprised the markets are as strong as they are. We've got 15 minutes, 11 seconds to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, June the 2nd, second trading day of the month, second half of the year.
Deep calls, 0 DTE, call side, size.
You should be taking some profits off in the strength, reducing your exposure. If you're a longer-term investor, you don't have anything to worry about, really. Most, I would say, at this point would be a 1 to 2% pullback. And that's mainly because of what I'm seeing on the New York Stock Exchange. If the market's going to roll over you would expect to see weakness here. Here's the New York Stock Exchange. 2,400 components. Doesn't look like it's going to fail. Okay, 60-minute at the high of the day. 60-minute. It's above the 20 EMA on the 60-minute. This doesn't look bad. Junk bonds. Junk bonds are neutral. Neutral to bearish. I would say mostly neutral. The 10-year yield pulling back. That's good for IWM and small caps. 10-year yield. Let's see what Core 1M looks like. Core 1M did it. Core 1M's got to be high. Down below 8 still. The main reason is because all these calls are still very expensive. We need something to happen to crush these calls. Calls are so expensive. What we could have happen is what we did a couple of weeks ago. A couple of weeks ago, we had this little pullback right here. Calls got, IVs got whacked on that little pullback, that 3-day pullback right there 2 weeks ago. Came into last week, things were kind of refreshed, and now we're right back to where we were. Calls are expensive again. You can see that very clearly if you look at this right here. Okay, if you look at this right here, you can see that if I enable more stocks, you can see there most of them are congregated on the far right. Very expensive, like LRCX has an implied IB rank of 74%. By contrast, if you look at SPY, if you enable SPY here, SPY, you can see SPY down here in the center. SPY has an IB of 13%. LRCX has an IB of 74%. Broadcom has an IB of 89% with 100% risk reversal rank. These are due to either pull back or to reduce their volatility.
Long dated.
All right, Christina, thank you very much. Christina Partsinevelos. Coming up next, major averages headed for another record-setting close, while Bitcoin is on pace for its worst first half of the year since 2022. That and much more when we take you inside the market zone.
Tesla pulse. Long dated. Deep calls. Deep puts.
All right, so these are things are expensive. Let's see. Palo Alto Networks. PANW is up there in the top right. I don't know if you see it right there. Palo Alto. Dell. Where's Dell? Dell's up here too. Dell popped. Didn't matter. Didn't matter. That was a super expensive. Dell. What else popped? Snowflake. Snowflake's up here somewhere in this mess. Let me just turn this off and on and see if I can see it.
Q's pulse. Long dated.
I don't even see it. Snowflake. Okay, let me turn all these off. Let me turn all this off. Okay, let me see. Snowflake, where is it? S-N-O-W.
Deep calls.
S-N-O-W. S-N-O-W.
Shenanigans.
Oh, it's way over here. So Snowflake pulled back. Huh. That's interesting. Risk reversal is 25%. Snowflake looks like it wants to keep going.
Long dated.
Puts are expensive. That's pretty wild when you think about it. Calls. Huh. Expensive volatility. Upside potential. Snowflake. Okay, so that's what we have tonight. Snowflake earnings. Snowflake. Palo Alto, sorry. Palo Alto earnings. Basically 10%. So it's a $300 stock. So $30 is your expected move. At least $30 plus or minus. Okay, if you want to play covered calls, you could trade a Iron Condor, maybe 30 bucks, probably 35 bucks either way, or 40 bucks either way. That's probably going to be about a 20 delta or an 18 delta. I would play that. I'm not going to, but I would play that because I already have calls. So we'll see if this has a meme reaction. Pushes higher like everything else has been doing lately. All right, see Dr. Stocks Talk and AXTI. That was on the watch list again. AXTI, I believe. AXTI.
Long dated. Meta Pulse. 0 DTE. Call side. Size.
AXTI. All right, that looks okay. Bounce. Let's look at the stocks on the watch list. We got 8 minutes to go. 8 minutes to go. Let me just look at the stocks on the watch list real quick. Let's see. This is the wrong one. This watch list here. Watch list. Okay, Apple obviously at the highs of the day. Apple's at the high of the day. This is on the watch list. Apple on the watch list, day 2. Okay, so Monday, Tuesday, not too bad for the week so far. Apple. Astera Labs, ALAB. Astera Labs, that's also bouncing. ASTS, we were looking for the robotic, the space companies to bounce. That's bouncing. BlackBerry, that's at highs. Cisco, breaking out today. Cisco. Celestica. CLS, big move on Celestica. Credo, CRDO. Okay, that looks all right. Dell, of course. Dell. Firefly, FLY, Firefly. Hasn't followed through yet. First Solar. The solar stocks have been on fire. Enphase. Okay, those have been on fire. Look at Canadian Solar, CSIQ. CSIQ. SEDG. SEDG. Solar Edge. Sunrun. This is one that Lee Star used to like to trade. Sunrun. DQ is a Chinese version. Solar stock. DQ. Nothing there. Okay, what else? IONQ. IONQ back on the watch list again this past week. Okay. IONQ on the watch list. Morgan Stanley, obviously, banks doing well. That's on the watch list. Microsoft, little bounce. Microsoft looked good yesterday. I can't believe it came back so hard today. But that happens. Nike, that one fell over. Nike. Oracle, gapping down as well. From the high. It's inside day.
Long dated. Shenanigans. Google Pulse.
37% on the year as the business toes the line between hardware and software. It looks like options traders think earnings tomorrow could be firing on both those cylinders. Of the nearly $1 billion in options premium traded on the stock today, more than $800 million was tied to calls, and more than twice as many calls were bought than puts. Options pricing currently expects a roughly 8.5% move after the report, which is a little above the median reaction of 7% the past 4 quarters. Apparently, traders think that pricing is more than fair because the most popular contract right now by volume, which also did about $20 million in premium, is the 500 strike call expiring Friday. It goes for over a little 12 bucks, meaning bulls in that option contract need Broadcom to ramp at least 7% into the weekend, Frank.
All right, Oliver Rennick live from the SIBO.
Okay, Oliver Rennick.
Let's take a look at the action in crypto today.
Palo Alto.
Under 70K for the first time since April, and crypto stocks are following lower. Michael Saylor's strategy is leading the decliners, and then other treasury firms seeing the biggest losses in this sector. And this started yesterday, Frank, after Strategy reported it sold a small amount of its Bitcoin. That spooked investors, pushed Bitcoin lower, which sparked almost $600 million in long liquidation.
Oh, sorry about that.
The Bitcoin, of course, was already struggling.
Uncertainty around the U.S.-Iran war has been weighing on Bitcoin while stocks trade higher. So that, makes investors question Bitcoin's two main narratives. One, that it's digital gold that should benefit from geopolitical uncertainty, and two, that it trades like a high beta tech stock. So sentiment kind of crumbling here, Frank, but Bitcoin's been here before. A lot of conviction being tested.
All right, today, Mikhail, with the very latest on the cryptocurrency complex. All right, now we want to bring in our Megan Chu from Women's Trust. Not our Megan Chu, but I like you a lot, Megan. Today, I like you too. I like you too. The Dow and the S&P on pace for records, but you're saying the market's actually headed for a breather. What are you seeing out there?
Tesla pulse.
Yeah, Frank, if we end this week on a positive note, it would be the 10th straight positive week in a row, which is a streak we haven't seen since the mid-1980s. So the momentum has been incredibly strong. It's for a lot of good reasons and a lot of optimism, as well as really strong demand around the AI investment cycle. But still, we are moving into a period, sort of moving past earnings season, which has been a tremendously positive catalyst for the markets. And now we are left with kind of the summer lull, trading activity might slow a little bit, and we still have a lot of geopolitical risk on the horizon. So I'm not necessarily calling for a sharp reversion in the market, but I think it makes a lot of sense to see it pause here or even pull back slightly and introduce a little bit more volatility as we move into the summer months.
Okay. Since the Iran war started, the S&P's up just about 10.5%. Really fueled by strong earnings, but you're saying the market's not really pricing in the oil disruption. Right now, looking at oil up over 1%, WTI trading at about $93 a barrel. Of course, it was higher than that. So when do you see the impact of these higher oil prices? What's not priced in? What do you see coming down the line?
The way I see it, I think the market is expecting resolution in the next couple of months, which might be a very fair assumption. In this case, though, I think we have to recognize that there's a very fat left tail, if you will, which is that if it does not go well, we are in a very historic oil supply disruption. And that is going to start to bite on manufacturers as well as consumers. One of the reasons consumers have been able to weather higher oil prices and higher energy prices thus far is because of really strong income tax refund season. We are moving beyond that as well. And I think the market's just kind of got a little bit of a rose.
Okay, what do we got? Got a minute left. All right, minute left.
Recognize that there are some pretty significant downside risks if oil shoots materially higher, and that doesn't mean you get overly defensive in the portfolio. But
I was looking at Iron Condor. I really don't like the strikes that are available. The expected move is only 10%, but they're pricing in looks like they're pricing in much greater. Put side, there's not a whole lot. Let's see. 30 deltas are 10. There's a $1.40 spread in these. Wow. 270 Palo Alto. What do we got? 50 seconds to go. PANW.
SAR, 0 DTE, call
this short-term intermediate time, what should they be doing?
Yeah, and I think you're making a very important distinction, which is that short term we could see a bit of a pullback in the market, but longer term we're still constructive. We are still fully allocated to equities. We are still overweight to growth, picking spots within technology where there's obviously a lot of dispersion. And then in the shorter term, as I said, rebalancing the portfolio is a great way to take a little bit of risk off the table because there has been a lot of drift in some of those parts of the market that have moved significantly. But I would not get overly defensive here. Shorter term, I think we could see some chop, but I would expect it to be pretty...
Okay, that's a wrap, folks. I got a hard stop again. So I'm going to bid you adieu. I hope you have a great evening, everyone. I'm your host, Cousin Eddie, coming to you from theclosingprint.com. It is Tuesday, June the 2nd, at the closing bell, waiting for Palo Alto earnings. Hope you have a great evening. Hope you had a good day, even though it was kind of boring. Take care. We'll see you in the morning. Ciao.